Worker safety as well as mandatory evacuation can potentially affect the company's projects. But here's the clincher. 55% of orders for L&T are at fixed price, and that exposes it to significant impact on account of higher costs or heightened costs. The longer that some of these projects run, the more overruns the company will see. Macquarie is seeing risk to L&T's margins on account of the evolving scenarios in the Gulf region as well. They've already flagged geopolitical and commodities along with AI-led disruption as key risks for L&T. Oil marketing companies is a pretty obvious downside that is indicated, and Sonal was talking about this earlier today. Sonal Verma, she's talking about the fact that the government may look to protect consumers, and from that perspective, more of the impact will be seen from the perspective of the oil marketing companies with margins getting scrimped. So watch out for IOC, BPCL, HPCL at the start of trade. They did take a bit of a tumble on Monday as well.
Yeah, well, certainly looks to be a tough time. I have some positives, if you will.
Actually, I ended up having two positives as well.
Yeah, but it's no surprise here that the aluminum stocks will actually have a good run. So what's happened is Qatar has said that it has halted the production of aluminum after an attack there. And Qatar is the JV between Qatar LNG and Norsk Hydro. The capacity produced about 0.65 MT of aluminum per se, but this brings into account the risks of any kind of production in GCC. So obviously one thing that will happen is that aluminum prices will go up since the deficit widens. Now, just some reports, some brokerage notes suggested that GCC countries together produced about 6.5 MT of aluminum in 2025, about 8% of global primary production. Now, if that is under cloud, even if it actually doesn't halt, even if the whole 8% doesn't halt, but if there is a doubt around it, it brings about this uptick in aluminum. Now, already aluminum prices have rallied a bit. I would reckon some more could happen today, and therefore these stocks would be in focus. Vedanta, Hindalco, Nalco, Rain Industries, the main players and the ancillaries, all of them could actually have a decent move, even on a bad day like this. So watch out for them, kind of bucking the trend, if you will. I thought we're going to do a really nice piece on aviation, so I don't want to take too much from it. But I think the HSBC note has some numbers which are interesting, so I'm just bringing that for that. That they're saying that Middle Eastern conflict creates some additional pressures, etc., and stuff like that. And some of the Indian carriers have had to cancel flights to GCC in Europe. They say 20% of capacity at Indigo, 32% at SpiceJet, and 40% plus at Air India could be impacted. So you know what kind of capacities go to Middle East and Europe and might have impact. We'll talk about this in detail later on, but suffice to say that these stocks, in addition to crude price uptick, might have a bearing. And watch out for the pipe companies, Supreme, Prince, Apollo Pipes, all of them, because apparently in the last 48 hours, PVC prices have been raised twice. Again, an impact of the Middle Eastern conflict. But if PVC prices go up, then in a space where inventory has been depleted, dealers would effectively load up on pipe products, and that might just help the offtake for some of these names. So keep an eye out for these in the session today. 500 points down on the Nifty might mean that nothing will rally, but some of these could, well, buck the trend or fall a lot less.
One stock that could rally, because we saw defense, at least in the initial part of Monday, holding up. Could happen today. And Hindustan Aeronautics, I just want to point out, they've won a 2,901 crore order from the Ministry of Defense. It's a contract for supply of 6 advanced light helicopters, Mk3. Now, remember, these kind of orders don't come overnight because there's a war happening somewhere. The whole process is very long. It's happened around the same time, so the focus will be there. But nevertheless, this was one of the few survivors, in the sense, at least closed in the green in Monday's trade. And now this news has come in. This is part of a larger 5,083 crore procurement package signed by the Ministry of Defense. And the remaining 2,182 crores was awarded to Russia's JSC. So watch out for this as well. Meanwhile, we were talking about the tremors across Asian markets, and South Korea's Kospi has plunged. Trading has temporarily been halted, and it's on track for its worst day since August 2024. So real pain there on Asian markets as well. India will also open pretty weak. What should you do in this market? Are there opportunities? We're coming back with all of that after this very short break.
Some moments in life are lifelong. Some memories are lifelong. Blessings are meant to be lifelong. Trust is also placed lifelong.
Heart lifelong, love lifelong, bond lifelong, memories lifelong.
True love is lifelong, isn't it?
Love lifelong, bond lifelong.
We respect our loved ones lifelong too, don't we? Some relationships stay shining lifelong. Just like Tata Power Solar Roof. Best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI.
Welcome back. You're watching India Market Open and pull up that implied again in case you need to double, triple check it. Yes, we are on track to open 584 points down as per the Nifty implied. Let me go across to Kush Bora, Parag Thakkar joining in today. Today is going to be a tough one because I'm only going to ask you what to buy. Everyone knows things are going to fall. What do you buy? There's no point watching this with shock and awe. We've done that for 4 days. What do we do now is the question. Kush, you want to start?
Let me take on tougher task. Not just what to buy, when to buy.
And should you buy?
When to buy and should you buy. Should you buy? The answer is yes. The more relevant question is definitely what you asked is what to buy. But like I said, the tougher one is when to buy. So couple of points, and I've got a slightly longish commentary today, okay? So see, the humanitarian aspect aside, we've seen this story play out over and over again, especially since Trump took to office from the second time around. World is ending, sky is falling, and then poof, you've got this announcement that just turns everything around, markets especially, and then everything seems fine with the world. So we've seen this. So from that perspective, you should buy the dip. Yes, you should buy this dip. Point two, the phone's been off the hook. I've had messages, I've had calls from clients asking, ek shopping list bata do jo hame buy karna hai is dip mein, and which is very nice. But point three, that is what I have a slight problem with. See, Mr. Market is always 2 steps ahead of us, right? It's a friend who knows aap kya soch rahe ho and then just does some masti to spite you, right? So if everyone is ready with that allocation and with that shopping basket, maybe, just maybe, the markets will inflict a little more pain before they actually rebound. So could this get a little worse before it gets better? Yes, there is all likelihood. Point 4. There is a key technical indicator and a key technical support that comes in at 24,300, and I'm just going to factor for volatility and say 24,000 to 24,300, that zone. It becomes very important. In the recent history, we've not breached that level for a long time, especially for a long period of time, and stayed below that, say for COVID when we spent some time there. So unless this escalates into something much bigger, I think this 24,400, 24,300 zone, even if it is breached, by the way, should not be, Nifty should not be below that for a very long time. So, all of this put together, what are the key takeaways? One, in such a scenario, don't try and play hero and predict the bottom of the market, because in such a scenario, the support levels will fall like 10 pins. So yes, key technical levels matter, but I wouldn't go out and predict the bottom. 2, do you go out and buy the whole hog? No, wait up. Nibble into this, and when do you buy? The answer to that is when the markets rebound. So once you start seeing any kind of de-escalation, even if you think the rebound is going to be fast, you buy when the markets are on the way up. You could well nibble into it so that you don't miss these prices, but you don't go out and buy the whole hog. So that's the long and short of it. That's the summary of what do you buy. What do you buy? We'll come to in just a bit.
No, but just very quickly, why is there a need to buy because the market has fallen X 100 points? Because the extent of the conflict and how long it stays and how long the risk of sentiment stays is not known. You don't necessarily have to go out and buy at the lowest point. Sometimes a wise strategy is to buy it 5% higher, but when the trend is changing. Yeah. So why not do that?
Okay, so like I said in the summary, right? The bulk of the buying should actually come at the rebound. But what happens is, as human tendencies, and in a way because the markets have matured so much, me, Parag Bhai, and a lot of other experts and veterans on the channel have come in and said कि ये dip तो हम buy करेंगे. So there will be a natural tendency कि अगर मेरे पास spare cash है तो ये जो dip आया है इसकी opportunity मैं क्यों miss करूं?
If you have 100 units of spare cash, how much do you deploy today?
20.
Okay, that's clear.
Parag bhai, if 30. You have 30.
Oh, okay. Why? Where is that conviction coming from?
Yes, as Kush said, all this will end. It is not going to continue forever and ever, and oil might go to 100. But even in Russia-Ukraine war, it went up to 130. For it stayed there for 2 days, hardly 2 days.
But the problem for India this time is not just oil. There's crude, then there's gas, there's LNG, then there's the proximity and also the ties with Gulf countries. They're huge export partners for us.
I know.
So all of that is compounding the pain. Russia and Ukraine was still far in that sense.
Yeah,
and
that is true.
It became beneficial for us because we were getting crude at a lower rate.
Correct. No, so basically my shopping list includes, as you know, Bharti Airtel, which is not affected by all this. In fact, it is a tariff, recession, war proof, every proof. Plus, Sunil Mittal has given fantastic that call. If you hear I would say the tone of that call, the transparency with which he is sharing everything with the investors, and the amount of 60,000 crore free cash flow which he is going to generate irrespective of what happens in the world. ARPU is only going to increase in India, right? And Africa is growing at 18-20%. So I would say that, and he's going to increase dividends. So I would say that Bharti Airtel or even IT, I would not shy away from buying IT today. And at the first sign of I would say some cool off, de-escalation, I would say that even the crude users, which I like, for example, Pidilite, for example, HUL, those kind of the stocks will be in my shopping list. Because generally you have to buy these stocks when crude is very high.
Got it.
So that you can buy it at the bottom or close to the bottom.
Got it. Kush, individual stocks that you're looking at today?
Yeah, a fairly predictable list. You've got a metal and a defense name on the buy side and cement on the sell side because it's already been under pressure for a while. So JSW, Steel and BEL are buy calls. 1285, 1305 are your targets, and 1245 is where you keep that stop loss. For BEL, 462, 470 are your targets. 446 is where you keep that stop loss. On the sell side, like I said, cement was already under pressure. Dalmia Bharat on the sell side, 1950, 1925 on the sell are your targets on the downside. 1990 is your stop loss. But like Neeraj rightly said, no trade is also a trade. Trade karna zaruri nahi hai. If because of this volatility, these stocks, if they open, close to the targets or the stop losses, just don't trade. Yeah.
Yeah, and a great disclaimer, by the way, and much needed during these times. So thank you for that, gentlemen. Okay, let's go across to what is arguably the most important topic, right? Energy, oil and gas, and what's happening around that. LPG, so on and so forth as well. And in fact, as Qatar has halted the production of the largest LNG plant in the world following the drone attacks, how does this impact Indian companies and sectors? Now, Somit tracks this very closely. Somit is a complex subject, so I'm going to request you to go at 0.8 your normal speed and tell us what is the implication of all of this.
Well, I'll start off with why Qatar is actually important. Now, if you look at the January 2026 data, the global LNG production numbers stood at, the trade numbers stood at close to 42.7 million metric ton. Now that was what the global trade setup or trade stood at. And if you look at the Qatar export data, that stood at close to 8 MMT, which is nearly 19% of the world LNG trade. And that is the reason why Qatar is quite important, and a production shutdown coming in from Qatar could impact prices globally, and that is what we are seeing. Now, what will be the impact on India? India imports nearly 50% of its LNG consumption, and this is as per the January data that we have got it, and 60% of this comes in from Qatar and UAE, and all of this is expected to get impacted, and the volumes would come down on this front. Now, which are the companies that could get impacted? Firstly, Petronet LNG, because nearly 60% of the volumes that they do for regasification comes to the Dahej LNG terminal, and this comes from Qatar and UAE, and volumes would go down, because of which earnings could get impacted. For GAIL, as volumes would go down, the transmission volumes would also be lower, marketing volumes would also be lower, and that will also impact the earnings for GAIL. For IGL, MGL and Gujarat Gas, that is the city gas distribution companies, gas availability could be an issue. Now, among these three city gas distribution companies, Gujarat Gas could get impacted the most, because they have highest exposure compared to IGL and MGL. And purchasing gas for these companies on spot prices could turn out to be expensive, because they will need to continue to supply gas, and if there is lower gas availability, then expensive gas would be an issue. Now, the most impacted would be the fertilizer companies. All of them, nearly 85% of gas requirement for fertilizer companies is met via imports. Companies like FACT, Coromandel International, Paradip Phosphate, Deepak Fertilizer, all of them stand to get impacted. And this table gives you a clear picture of which are the sectors that get impacted the most. Fertilizer is 29% of gas consumption in India, and nearly 86% of this is met via imports. City gas distribution companies 24%, 43% import dependence. Power is 10% of the gas consumption and only 20% of import dependence. Apart from that, there is refinery, petchem and others, which is close to 5 to 22%, and their import dependence is anywhere between 27 to 85%. But apart from this, LPG is also one segment that could stand to get impacted the most, because the import dependence on LPG is much more. Now, India's LPG consumption stood at close to 31 million metric tons, and imported part was nearly 21 million metric tons. 19% is imported via Strait of Hormuz, and the strait's importance or dependence on India is nearly 90%. So that is one segment that we need to keep an eye out for, because if there is lower LPG then, or the LPG cost increases going forward, then that could be negative for oil marketing companies as well. Now, LPG storage currently in the country is close to around 15 to 20 days. Now, India has option to export or import LPG from US, and there are other markets as well, like Algeria, Norway and Russia. But do remember that the orders need to be placed right now, given the fact that shipment time will also be much more given from other countries at this moment. So LPG could be much more pain point compared to LNG.
Prabal Sen, Vice President Equity Research, ICICI Securities, joining us on the phone line. We'll also be speaking with R.S. Sharma, former ONGC chief, also joining us on the phone line. Prabal, I'm going to come to you first and just get a sense of what are the alternatives that India has right now, with Qatar for the foreseeable future not supplying gas. What are our alternatives? How will they compare in terms of cost of transport?
So first of all, as far as alternatives is concerned, you have to understand, I think Somit put it in perspective. 20% of global LNG liquefaction capacity has been taken offline in one single event. This is not something you can mitigate for. This is not something you can plan for, first of all. So in terms of mitigation strategy, obviously there are other LNG suppliers. India has already been importing about 21 MMSCMD, or about 5.8 million tons from the US in a Henry Hub linked contract, which is what GAIL imports. So obviously there's more, and US is ramping up its LNG capacity all the time. It is going to be the largest. It already is, and it's going to be probably 30-40 million tons more than anybody else in the next couple of years in terms of liquefaction capacity. In terms of costs, what we understand in terms of delivered price, the pricing arrangement that let's say GAIL has with the existing contract with Cheniere, on a base price of around $3.50 of Henry Hub, the price used to come to about $10 on port at India. That included about a $3 margin and about $2.50 of transportation cost. This is definitely almost, I think, 80 cents or about $1 higher than the equivalent transportation cost from the Middle East. But the issue really is whether the volumes are going to be available at short notice. Again, as I think Sumit was mentioning, you can't really switch around your supply chain that quickly, to an event as material as this. So it's going to be basically from the US. I think that's the only credible supplier of LNG. There are, yes, other exporters as well. And Russia, for example, has a lot of capacity that is sitting idle because of sanctions. Now, does this event precipitate some practical decisions from the part of global powers to allow Russian energy exports back onto the market to tide over this crisis? I don't know. Because if that happens, then India has a direct line. India has good, a strong supply network that is already built in. And Russia has been expanding its energy capacity. So that can also become a potential alternative to sort of make up for the 8.5 million ton hit that can happen if, Qatar's shipments continue to be restricted.
A fair point.
So that's, yeah.
No, very fair point, Probal. And we'll just get to the impact as well. But let's welcome in also Mr. R.S. Sharma, who's the former chairman and MD of ONGC. He joins in on this conversation as well. He would have, maybe not as severe, but maybe managed many such things in the past. Mr. Sharma, how bad could it be for select sectors in India? And how easy or practical are some of the switches that we hope some of these companies can indeed make for both LNG, LPG as well as crude?
Firstly, thank you very much for inviting me, and happy Holi to you and all your viewers.
Indeed, sir.
And just to tell you, I have actually seen much more challenging times. 2007. In the beginning of this year, there was a theory catching up very fast, peak oil theory, that world is running out of oil. And in 2007, crude prices had shot up to $155 a barrel. I was heading ONGC that time, and we know how effectively that got managed by the Indian government. And I'll come to the issue of LPG, LNG, but just a macro level view, giving comfort to the viewers that India has seen much more challenging times, and we have been able to effectively manage that. Now also, in the short run I mean, yesterday the petroleum minister has said that we have 50 days stock. That is true. Refineries have 25 days inventory. Then we have underground cavern storage, again for about 18 days. There's some supplies on high seas which have crossed Strait of Hormuz also. So 50 days is effectively it will get managed. And I can tell you this war is not going to last 50 days. It's not like Russia-Ukraine. There is the countries that are affected. China, badly affected, 40% imports coming through Strait of Hormuz. Japan, 90% supplies coming from here. Yesterday's stock market was down 7%. Korea, their capital market was down 7% yesterday. Again, crude supplies coming from here. These exporters also, including Iran, everybody would pray that this ends soon and this embargo gets cleared very soon. And I'm very positive that it will not last that long. In the short run, we have enough things to manage so far as petroleum products are concerned. We are exporting, for example, a third of our petrol. We are exporting 1/4 of diesel. We are exporting half of our ATF gets exported. So we have enough comfort there so far as the petroleum.
No, so that is very reassuring. Sir, that is extremely reassuring. Let me just ask a follow-up. Do we now need to reopen the lines of communication for import of Russian crude?
Absolutely. And yesterday I read in the media that President Putin, suo motu, he has given that comfort that we will be ready to meet India's the supplies. And look at it, this is called diplomacy. India has maintained beautiful diplomacy with the countries, whether with Israel, Russia, and with Iran also we have good relations.
Yes.
So we would like these things to get settled, and I
Sure.
can tell you behind the curtain, India would be playing a very big role to get this conflict resolved. I'm very positive in week or 10 days it will get resolved.
Wow.
America, as it is, does not have this missile stockpile to last more than a week. That has come from Pentagon itself.
Sure, Mr. Sharma, sure. And you know, I want to thank you for such reassuring words at this tough time. Prabal, let me come to you on the cost comparative. So as of this point, do we have an option for Russian crude? Russia has offered, but we have stepped down our imports of Russian crude for other geopolitical reasons. So if we're stuck, say, with Venezuelan crude, very little supplies, and you talked about US gas, all of this is going to cost more to transport right now, isn't it?
Yes, I don't think there's any debate around the fact that energy costs from anywhere other than the Middle East, at least for Indian geographies, are going to be higher costs. But I think India would gladly take that higher cost as long as it ensures continuity and security of supply over the uncertainty that is prevailing right now. Arish Sharma sir, said that, the conflict could be slightly more short-lived. And I think, frankly, if that happens, then all of this discussion is a moot point. The issue really is, if this extends beyond the next month, is when I think a lot of these contingencies start to really play out. Obviously, I think India would, on a government level, try and get into arrangements to secure supply right now rather than later, in terms of, looking at alternate sources. But, whether we lose or rather add around $2 to $3 to freight to alternate crude sources, or about $1 more for transportation of LNG, frankly, that will not be a material consideration at this point of time. I think securing supply would probably be a more important factor, given the realities that we are living with. So the bottom line is that 20-25 days is something that I think we as a country, from what we are seeing and what we are hearing from the companies and the government, I think 25-30 days is something that can be managed. And, we all better hope that the conflict gets resolved, or at least some, stability, comes back the supply chain in that period of time. I think that is the best case scenario as of now.
Thank you so much, Prabal, for speaking with us. Prabal Sen and Arish Sharma putting that picture together quite clearly. One very positive view from Arish Sharma coming in, saying a week maybe and all is done, though Trump right now is saying things will extend. Let me go across to Samit Sarkar, joining us now with what's heard on the street. I'm sure the whispers have become even softer as people are figuring out what to do right now, Samit.
Yes, not much of an action or not much of chatter coming in from dealing rooms, but few stocks that dealers have highlighted. Firstly, it's Vedanta, and we did see a strong up move on Friday late trade as well. There are buy flows coming in on the institutional desk. Now, dealers are indicating that this is one of the best stock in the current market situation, given the fact that commodity prices continue to be on an uptrend, and this will benefit Vedanta at this moment. And then there is a demerger trigger as well that would come in. For L&T, the stock was down in trade given its exposure to the Middle East, and might decline in trade today as well. But a few large investors or large HNIs have started to buy this counter at lower levels, given the fact that over a longer period of time, the stock is much more attractive, and this fall is giving a right opportunity to buy at the current levels. And lastly, when it comes to Shree Cement, Kalyan Jewellers and Sona BLW, dealers indicated that there are some buy flows on the lower levels at the DII desk that we are seeing for these counters. So keep an eye out for them as well.
Okay. Let's look at other sectors which could be impacted a fair bit. And, I'm coming to Parag Thakkar on this. We've spoken about cement, steel, aluminum, all of these which have high energy needs. I mean, we're going beyond the obvious ones, your OMCs, your tire makers, your aircrafts, etc., your airlines, all of them. You're going to see some pain coming in there, and very indiscriminate sort of sell downs today. I mean, look at the implied, it's over 600 points right now.
So basically, steel is a clean buy if it falls, because March, because March quarter results are going to be excellent. Investors will get rewarded very shortly if they buy. If the steel falls, first of all, because some of the raw material prices might become expensive for them also, cooking coal and all. But any big fall in steel, I would say, is a great buying opportunity. Of course, ArcelorMittal was down around 11%, I think. So there might be some follow-up impact on rub-off impact of that, and steel might fall. But if steel falls, it's a no-brainer in my view, like JSW Steel or Tata Steel or JSPLs of the world. Aluminium, as Neeraj was pointing out, there is a shortage coming in. Aluminium prices were also up. So I think aluminium, of course, because I have been riding Hindalco from 650 levels, I would not be a buyer at say 960, 965, but it might continue its rally because aluminium will keep going up. Regarding a negative impact on say cement or OMCs or all those things, cement anyways is not doing that great as a sector right now. So I would avoid buying cement stocks at these prices. Ultratech is the only buy if it falls below say 11,800 or 12,000.
We spoke about Larsen & Toubro, and in fact that is going to be a significant impact. Already dropped over 5% on Monday, potential for significant fall today as well. 55% fixed cost projects that they have. So there is a financial impact. So basically,
luckily we sold L&T because there was at least some sense of this US-Iran coming up, so we sold L&T to raise some cash at a higher level. But definitely from long-term perspective, from the intent of management perspective to create shareholders value, I think below 3,800 one can start accumulating L&T.
Okay, L&T. Actually buy calls today on Shadowfax, on Grow, as well as some of the other players that are coming in. So clearly there is a focus on trying to find, even Lenskart has another GS, Goldman Sachs has initiated a buy with a target price of 635. So I think some of these domestic stories will also be in focus. But as we get into the pre-open session, what are the sectors you should watch out for today? For one, West Asian geopolitical tensions are keeping crude volatile. ONGC, Oil India and all OMCs will be in focus this morning as the first rates hit. Qatar's LNG plant has shut down. Watch out for GAIL, Petronet LNG, city gas distributors, Gujarat Gas primarily amongst them, and fertilizer companies will also see some pain. Precious metals have turned fairly volatile. Hindustan Zinc and Gold Finance companies should be watched out for. I'm going to get a view on gold because gold prices actually dipped overnight as the dollar is getting stronger. But is that a play which can reverse? Higher revenue exposure from Gulf countries. These are some companies. L&T, we were speaking about VATech, Waba, KRBL, BLS International. Watch out for some of these. Spike in crude prices, Interglobe Aviation, paint stocks, Asian Paints, etc. Tire stocks will all see some amount of pain, and supply chain pricing shock. Candidates, watch out for Vishnu Chemicals, Aarti Industries, Vinati Organics, Atul and the likes. So you are going to see a lot of companies in pain this morning. Chandan Taparia joining in. He's head technical and derivatives research at MOFSL. Chandan, very good morning to you. Is there a prediction on the Nifty you would like to make?
Good morning. Thanks for having me. So, season's greeting, but yes, due to the geopolitical concern,
yes, no, absolutely. Happy Holi to everyone celebrating today. People in Maharashtra have done some celebrations yesterday, but yes, season's greetings to you too, Chandan.
Yeah, so looking at the market, it seems it's more of the red color. Looking at the geopolitical concern, index started to form the lower top, lower bottom. However, on last trading session, it respected budget day low, but I believe now that level is going to be violated due to the geopolitical concern. So I believe till Nifty remains below 25,000, we need to either be in sideline or utilize the sell on bounce stance. On downside, the next meaningful level will be around 24,200 to 24,000 marks. So 24,200 to 24,000 we need to keep in mind. But as of now, till the Nifty remains below 200 EMA or till 25,000 is not surpassed decisively, better to wait and watch mode kind of scenario. Looking at the trading ideas, First trade is buy on ONGC. We believe that crude has given a breakout, and the surge in the crude might give the positive momentum in the oil exploration company. ONGC witnessed good recovery, so with support of 275, one can look for an upside target towards 296, 300. Negative on the IT name, Coforge is one of the weak counter, has been making lower top, lower bottom. So with the hurdle of 1190, one can sell for the downside target towards 1110 to 1100 levels.
Yeah, everything is getting clobbered. Only a few pockets standing out. Chandan, how strong is the aluminum pocket looking? Okay, guys.
Okay, so let me ask the question for Neeraj. He was asking about the aluminium pocket, and of course, he highlighted this in his trade setup in the 3 stocks as well, the latest update coming through. So, if you were to play that aluminium basket, Chandan, how would you play it?
So we have positive view on 2 themes. First, crude. Second, precious metal. Because the equity is under pressure, so definitely we'll need to look at the most of the precious metal, whether we talk about the gold, silver, aluminium, zinc, copper, and we have positive view on all these names, and Nifty metal can do well. So positive stance on the national aluminium, one of the strongest counter. However, in last couple of days it witnessed some corrective and consolidative move, but holding well above its 50-day exponential moving average. Even on the last trading session, it witnessed support near 340, 341, witnessed the positive move towards 362. So one can continue to hold the long position with support of 350, and this counter can head towards 380, 385 kind of level. Apart from that, one can also look at the counter like Hindustan Copper with the support of 560, it can head towards 600 kind of level. So Hindustan Copper, National Aluminium, and gold and silver could be positive for day or week as well.
Yeah, so some green shoots, if you will, not necessarily you should trade them. Please, viewers, remember, if you are indeed not an expert trader, our experts are, of course, recommending it based on their charts and derivative and fundamental positions. You need to be a bit careful about doing these things because it could go on the wrong note and it might not turn out to be a good experience. So please be careful. These are slightly unusual times and not quite trending times. So please be mindful of that. Okay, before we move any further with some other conversations, let me get in Sharad to talk about, the key brokerage call of the day today. Morgan Stanley has a bullish stance here. May not necessarily play out today, but would love to hear the argument. Sharad?
Well, thanks a lot for that, Neeraj. And last week at KYC also we had picked up this company, giving 5 out of it. And now Morgan Stanley has come out of its report initiating an overweight with a target price of 180 rupees per share. They have stated that the company is executing well and it's taking an advantage of its increasingly supportive industry structure, and the company itself is focusing on niche segments. This augurs well for the margins also going ahead. The business is relatively less capital intensive versus the peer, and interestingly there is a superior cash flow yield also coming in. The overweight thesis which is coming in is because of the improving execution from the company and the industry, and overall the company remains profitable, especially while working in the niche areas. So that's why Morgan Stanley is bullish on shadow facts.
Thanks a lot for that, Sharad. I don't know if too much of optimism around anything today. Keep in mind that the currency is really cracked as well. And I think this is broadly a dollar strength. I mean, you look at USD, JPY, USD, CHF, the dollar is strengthened against most currencies because, in effect, if there is one nation which is truly energy unimpacted, it is the US, because they really are insulated from all these energy moves here and there, and which is that the dollar strengthened against most major currencies, and no surprise that the INR2 has fallen to 92.08 currently. Anindya Banerjee, SVP Currency and Commodity Research at Kotak Securities with us. Anindya, maybe a larger play of the dollar strength, but this is not great news any which ways.
Very good morning, and thank you for having me. Yes, actually it's kind of double punch, because on one hand we have this Strait of Hormuz being blocked and the oil prices are rising. Yes, the oil prices have not risen to levels which will set the alarm bells ringing. It's currently around 82, 83. But what's actually happening is, if you look at the cross-currency basis swaps, which basically gives us an indication about the dollar funding conditions, those are actually going deeply into negative, which means people are paying premium to borrow dollars in the offshore market. So that is what is hitting the currencies, including the Indian rupee.
Anindya, but the moot point therefore is, where do we head from here? What are the lows that could be plumbed? And we were talking about the trade deal having benefited the rupee on the upside. We were yet to see the full impact of that. Is that out the window now?
Yes, because as long as the Straits of Hormuz is blocked, because a lot of maneuvers have happened over the last 12 hours. Trump has said that he is looking to at least start the energy flows through the Straits. Right now, we had a statement from Macron in the same direction. But as long as the barrels are not moving, the gas is not moving, this danger will continue. And it will continue to pressurize the rupee, which means RBI has to step in aggressively and supply the dollars, because it's a dollar shortage which is creating this.
Rightly, also as has pointed out, it's dollar strengthening rather than the rupee weakening. But how low can we go if things continue as is, Anindya? What are the levels you're seeing for the rupee?
The 92 quarter is a level which we are watching. If it starts to sustain above that, then the next level will be around 93 or 93 half. But it totally depends on how far the oil will escalate, because if oil gets to $100, then we could see even the levels of 95. Okay.
93 next if we don't sustain here. 95 if crude moves to 100. Anindya, thank you so much for joining in. For that quick take this morning. Kuch Vora, Parag Thakkar, Chandan Taparia with us this morning. And first rates, the pre-open rates have also settled. Let's take a look at what is the extent of the carnage actually. About 500 points down on the Nifty is what I'm seeing after the pre-open session. It's unlikely you will see too much reprieve here. Relatively, perhaps, IT is looking good, but it's private banks that seem to have taken the knock in this pre-open session. Any buy calls at lower levels on any stocks, at least from BFSI, Chandan?
Yeah, I'll focus on PSU Bank. I think this is one of the strongest counter. However, as the broader market is correcting, we might see a correction in the most of the banking name, but I believe SBI could be one of the strongest name, which really do well in last couple of months. Major trend is positive. So any decline towards 1130, 1150 could be bought with support of 1100, and positional we have target towards 1200 to 1235. So SBI and selective PSU banks could be in focus for buy on decline or bargain buying in the recent market corrective move.
Quick view to Parag Bhai, because obviously from the portfolio standpoint, and we've been talking about when to buy, why to buy, all of those things. But when do you sell? Because in certain pockets, you will have seen significant capital losses. As we stand where at the start of March, you have the ability to, in certain cases, book long-term capital losses as an individual, set that off against capital gains over the next 8 years. Should you take that call today?
So basically, we have already done that in our portfolio. We have already done that. That's why I sold one of the mid-cap IT stock at a loss also. But at today's prices, I will not do that. Today's, in fact, HDFC Bank and ICICI Bank both I saw are opening at 3% below, right?
Yeah,
These are great buying, thumping the table buys for me.
Yeah.
Like whatever happens to oil.
What are you saying?
Whatever happens to oil, it goes to 100. It's okay. Banks are not going. So basic, and whatever feedback I'm getting, I think HDFC Bank is raising good deposits, and they'll outgrow the system in terms of deposits, and so they will be able to match their guidance of system level growth in FY26 and above system level growth in FY27. I remain confident of it. They are large holdings. I have not sold a single share, and I'll buy on dips today.
And ICICI Bank as well?
Both.
Okay.
What about PSU banks?
So PSU banks, in my view, the amount of underperformance of HDFC and ICICI versus SBI. SBI was always my favorite. It is always my favorite. But right now, the underperformance of HDFC and ICICI versus SBI is beyond imagination. So right now, my tilt is clearly towards HDFC and ICICI. But I would like to put a disclaimer: these are not trading bets.
Sure.
As Dheeraj rightly pointed out, today is a very volatile day. So you should only, if you are institutional investor, you are going to phase it out on every dip, then only you should pay attention to what I am saying.
Yeah, no, clearly that's, I mean, this is not a trader's market in that sense in any case, but is there an opportunity to create, market gives you few opportunities to create wealth in a longer term.
Absolutely.
So that's the idea. Are you getting any of those opportunities right now? HDFC, ICICI buys, I don't know, what are you looking at on charts right now? Because it's all
all red, a sea of red. The holy market red color say he khel raha. That's the only one that's allowed right now. No, but I agree with Chandan, in the fact that, we've maintained that PSU banks were overheated. थोड़ा सा correction आना चाहिए, थोड़ा सा profit booking आना चाहिए. But on declines, they become very, attractive, very interesting buys. SBI, of course, stands out. Then you've got the likes of Canara Bank and PNB. Also, as a part of, like a theory or principle or practice, what I, at least what I do is, stocks that have been doing well before a big event knocks the wind out of them is what you should focus on, because then you get those stocks at good prices and then they move up again. PSU banks most certainly fall in that bracket. So I will definitely have, that on my radar as and when the dust settles. HDFC and ICICI, we've again been very bullish on this. My concern with HDFC is that it's just not moved and there has been volumes on the higher side. So do you accumulate these stocks, from a medium to a long-term perspective at these levels? Most certainly. Are they trading buys? Not really. I still prefer PSUs for a momentum trade. Again, on declines. Maybe not today, maybe not, at this point. But yeah, once the things settle, PSU banks make a very clear buy.
About a minute left for the start of trade. Chandan, last quick views on individual counters that you're looking at that might look a little bit okay today.
Yeah, so again, we have to be very specific and we need to keep in mind about volatility. India VIX can head towards 20 marks. If I have to pick one counter, definitely that will be ONGC. Already recommended with support of 275 for an upside target towards 296. If opens positive, after a small dip, one can accumulate also.
Keep in mind that small dip, don't buy ONGC 2% higher, Chandan is saying. The targets are about 295. Keep that in mind. But oil is, even if oil has cooled off from the highs, it is still flared up, and therefore that's constructive for oil upstream companies. Keep an eye out for Oil India as well out there. But very limited positive sentiment right now. So bear that in mind. Let's see how the day progresses. Do we actually see further downticks in line with what's happening to some of the Asian markets? Or will we see a semblance of some stability 500 points lower? I think that remains a key question. 2% points down on open, 421 odd points or thereabouts. Banks about 1.6% lower. Mid caps 1.5%. Small caps would be maybe 2.5% or 3%. Oh no, just 1.5%. Not bad really. But now the Sensex is down a couple of percentage points. So it kind of stays around this 450 to 500 point down tick. Let's get the heat map up on the screen and show you the quantum of red really. Well, surprising fair degree of green, and IT is actually not doing too badly. INFI and TCS standing out there. The standout more, of course, is ONGC and 2.5% higher already now. I reckon Oil India too could be doing okay. BEL about 1.4%. Coal India, a lot of people have turned constructive on Coal India in a couple of brokerage notes that I read this morning. So keep an eye out for that. HCL Tech is not doing badly either. It's in the red, but just about 0.18%. But a defensive bent to the market this morning. ONGC cools off as we speak. What's correcting? LNT, another 6.5%. Exposure to the Middle East, a lot of contracts from the Middle East, clearly facing the brunt. Indigo 4% lower as well. 20% of its capacity in Europe and Middle Eastern flights, and plus oil price uptake also impacts it. Adani Ports, naturally, the quantum of trade coming under question. Maybe that's why this one is down 3.5. Shriram Finance 3.5. JSW Steel about 3.5. HDFC Bank is down 3%. Right now the market is not distinguishing. Reliance too is down about 3%. So those are the two heavyweights that are putting some real pressure on the indices. Now, about 2% lower, and volatility another 14% higher. So tough start.
Tough start. Infosys an unlikely winner in today's trade, and some of the other tech plays are also coming up. Maybe that AI threat not looking as bad as bombing in some of your sites in relative terms. I mean, I don't know how you would look at this market. India VIX, let's pull up the India VIX right now, another 15% up. Really, that's an important factor to look at right now when markets get so uncertain. I also want to look at the small cap and mid cap indices as well. Yeah, there you have the India VIX 15% up right now. The mid cap index about 2% down in trade. The small cap also another 267 points down. All of this is looking fairly painful. You're already at the lowest point of the day. Let's see if there's a recovery in the next couple of minutes, if at all. Let's pull up the sectoral heat map. I think the defense pack is the only one you see in the green, if at all. Oh, it's IT. Nifty IT. showing a smart move. India Defence also seeing a bit of a pain. Nifty IT nearly 0.5% up right now. The lowest or the biggest hit on infra, this could be L&T and other such companies. Auto companies also seeing some pain. And for a variety of reasons. You have crude prices, you have the choke point of your parts coming in, very highly import dependent sector as well. Nifty Realty also seeing pain. It's across the board really. I want to pull up the constituents of the Nifty IT. Let's see some of the stocks and how they're doing, because this seems to be the contrarian play of the day. Infosys about 1.5% up. HCL Tech, actually it's just Infosys which is really doing well. Everything else is quite soft, but at least in the green in relative terms. Let's pull up our Middle East war watch list, because that's really the only way to look at the markets today. ONGC, of course, because of crude prices, higher crude prices, Oil India as well, up in the green, that's expected. Hindustan Aeronautics, BEL, some of those defense plays. I saw Paras Defense also doing pretty well. HAL, though, about % down. Deep Industries, Jindal Drilling, some of these could, see, at least Jindal Drilling could see a sentimental positive. Deep Industries a negative at this point. Shipping, GE Shipping, Shipping Corporation of India will also be impacted, although their freight trades go up, but that helps them when they can actually move. Can any shipping company risk going through the Strait of Hormuz when that could be the next theatre of war, with Iran saying what it is and the US saying what it is? GAIL, Petronet, LNG. Let's look at those as well. Those will be the ones with a massive impact. Petronet LNG has a huge deal with Qatar, and Qatar has said we are not open for business right now till this doesn't settle down. City gas distributors, fertilizer companies will all see some pain, and you're seeing that across the board. Oil marketing companies also, and paint companies, tire companies, I mean across the board you're going to see a lot of pain coming in. I don't know if it's any sense to read out the entire laundry list, because everything's in the red. Anything you're spotting in the green? Except for IT.
There are about 30 stocks from the Nifty 500 that are currently in the green, and some very odd names here, I will say. But there are some nice ones as well. Some that we had projected or predicted. Zentech is up about 3% from the defense pack, and so therefore a few of these names stand out. They did stand out on Monday as well, when the rest of the market was falling. You have Natco Pharma, you have Solar Industries, Coal India is up and about. Swiggy, interestingly, markets are down, you will probably order it. Who knows? It's up and about in trade today. Oil India, we were speaking about ONGC and the fact that it's up and about. Oil India also gaining about 2.2%. The one that I found a little odd though is Tejas Network, because if you look at the last few trading sessions, and I'm looking at the last 3 in particular, not today, 11% gains on Monday, 17.5% on Friday, 16.76% on Thursday. The question is, some of you will be looking at this one counter that is doing particularly well today, up 12%, and wondering whether to ride that. Kush, quickly, do you want to say something on this?
It's just a hold. It's already overheated, and if you've been holding on to this for a very long time, you're probably just recovering, a hint of the losses that you've been incurring, right? So it's just a recovery, a hold more so.
Okay, quick view on Larsen and Toubro. You spoke about 3,800. Yeah, it did slip below that briefly, but it's holding at 38.18. Would you look to nibble in right now at this moment?
Yeah, you can nibble in, but I would want more clarity on this Middle East thing, because it's a very large part of their business. So some payments might get delayed, some execution might get delayed, but I think I would want more clarity from company itself.
Okay. Okay, so point well made. And Chandan, last point. On the fundamentals, Parag Bhai has spoken about steel companies and the fact that if there is a crack, he would look to add. Does that also hold true for the technicals? Because you have Steel Authority of India Limited, you have Tata Steel, both cracking over 4% at this moment.
Yeah, so I'll be more positive on the aluminum, zinc and copper name than steel. If I have to first recommend the first idea from this metal space, I'll focus on National Aluminum. With the rising support of now 353, it can head towards 385 kind of level. Talking about Steel Authority and Tata Steel, I believe major trend is positive, but due to the weakness in the broader indices, some profit booking could be there. If I look at the Tata Steel, it has measured support near 195, 192. So I think near to those level one can look for accumulation, but one need to keep in mind that VIX is at higher level. Most of the indices are in on negative side, whether we talk about the headlines or sectorial. So better to wait, let them stable, and be specific even in the metal basket also.
Thank you so much, Chandan, Kush, and Parag for joining in today. We end this leg of the conversation on India Market Open, but all the action continues. Dinshaw Irani joining in now, CEO of Helios Capital. Dinshaw, very good morning to you. Are you in a holy mood?
No, not really. I mean, the market is though. You can see only red out there.
No, I was asking because I was wondering for Bombay Walas, you might as well have played 2 days of Holi instead of looked at a market like this.
Right. Actually, all across the country, my offices are shut. Bombay is the only one which is working today.
Yeah. What will you do in this market right now? Are you looking at opportunities to nibble, or this is, this too much volatility to take a call and do anything but sit on the sidelines?
So basically, Tamanna, the fact is this war came out of the blue. Nobody was expecting it to start so early. I think only Grok predicted 28th as a date. Otherwise, everyone else was on the mid of March. As all the other AI models were on the mid of March. But the fact is that I think it was rushed into. And frankly, I mean, when you rush into a war without any concrete strategy, things can pan out to be a bit more painful and longer. I think that's where the problem arises. Had it been a short war, which was earlier thought to be, but as things are panning out, it seems it's going to be a stressed out version. Hopefully not as long as what Russia and Ukraine are into. But the fact is that this may not be weeks, maybe a month or so as such, and that is going to be painful for the market. So I would rather say that if you're looking at buying something, stay on the sidelines. And in fact, I mentioned in one of the channels earlier also that we have some cash, but we're not deploying it in a rush. We're waiting for some clarity on this front, because if things pan out to be longer, it can be very impactful for our trade, international trade, our currency, and obviously our consumption also, because I don't know how long the OMCs will be able to hold out on these prices as such, and may just take a hike later and impact the consumption too at some point in time.
Well put, Dinshaw. Morning, Alex here. I'm just wondering, so therefore, am I right in assuming that a month is the worst case scenario, or is it something that beyond? I know that it's hard to predict, but at this moment, if you're looking at your portfolio, if you're looking at certain suppositions, certain expectations that you will have to build in, is that something that is the worst case scenario, or is there something worse that you're already penciling in?
No, so actually I'm not a war strategist, but the fact is that we were rather played by the day and see how things are panning out. Fortunately for us, India's hung on for a while. I mean, it's done a phenomenal job in this market per se, and I think that's because we've been hammered for a while now. I'm talking about not only CY25, where we were probably the 20th or 24 emerging markets in rankings, but also Jan, we were the 24th not 23 out of 24th. The 24th was Indonesia, which is being thrown out of MSCI EM space and going to frontier markets. Otherwise, we've been doing very badly. But the fact is that fortunately, we're not in a Korea, which is down 20% in the last couple of days as such. So I think that way we've done fairly well. And we are outperforming the EM index, which is not saying much. But the fact is that we have done fairly well. But as I said, that I would rather play it by the day than take a call on what's going to happen. Things turn around in the fog of war, things turn around pretty fast. Maybe Iran will come down and say, okay, I'm ready for negotiations. Then that will be a turning point, if you will. So I think we'll probably wait it out and see how it works. I'm not taking a call on whether it's going to last out a month or weeks or a couple of months. No way.
That is fair. That is fair. In the stocks that you're looking at, in the companies that you hold, fundamentally, are they relatively insulated? Is that something that you worry about? And two, if you're looking at the rupee and the fact that it is at 92.15 right now, already the proposition for foreign money coming in was a little bleak, considering the way that the currency has moved. Is that something that you will have to push likely further down the road?
So actually, you're right, because I think the INR has been impacted the most because we are totally import dependent in terms of energy needs. We are totally import dependent, and that I think is playing upon the rupee per se. Almost 50% of our flows come from the Strait of Hormuz, which has been shut. Fortunately, there have been some sound bites that the POTUS has given out a warning to Iran, and he's going to send his warships in and stuff like that. But I think that's a longer term outlook at some later point in time. So that will obviously impact the flows. We were hoping that with this kind of underperformance that India had seen earlier, and with growth rates coming back in, and we were in the nascent stage of this growth, I think this war could have happened at a more worse time for India, because we were just picking up on growth, and now things are coming to a standstill in terms of not growth, but in terms of the money flows. I think that's where the impact will be felt. I don't think the FIs will be in a rush to come across to emerging markets right now.
Yeah, well, that is true. Dinshaw, could it be, good morning, Neeraj here, could it be that because of all of the factors that we've spoken about, and this current conflict puts that India not having AI trade also in the back burner, or whether India is a anti-AI trade also in the back burner, because right now conflict takes center stage. Could we drift lower if the conflict continues? It may be irrationally lower, it may be temporarily lower, and we may bounce back. But could that happen? Or do you believe these are the valuations where we could sustain?
So, Neeraj, I believe that we are still, at this point in time, we think that we are irrationally lower as compared to what the world is seeing as such. Frankly, the amount of cash lying with the domestic mutual funds, we can very well deploy that and wait for things to work out at some point in time. But our feel is that, hand on heart, we have very limited cash. But frankly, if I had more cash with for disposal as such, I would be deploying it now. Our cash is 1.5 to 2% across our portfolios, which we just want to conserve for a bit. Maybe there'll be some trades coming through, but I don't think we'll hang on to that cash much longer, whatever little we have. But if I had more, I would have been starting to deploy right now and waiting for this. Because frankly, if you look at our portfolio, I'm talking about Helios in particular, we have enough stocks to play out existing stocks where we want to, we see some irrational pricing happening. I think that's where we would be coming from.
Got it. Dinshaw, sorry, can I ask you, though I'm sure we can do that study ourselves, but since we have you, what's the rough quantum of cash that might be the Indian mutual fund industry sitting on, if you have a number there? If you don't, excuse me.
Well, no, I don't have the number there, but the last I saw, it was like close to some 1,20,000-30,000 crores as such, lying as cash with the mutual funds.
Okay, fair call. Today, for example, Dinshaw, IT is kind of doing okay, aluminum stocks are doing okay, some pipe companies may be doing okay because of PVC price upticks. But what would be the first ports of call? Let's assume that the conflict ends in 7, 14, 21 days, the earlier the better. For world peace. But if the conflict were to show signs of ending, what would be the first ports of call?
Definitely not the stocks that you mentioned. The sectors that you mentioned. By the way, we've been negative IT for a while. Over a year now. And in fact, and we've got very strong views out here. In fact, I was attending the Kotak conference last week, and Mr. Uday Kotak started the conference by saying that IT industry is in the Mahesh phase. Brahma, Vishnu, Mahesh is the destroyer. And that was very ironical. It really has resonated with me because actually we've been saying that for a while. And the fact is that when the Mahesh phase hits you, you need to reinvent yourself. And that is precisely where the pushback is from the sector. They're still going on into these number of people growth phase as such, and not reinventing. They need to reinvent. And that's when the real reinvention will happen for the industry. And it will be a painful one, mind you. So that's why we're staying away from that sector. Aluminum, you talked about, Oman has shut production. And that's why Qatar has shut production. And that's why aluminum prices, aluminum is moving up as such. But frankly, the day the war ends, this is going to come off. So I don't think this war is going to last long anyways. As I said, couple of weeks, maybe a month. So that way. So we're not taking a call here. What we're doing, Neeraj, is we're looking at our own portfolio, which is mainly consumption-driven portfolio, domestic consumption-driven portfolio. There are hardly any external-facing sectors where we have been bullish, like Larsen & Toubro. I can share that name because it's in the portfolio. And that's suffered a bit because bulk of their flows come from, I mean, not bulk, rather 30-odd%, a third of their revenues flow in from the Gulf region. And that's why it's suffering right now. But as I said, once things turn around, so maybe these are the kind of sectors you want to look at, but you've got to take a call whether the war is going to last long or not. So that's where we are basically adding Neeraj.
Yeah, it's a good answer. Dinshaw, always a pleasure speaking with you, and season's greetings once again to you, to the family, to the team as well.
Thank you, and to your US too.
Absolutely. All right, we're continuing to track the implications of the ongoing war in the Middle East with the current situation. And we've given you all of the latest updates. The impact for Indian ship owners has also been quite significant. They've raised urgent concerns over the escalating situation and the escalation in threat to supply chains. The Indian government is in fact bracing for geopolitical impact as well. We've got Rishabh joining in to tell you about what the latest is here. Rishabh, morning, and what can you tell us?
Right, what we're seeing is a proactive government response to the escalating situation in the Middle East. What we're seeing is that a meeting has been chaired by the shipping minister, Sarbananda Sonowal. This is around, of course, the maritime security in the Persian Gulf. What has been activated by the shipping ministry is enhanced monitoring of all sorts of vessels, especially Indian flagged vessels in the Gulf region. A quick response team has been set up, real-time tracking of Indian ships and 24/7 monitoring of to sort of safeguard Indian vessels. All of that has been activated by the Indian shipping ministry. What we're seeing is that there are now mandatory reporting protocols that have been issued for vessels owners as well as managers. And what we're seeing is that there is close coordination that is being done by between Indian Navy, the MEA, and also, of course, the various other maritime security bodies. So an essential sort of coming together of Indian agencies also to protect the interests of Indian seafarers.
Okay, thank you for that, Rishabh. Just to understand the situation better, I'm joined by Anil Devli, CEO of Indian National Ship Owners Association. Mr. Devli, very good morning to you, and thank you for giving us time and speaking to us. Can you explain to us the situation as is? There has been overnight assurance of sorts from the US president saying that we will ensure that if required, the US military establishment will help ships go through. But as of this moment, is it safe to say that all traffic is stalled in the Strait of Hormuz?
Yes, good morning. It is absolutely correct to say that all traffic is stalled. There are certain ships which are on the northern side of the strait and vessels which are on the southern side towards Oman. The line that we are now drawing is 59 degrees east. Anything on north of that is in the high risk area. The vessels, as far as Indian ships are concerned, there are now 37 ships in the region. Out of these, I would say close to about 25 or 26 seem to be in laden condition. They have loaded crude oil because we go into load crude oil. There are vessels which have LPG, and all of these vessels are currently floating around.
Yeah. Just one second, Mr. Devli. Let me just explain to viewers what they're seeing right now. You are currently seeing a live satellite real-time map of what is happening in that strait. And those little green and red dots are the vessels that are stuck around. Clearly, no movement on the passage at all. You mentioned, sir, that there are 37 Indian carriers or Indian ships.
Indian flagships. That
Indian
is ships owned by Indian companies.
Okay. And so if they're stuck, how do they get here? What does that mean? How many people are on board? How will they pass through? Can they be accorded safe passage? Are they safe?
So many questions. all that we are grappling with. So to try and answer serially, we all get in through the straits and go in all the way up until Kuwait. If you look at the map, you go all the way up until Kuwait to load. So there are various ports there that we load. Just to give you, we go into Kuwait, we go into Saudi Arabia, we go into Iraq on this side, Basra, load in United Emirates, and even sometimes down into Fujairah. So the vessels go in for the purpose of loading crude oil and LPG. And when you come back, you have to come back. The strait is a two-way strait, and there isn't too much of depth available on the eastern side. So therefore, you have to, when going in and coming out, you have to be closer to Iran as you go in and you come back. Now that we are in, we have to come out, and right now there are too many imponderables, and therefore we have been told by the government, and it's safe navigation practice also, to float where you are and wait for things to happen. Coming back to how would we come out, at the meeting that was chaired yesterday, we have requested the minister that we will need the Indian Navy to help escort us out. This is similar to the situation we've faced in the days of the Red Sea crisis and with the Somalia pirates. So we would be most comfortable if our own Navy deployed their vessels, and then, in a caravan, usually these vessels sail out. As to answer when this will happen, my guess is as good as yours. But I think we will be guided largely by what the Indian Navy says to us. We are all concerned about the safety of our assets and our people. And to answer your question, it is estimated that there are close to about 119 to 120 seafarers who are on board Indian flagships in that area. And all of us are concerned. We are monitoring the situation almost half an hour. We have situation rooms opened up in our offices, and we are in touch with the more important part is being in touch with the families of the seafarers, because mercifully we are sitting on this side here in the office, but the important part is to ensure that our seafarers are safe and the anxiety of their families is taken care of.
Mr. Devli, there was a post by US President Donald Trump that he is asking the US insurance agency, or whatever you may call it, to give insurance. And we had heard that insurance was one of the detractors in addition to all that is happening. Now, and of course, he's also mentioned in that post that he'll ask the US Army or Navy to also help in the passage of ships through the Strait of Hormuz. Now, again, as you said, we don't know when it will happen. We don't know when the Indian Navy also steps in. But if this were to happen in the next 2 or 3 days, could that help meaningfully restart passage of crude oil tankers or crude oil carriers?
Well, if the latter happens, then it will meaningfully change.
By latter, you mean, sir?
Meaning the passage of the vessels under army supervision or naval supervision of the powers that be. But if you look at the first part of your question, that if the insurance is put in, the insurance, incidentally, I must clarify here for your information, is the insurance has not been taken away. What happens is that the insurance companies, because a war-like situation develops, they come back and say, now within this area, whatever standard insurance you have is now not valid, and you need an additional war risk premium. So starting today, the war risk premium would apply to ships which are going to be in that region, and the cost is dramatically going to increase. So yes, to answer your question, will that help? In part, it will help, but there is currently only one American, what we call a protection and indemnity company that provides these services. Now, I don't know whether President Trump is going to be able to prevail on the other. There are 12 large international group of P&I clubs who provide this kind of cover. And these are all Europeans based in Europe, Brussels, and London. So I don't know whether he'll be able to influence them. But
Mr. Devli, just trying to understand, and thanks so much for that clarification. What we're trying to also understand is if this maritime trade is set to continue, first and foremost, this insurance premium going up. Can you help us quantify that and tell us how much of a cost increase it is?
Yeah. So illustratively, let us say if a vessel, I'm giving you top of the head figures because we still have to get details from our insurers. But what we understand informally is that vessels which are today paying a cover of about 40 lakhs of rupees a month would get pushed up to about 1 crore. So it would go up by at least 2 times, if not more.
Okay, and this is so therefore this is only in that Gulf of Hormuz region, right?
Yeah. So if you enter that region, as I said, 59 east, and I don't know what are the coordinates on the other side, but it would be all the way until Kuwait. So if you are entering that region, those premiums would apply.
So therefore, let me ask a follow-up question then. And you've already described very ably the various. So we're talking about the Suez Canal on one end. We're talking about the Gulf of Hormuz north of that. Right?
Yes, Suez Canal is on this side, sir.
Yeah, it's on the. So therefore, what I'm trying to get is what is the alternative route, and is this going to be something that is feasible to take up in the very near term? One would assume you would have to go around the Cape.
Yeah, so if you are using the Suez and therefore you are loading cargo on this side of Saudi Arabia or Yemen, or you're loading Egypt, etc., then you can pass via the Suez Canal. But if you have to load cargo in Kuwait or on this side of Saudi Arabia, where Ras Tanura and all these large terminals are, then you have, and I'm afraid you're one way in, same way out. It's like a canyon. You go in and then you have to take literally a U-turn and come back. So there is no alternative to that strait unless there is peace there and there is enough military to ensure that vessels don't get shot at. What you talk about the Cape of Good Hope, that is done by us, because if you cannot transit the Suez Canal, thanks to problems with the Houthi as we had them in the Red Sea, then you're absolutely correct. You can go down all the way down the Cape of Good Hope and go into Africa and then sail out into Mediterranean or into Europe, wherever you have to.
Just trying to understand, Mr. Devli, as of now, the question of freight rates may become moot because nothing is moving. But having said that, are you expecting a huge spike in freight rates?
Yes, when we see market today and the offers that ship owners are getting, the prices freight rates have definitely zoomed up. But nobody is accepting a contract. Nobody is taking up anything because it's all in the air. Somebody will say, Anil, will you go there? I will say, unless it's safe, I will not go there. So regardless of the price that is given, today it doesn't matter. But yes, there are today offers. And we can see that even the freight rates have considerably gone up. There are some reports that VLCCs are commanding close to 500,000, and these are all astronomical figures. But again, I'm saying they are all on the top. We don't know of any contracts. Obviously, no ship owner is going to get into a contract on this at this stage.
Mr. Devli, just to get my understanding straight, to your mind, having adequate insurance is not going to be the kicker. As things stand, it needs naval protection from India, US, or whoever else for ships to pass. Insurance will not do it, right?
Yes. So I must clarify that insurance is necessary, but is not the single thing that we need. Yeah, it is necessary. Without an insurance, we obviously won't walk in.
Of course, yeah.
But for us to start moving, we need naval supervision. We need hand-holding from either the Indian Navy or the Israelis or the Americans or the Iranians for that matter.
Wow.
Just a quick question, Mr. Devli. In this situation, one would assume that costs are being transferred completely. Is that the right assumption to the people that you are working with?
At this stage, our vessels' freight rates are fixed. At least all of these vessels, which I mentioned, these 37 ships. So those freight rates will not change. But any new contracts that start from tomorrow or day after, those will see higher freight charges being levied.
Just a quick question, and you've very ably described how the insurance is going to go up. In your estimation, back of the envelope, rough calculation as things stand right now, what is the overall cost increase that it will take for maritime trade?
It's very difficult to give you a figure, but from going by generalities, I think you can take it that freight rates will go up at least 3 times, if not less. For example, on the container side, CMA, CGM, etc., have already announced a surcharge of about $3,500 on a 20-foot box, for example. So that's really 4 times, going up to 4 times the freight rate.
It's the numbers are all becoming hypothetical right now, because first a ship must be willing to go to charge a freight rate. Thank you so much, Mr. Devli, for speaking with us in such detail. We invite you back in the next couple of days when there is some movement to help us understand what the current situation is. Anil Devli there, who has in Ship Owners Association, who has in very, very great detail explained what's going on, and this is truly painting a serious picture, because there are 120 people stuck, Indian nationals who are stuck. And what Mr. Devli is saying is that the Indian Navy needs to come in. Now the Strait of Hormuz is going to turn into the next theatre of war. You have Iran saying that we will set any vessel on fire. You have the US saying that we will get our military to give safe passage. The French are coming in and saying that as well. And then if there is a clash there, do we want the Indian Navy in the middle of it? What happens to these people? It's a tricky situation.
Very tricky situation. Now, would the Indian Navy still do it because India wants some of that crude oil to come in? That's a separate argument altogether. I think this is very difficult to call. As I heard him say that we've made a representation, but we do not know when is it that India will be able to do anything to that effect. So it's a black box right now.
I think the government and of course our defense ministry is going to be studying this as things stand right now before a decision is made. There'll be a lot of factors that they will.
No, but the presence of any military in that area will be seen in different ways.
Yes.
So it gets tricky. We're going to be tracking the story very closely, but meanwhile, the next conversation we have is also an interesting one. Indian Metals and Ferro Alloys, or IMFA, is in the spotlight after an important acquisition that puts IMFA on the global map for ferrochrome. They've acquired Tata Steel's ferrochrome plant, and the acquisition makes them India's largest producer of ferrochrome and the 6th largest producer of ferrochrome globally. Before we get that conversation going, let me go across to Puneet to set it up for us.
Well, thank you for that. Definitely a big acquisition of 610 crores of the ferrochrome plant from Tata Steel. Now, for IMFA specifically, this does, as you rightly mentioned, put them on the map to be the 6th largest producer of ferrochrome globally. That will, of course, be one of the biggest talking points of this chat. But also, apart from that as well, the company largely has given some detailed guidance in terms of what FY26 to FY28 could look like in terms of their, in terms of the volumes guidance specifically. Now, they are roughly looking at 260 to 265 kilotons. We're looking to increase and almost double this number by FY28. So that will be the other thing I'll watch out from this chart. And the third and final thing on their ore raising trajectory as well, almost 725,000 tons is what was done in FY25, and this was expected to reach 10 lakh tons by FY27. Does the number still stand? Those will be some of the key aspects from this conversation, apart from the big acquisition as well.
Most certainly. Thanks, Puneet, for that. And we'll get to those company-specific pieces as well. But Shubhrakant Panda, Managing Director of Indian Metals and Ferro Alloys, and in an official capacity in the past and currently as well, a fairly senior member of India Inc. community. Mr. Panda, thank you so much for taking the time out and joining us, Neeraj here. Before we talk about your company per se, just a sense, because you would be, maybe you have business interests, maybe your colleagues or your peers that you speak to have these business interests as well. How difficult are the times currently? We know that crude oil movement, of course, is impacted through Hormuz, but a lot of other maritime activity, the costs associated, etc. Is it a big problem currently?
So good morning, Neeraj. Good to be on the show. Obviously, what is going on in the Middle East at the moment is a deep concern, not least because there's a huge expat Indian population over there. But from a business perspective as well, as you correctly pointed out, there is the impact on oil, and you've seen Brent move up sharply already. There is disruption in general to trade, and these are things to be concerned about. I think from a business perspective, what is most concerning is the uncertainty, because this doesn't look like it's going to be a 2-3 day affair. So one has to wait and see how this pans out. But certainly the uncertainty, the disruption to trade, all of this will have an impact. I mean, if you just to broaden the question a little bit, if you look at us, for example, we have no exposure to the Middle East. All our exports are to the Far East. And as of now, we don't see any disruption. But, if you have a stoppage of global trade or a sharp sort of a cutback because of movement of vessels and all of that, at some point in time, it will start impacting. But hopefully, the situation will start to resolve itself sooner rather than later. And more than anything else, I hope and pray for the safety of all people out there.
So well put, Mr. Panda. And the reason why I wanted to start off with that with you, because as in your position and your capacity earlier as the chair of FICCI, you have a great sense of how India Inc. as a collective body goes through, or what does it go through, and the measures that can be taken. Now, can this conflict, if this were to last, present a real and present danger to costs, to margins, so on and so forth, or are some of these manageable? As time and again in the last 5-6 years during COVID and otherwise, India Inc. has shown that when the backs are to the wall, they tend to respond very well. How is this different from the recent past?
So I think, I like the way you put it, that the Indian economy, Indian corporates, I think are very resilient. There is a lot that has been done, especially in the last 5 or 6 years, to add to that resilience. So I would have faith in that. But certainly if this were to drag on, unfortunately, then, there will be impacts. But I think that will be sector specific, that will be, region specific, in the sense companies and sectors which have exposure to the Middle East in particular will obviously have some impact. But as I said, I hope that this is something that begins to resolve itself sooner rather than later. I mean, just to give you an example, if you look at air traffic that had completely stopped for 2 or 3 days, but now the UAE has announced an air corridor with limited number of flights. So I think everybody is looking to figure a way out so that it's not a binary that it's on or off. There will be some impact the longer this goes on, but it's from a completely sort of a shutdown reaction in the first 2 or 3 days to gradually picking up. I think that's what gives me hope that the conflict doesn't last too long, and even within that overall setup there, you don't see a complete freeze of trade and commerce.
Mr. Panda, just trying to get a sense of, and like you said, for you, there is not too much of an impact because the Far East will have more bearing. But for the industry as a whole, and especially if crude prices continue on the trajectory they are, what are the pain points that you see?
So look, crude, going above a certain level and staying there for a sustained period, I think definitely has an impact. We all know that. But the government has come out with a clarification yesterday that we have adequate reserves in terms of both, fuel, whether it's petrol or diesel or other things. So I think India is well covered from a variety of aspects, whether it's crude, whether it's foreign exchange reserves, all of that. I think India is a very, very resilient economy. So I don't see a short-term impact. The concern, of course, and it's not India specific. It has a significant impact globally if this were to drag on.
Let me ask now, and thank you so much for answering so patiently all the questions that we had on the ongoing situation. As you would appreciate, in the news business, you focus on what is prevailing. But let me ask about the acquisition. Now that it is complete, what is the timeline that you have on integration, Mr. Panda, and how will that work on the financials as well?
So let me give you a quick update first. As you know, our current output is broadly in the 250 to 260,000 tons per annum range. In fact, as far as FY26, which closes shortly, we are looking to produce about 265,000 tons of ferrochrome from our existing facilities. Now, what we are looking at from the acquisition, is 100,000 tons. There are 4 furnaces adding up to 66 MVA, which are good to go. We took control of the unit on the 27th of February. We are looking to start up by the middle of the month. And honestly, what we will get in terms of output in March is going to be minimal, but we will scale up output in Q1 of FY27. And of course, towards the end of Q1, we are also looking to commission the first of our greenfield project furnaces. So as you had put up in one of the slides, from 260 odd thousand tons in FY26, we are expecting to produce about 400,000 tons in FY27 and going up further to between 475 to 500,000 tons in FY28. So that's literally a doubling of, or close to a doubling of output. But the key to profitability and the key to the impact, the positive impact on the bottom line, is the fact that we are correspondingly increasing our ore raising. So as against roughly 725,000 tons of chrome ore raising from our captive mines in FY25, that's going up to 850,000 tons in FY26. And for the coming financial year FY27, we are targeting 1 million tons or 10 lakh tons. That's of course a significant milestone in itself. But more importantly, it allows us to cater to our entire requirement from our captive mines, which obviously is a very big positive in terms of margins. And in terms of pricing, what you are seeing right now is prices are a little elevated given both cost pressures, which of course doesn't impact us because we have captive mines, but cost pressures as well as stainless steel, which is where ferrochrome is consumed, has been growing at about 2 to 3%, which is slightly tepid, but that's enough to keep prices elevated. So in Q3 we saw EBITDA margins around 23%. And we expect that to be there and thereabouts in the ongoing quarter, and as well as looking into the first quarter of FY27.
Okay, interesting. So you've already laid out quite a few of the benefits that will accrue. Just a quick follow-up on that, Mr. Panda, with regard to this new plant, the EBITDA per ton, are you comfortable sharing what the rough trajectory of that will be?
So yes, certainly, broadly what we this is not guidance. Let me be very clear. But what we broadly look at is roughly about 18,000 rupees a ton in terms of EBITDA. At the moment, it is a little elevated, as I said, because of prices. But more importantly, something that I need to add as well, that both the Kalinganagar facilities, which is the greenfield as well as the acquisition, are logistically very competitive because they're closer to the mines, closer to the port, closer to stainless steel consumers in Kalinganagar and elsewhere in Odisha itself. So when we get the facilities up and running, which is by next calendar year, the blended average EBITDA margins are expected to increase for the company as a whole because we are producing more ferrochrome in logistically friendly locations. And of course, there are operational synergies as well because the greenfield and the acquisition, both the units are literally located within 500 meters of each other. So tremendous administrative and operational synergies besides the logistical advantage.
Okay. Mr. Panda, great to have you today, and in your capacity as somebody who understands India Inc. so well, thank you so much for that perspective as well as what's happening with IMFA. Really appreciate.
Thank you.
All right, that's Shubhakant Panda, ex-chair of FICCI as well, and of course heads IMFA, and great perspective on what's happening currently. Okay, a new listing, I believe, also slated and just happened, so keep that in mind. But while we are talking about all of that, maybe we'll just get the listing up, PNGS Reva, about a 3.5% discount, 2% discount. Not too bad, considering how the markets are behaving currently. It's almost mirroring the Nifty fall, if you will.
Yeah, it's a diamond jewelry business.
Yeah.
So anyway, I think a tough space.
Yeah, and PN Gadgil business, essentially it is.
Yeah.
The parent is PN Gadgil.
Yeah, so just under the Reva brand, they've hived it off.
Yeah.
Diamonds going through their own funk right now with LGD, etc. But yeah, okay, not bad for a morning.
Yeah. Not bad for a morning.
So turbulent.
Exactly. Well put. Okay, more news and updates, and government sources have told NDTV Profit that India remains in a comfortable position on energy security, even as the situation in the Middle East evolves fairly rapidly. Danish Johnson with the details. Danish.
Well, that's correct. Top government sources have told NDTV Profit that as far as India's energy security is concerned, things are on a very bright and positive side right now. If we look at the overall inventory of crude that India has, and if we also include the products, by that I mean petrol and diesel, we are good for the next 6 to 8 weeks. And if we do another further breakup of this, if we look at the crude inventory is in a good position between 3 to 4 weeks. And if we look at the inventory of products, petrol and diesel, even over here we are seeing that we are good for 3 to 4 weeks. Besides that, as far as LNG and LPG is concerned, top government sources are telling NDTV Profit that even on this end there is a lot of comfort, so we don't have to get stressed or feel anxious about whatever is happening in the Middle East, as India's energy security remains strong at the moment. And as far as Russian crude is concerned, sources have told NDTV Profit that India continues to import crude from Russia. These are not the new contracts, but these are the old contracts that the companies had signed with the Russian company. So from that source as well, we are getting crude. But if we look at the questions around the Strait of Hormuz, India imports only 40% of its crude from the Strait of Hormuz, and 60% of the crude that we get from other sources, it comes from other places. So even if a Strait of Hormuz gets shut someday, India is very much sure that it will not impact our energy security, as we have enough reserves, not only in the form of crude but also in the form of products that we have at the moment. So all in all, if we see, India does not need to get anxious as far as crude and petrol and diesel products are concerned, because things are very bright and things are on the bright side, as we have ample of reserves as well as ample of products.
Okay, I don't know if things are very bright and on the bright side, but definitely nothing to panic right now. The markets are continuing to show some amount of fear and panic, if you look at it. About 1.5–2% down on the Nifty, but the Kospi is where the pain point is. 8% down, Nikkei also about 3.5% down. So if I look at it in relative terms, and we'll pull up the Nifty before we head into that very short break, we are still okay, about 2% down right now, 533 points. 24,334. We've broken that 24,400 mark. Can we see some bounce back? Big plunge after we opened up as well. Very short break. On the other side, we speak to Kansai Narolac Paints Praveen Chaudhary, and the big conversation on Talking Point with Vikas Khimani of Carnelian Asset Management. Stay tuned.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है,
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है? कभी मैं कह नहीं पाया। It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th–15th March, Sundar Nursery, New Delhi.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to,
Welcome back. You're watching India Market Open, and Kansai Nerolac in focus for multiple reasons. Of course, the big picture is that crude oil prices have gone pretty high as things stand right now, and there is an implication for paint companies. It has recovered from the low point of the day, but the other significant development is that it has received shareholder approval for the merger of Nerofix with the company. The approval came at the NCLT convened meeting of equity shareholders, marking a key step in the amalgamation process. We will be speaking to the management about that and more, but first let's set things up with a conversation with Mahima. Mahima, what stands out here? What is this key development about?
Right, so Alex, as you mentioned, right, lots happening with the company, and like you correctly mentioned, NCLT had convened a meeting of equity shareholders on 27th of Feb, where they approved the amalgamation of Nerofix Private Limited, which is its wholly owned subsidiary. The other aspect that you talked about, because of war, we're seeing increase in crude prices. So it's important to understand as of now as to what inventory they're sitting on, and going forward, how will this impact margins if they have to? I mean, if this continues and the crude prices go higher. The third aspect here is also that recently the promoter met in Japan and discussed India business, where the management had sharply defined the roadmap for all of its operations for non-auto industrial coatings, accelerated growth of 10% per annum for next 5 years for auto and finish coatings, where they have a dominant position in terms of market share to grow around 5 to 7% per annum. Decorative paints, they've said around 2 to 4% growth is what they're expecting, and overall they've said that they are not planning to divest the decorative business in near future, and they're also expecting a 200 basis point increase in margins also on account of operational efficiencies as well as premiumization, and no further capex plan. So lots happening with the company, and it will be important to understand, of course, the impact of rising crude prices on the margins as well.
Got it. All right, Mahima, thanks so much for getting us those details. Praveen Chaudhary, Managing Director at Kansai Nerolac Paints, joining us this morning. Thanks so much for taking the time, Mr. Chaudhary, and it behooves us. We have to ask this question at the start, because there's so much that has occurred over the course of the last few hours as well. Crude oil prices, major input for you. What are the implications in the near term? Mr. Chaudhary, if you can hear.
Thank you for having me. So crude oil obviously So crude oil is very integrated with the paint industry, and likewise for Kansai also. But if you look at our past 2 decades or 3 decades of experience, we had many such events in the past also, and I think company could resiliently pull through that kind of event. Now, likewise here also we are watching situation very closely. Obviously, there will be some implications as far as crude and their derivatives are concerned. But as far as we are concerned, we are well poised with our inventory levels and obviously supply capability. So in short term, I don't see any big problem. Of course, we'll have to be watchful in terms of the development that are taking place going forward.
Just a quick follow-up on that, Mr. Chaudhary. In the short term, of course, you're insulated, relatively speaking, I would assume, because of inventories, etc., as you pointed out. Is there the ability from both yourself as well as the industry to pass on increases in input prices? And is this normally something that takes place, or do you anticipate that there could be margin pressure?
So as far as if you look at the line of business, decorative business, obviously pass-through is possible, which is always done. In case of industrial, also pass-through happens now, but of course with slight lag, maybe a quarter or so. But pass-through definitely happens, and we're happy that all our relationships with the customer ensured that in both downward as well as upward cycles, I think we respect each other's sentiments towards pricing and profit margins, and I think that is honored.
Chaudhary, you have laid out a vision for a 200 basis point improvement in margins, and you recently had this investor analyst meet in Japan as well. Does that now seem a little more difficult with where the trajectory of crude prices is going? And are you also facing any kind of supply chain restriction because of what's happening in the Strait of Hormuz?
Yeah, so it's too early actually. It's only 3 days, I would say, when these developments are now picking up to a level where we should be start thinking about it. But I think our past experience post-COVID actually has taught us lots in terms of how to deal with this logistic disruption for long term also. And we have built a lot of backup plans in terms of changing our sourcing strategies, and there are a lot of Indianization, localization that has also happened. So I'm confident we are far better prepared this time in terms of handling this. However, as things will develop, I'm sure we'll have to keep refining our strategy and try to meet our overall objectives that we've set.
But just on the point about supply chain restrictions that you see because of Strait of Hormuz, what is the dependency here? What is the exposure to the Gulf region for you and your business?
From Gulf, there's no direct exposure. I think it is mainly related to oil and the disruption that might get caused to derivatives. But there's no direct exposure as of now that we see from there.
Let's talk about the Nerofix merger. This approval has come through. What is the integration process? What are the timelines and what are the implications, Mr. Chaudhary?
Yeah, so Nerofix is a company we acquired 6 years back, and it's in the business of adhesives, both retail as well as industrial, and also construction chemical. And as far as timeline is concerned, we're anticipating it's about 6 to 9 months. I think it should take on a higher side. And the process, it has 2 plants, and obviously there'll be, because of this amalgamation, there'll be a lot of leveraging of fixed assets and fixed costs that can be done. And I think the biggest synergy, I would say, will be from the front of channel, because we have in the Nerolac, we have a wood coatings also, which obviously deals with the furniture making, and whereas Nerofix deal it from the adhesive side. So given our presence in decorative in the wood finish arena, where we deal with many architects, furniture makers, OEMs, I think that synergy should be quite a good fit. And also looking at industrial side, where we are anyway having larger than 50% exposure as a company, Nerolac company, there also I think we'll able to leverage our strength and channel partnerships to also push this industrial adhesives. And Nerofix has a fairly large industrial adhesive range also. So I think that will come handy in terms of leveraging it. Now, as far as this amalgamation logic is concerned, I think this is also part of range filling when it comes to my decorative business. Because I think when we deal with carpenters for wood finish, I think there is also this backward possibility of having this getting pushed. So some bit of range completion exercise will also come, and larger solutioning aspects, so that the one integrated player coming to market and trying to offer end-to-end solution. So I think that's the whole thought behind this. And over I think last year, Nerofix has performed very well. So I think that gives us confidence that there is further upward trajectory that is likely to be seen going forward.
Okay. Mr. Chaudhary, just trying to understand if there is now going to be a larger focus on industrials, or are you looking at autos? What is your top priority right now? Will it be decorative, industrials, auto? Where are you seeing the best margins and best opportunities?
Yeah. So given that Nerolac already had a significant presence in auto and followed by industrial, and of course decorative was always a large block, close to 50 to 55%. But given the current market dynamics and the way things are in decorative market, I think while we are trying to obviously protect our strongholds in the market where we are strong, and obviously protect our market share, but it is also important now that given the government push on the infrastructure side and amount of infrastructure spend happening, we are seeing phenomenal growth in the industrial area also. So auto will obviously continue to dominate. And if you look at auto also, all automakers are projecting they're doubling their capacity in the next 5 to 6 years, also backed by the great confidence of export that is happening out of India. So I think auto will be on its track where we are anyway number 1. So I think that model we have perfected, we should be doing great there. But the third piece which now we are over-indexing is on this industrial front, which is infrastructure related idea. Now, why that is also important? Because as premiumization is also happening there, where every client of ours asking for higher performance warranties, global technology is now coming in the play. And I think in India also there are fairly limited global players who can offer this global technology with approvals and specifications proven in the past. So I think that's the play we are sensing is going to be very interesting, and we'll be over-indexing on those areas, and that is why third pillar of industrial, which consists of powder coating and performance coating, will be a large focus area for us.
Okay, thank you so much, Mr. Chaudhary, for coming in today and answering all of our questions. You know, whichever way you turn, there is a sector which is impacted by what's happening in the Middle East, one way or the other. There might be very few really that are not, but even those are getting hit in the markets today. One would think that private banks, what is the connection there? But you're seeing private banks among the top losers. Having said that, war-driven disruptions and rising transit costs are also set to hit Indian pharma exports just as the industry enters a crucial shipping month. Freight, insurance and rerouting costs are spiking, and US-bound consignments are already facing delays. Nimit Dixit joins in for more details. Nimit.
Hi, yes, as you said, that freight costs, insurance prices and rerouting costs are also hitting the pharma sector, which is already reeling from Trump tariffs, especially Indian pharma exporters, who 65% of all Indian pharma export is done through the Suez Canal. And what is happening now is there's one part that's going through the sea, there's another part that's going through the air. These are controlled substances. Now, controlled substances are specifically controlled by the government, and there's specific permits for these. Now, as Dubai being a specific air route, as some leaders in the industry tell me, that they have to now scramble to find alternate routes. The bigger problem for them is that their routes are inbuilt into these permits, because of which now they'll have to get the permit altered to get the route altered, and that's going to take a little bit of time. The IDMA, the Indian Drug Manufacturing Association, says that this is going to cause short-term escalation in costs for everything moving westward, which is 65% of our industry. They also say that there's going to be a disruption in supply chain because of a lack of scheduling that is taking place because of the conflict in the Middle East. Now, to put this in perspective for you, 30 billion worth of Indian pharmaceuticals were exported in FY 2025. 5 to 8% of this is freight cost. Because of this increase in freight costs, industry experts say conservatively that the jump will be at least 20% in transit costs. Thank you.
All right. Thank you so much for that, Nimit. So pharmaceutical exports is another pain point that could emerge in some time, and maybe the focus on it hasn't been so clear thus far, but that will also see supply chokes and actually export route chokes. Vikas Khemani joining in this morning. He's founder and CIO of Carnelian Asset Management and Advisors. Vikas, a very good morning to you. Are you seeing some silver linings in what is happening right now, or is this truly a period of pain that will continue for some time from the Indian perspective?
This is, of course, uncertain times, global uncertainty, and I think taking a call on, how the war or the conflict how long it will go and what shape it will take would be probably, difficult. But I do believe that till the time this continues, it will be with an uncertain situation, and it will create, of course, cost for companies, businesses. Short-term disruptions. It could cause some sort of margin pressure, different industries. So I think, and we've seen whenever these kind of periods come, we saw Ukraine war in 2022, quarter or so was a very heightened uncertainty, and then of course it started settling down. So I do think probably this can be a little shorter given the structure, but who knows? That's just a kind of guess. But the way situation is panning out, we have to watch out every single day. But for India perspective, I guess the biggest thing is the oil price, which we have to watch out. So far, it does not look alarmingly high, but who knows? We'll have to keep close watch on things, how they pan out.
Got it. Vikas, good morning. You rightly said that sometimes times are unpredictable, but the question therefore is, do you pay heed to perceptibly attractive valuations currently? Or is there a time for attractive valuations to be acted upon as well?
So Neeraj, I think, the way these are the best times if you ask me to do stock picking, because right now most of the stock prices don't necessarily, go up or down based on the fundamentals, but based on the short-term news flow and, and the fear. And those are the times when you can sit back and say, look, here is the stock that I've been monitoring. It does not change big time in the case of any, war from structural perspective. Those are the best times. I mean, the classic example I give during the Ukraine war, during the tariff war time, I remember one of our portfolio company, Aditya Birla Capital, went down from 225 to 150, and it had no implication from tariff perspective. And today, in less than a year's time, the stock is up to 350 or so. So I think these are the kind of situation which offer definitely great ideas, opportunities from a stock picking perspective, and that's where one should keep focusing on.
Okay. So Vikas, it's a valid point. In which case, okay, my question would be: would you go in for, let's say, a predictable growth which might be not as cheap, versus maybe some of the stories that got damaged because of temporary reasons and might be available at a really good valuation? I mean, for example, energy transition theme, almost everything has been decimated despite the fact that the targets for 29, 2030, etc. stay, and it seems to be non-negotiable because India is on that path. So a lot of them have been really badly hit. How do you kind of put in incremental capital to work?
I think, again, you have to put capital to work with the sectors you are quite positive. The predictability of the growth is there in the near term or future term, in the future. And the even if there's a short term impact on the business because of the uncertainty, so be it. You have to overlook that. The sector you mentioned probably not corrected because of the current situation, but more because of the, I think, expectation of the oversupply in the market. I mean, that's my my sense. So there are different sectors. There would be sectors like, I think somebody was talking about that, let's say in banking, does not change structurally anything. From a long-term perspective, of course, for all, stock might go down a little bit, but if you like a particular bank or sector or company, you might look at, investing at this point in time, because if you overlook 6 months down the line, once the dust settles down, I'm sure the story will be back to the normal growth, India growth, which has no implication on the overseas conflict going on. So I think there would be many companies which have kind of either got impacted by the sentiment or got impacted by the business from a short-term perspective, but long-term doesn't change. Those are the businesses to be bought.
What IT? Are those one of the businesses to be bought that you would include, Vikas? Some love for IT today in a very bad day. Maybe that AI threat is looking less severe than the threat all other companies are facing in relative terms. But is there any kind of positive view there?
So I think IT, our view has been that, the current AI disruption may not be as bad as markets are making out to be from a long-term perspective. But yes, of course, all the companies have to go through the transition, change, adaptation, whatever needed to be done. And to that extent, right now, markets have kind of corrected significantly. And we have seen this time and again happening in many sectors. We are watching again there. The key thing will be which company you think will be able to adapt and come out on the other side better. Those are the companies to be betted upon. But yes, because IT sector corrected significantly in the previous in the recent past, and this particular event does not have as particular much impact on IT services, and only it helps in terms of a bit of a currency value, devaluation or currency weakness. And to that extent, I think we are finding it. But long-term question about the growth and which company would come out winner has to be kind of tested, checked out. And we're doing our work on that. We own some stocks, but we are underweight still. At some point in time, as and when we get convinced about which companies are going to be winner, we will be kind of increasing our stake there.
Vikas, we'll have to leave it there. Thank you so much for joining in, and we hope to speak to you soon. Hopefully, things will settle down earlier than later. Vikas Khemani there saying spot long-term potential and keep that conviction. These reports now on the flash also a little worrisome, I would say, Neeraj, because the Iran Guard coming in saying we have complete control of the Hormuz Strait. And in light of the conversation we had also earlier, I mean, even if you have max coverage insurance and you've paid a risk premium for it, who is going to sail through?
Yeah, if you were a captain, would you?
No, I mean, I can't even envision it. But no, I don't think anyone can, anyone will.
Agreed.
There is no way till this gets resolved that it happens. And this is something we've always talked about. possibly happening now. It seems like it is.
Seems that the playbook is that they want to ensure that energy costs spiral out of hand for everybody else to come up and say, let's end this conflict soon.
You know what that's telling me is that this is a well-thought strategic hit back.
Yes.
It's not an out of anger, indiscriminate, let's bomb everything.
Yeah.
They are going after industrial complexes. They're going after Gulf countries, which will be more vulnerable. They're going after crude prices, causing enough pain around the world so that everyone gets dragged into this. And it's not restricted just between Iran, Israel, and the United States. That's really the worry. We'll take a very short break. That's all the time we have on India Market Open. It's been a very eventful morning, but stay tuned. All the action continues on the other side with Ask Profit.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
Where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक आजकल चल क्या रहा है सिचुएशनशिप आपको पता क्या होता है कभी मैं कह नहीं पाया
It's okay, yeah.
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
The expert advice, the latest trends. It's a lot.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. And on a day like this, it becomes very, very important. So do start sending them on the numbers that are flashing on the top of the screen. You can also call us for your stock-related query as well. My name is Puneet Zaveri. With me, as always, is Mahima Machajani, and we'll try and get your queries solved very, very quickly. So start sending them. It's an important day. The Sensex down almost 1,400 points as we speak, and we continue to have the stress from the global perspective very visible on the index. At 78,000, the Nifty 50 also at 24,400. It's a figure that we haven't spoken too much about, and very important levels as well. The lows on the budget day was 24,600, and we saw some buying from that level, and we are back at considering those levels as well. So what was earlier in support at around 25,000 has now become the resistance level, and continue to monitor all of these key levels. When you look at the heat map for the Nifty 50, there is devil in the details as well, because you continue to see pressure yet again on last year in Tubro. Almost 37% of its order book coming in from the Middle East, 55% of it is fixed price, so there could be some impact on margins. Unfortunately, the metal names are also not supporting the Nifty 50, so Tata Steel is down in trade today. Indigo continuing to be under pressure. Tata Motors PV, we were flashing that the data from Jaguar as well as Land Rover is very weak in the month of January and continues to be under pressure as well. Ultratech down 4%, back at the 12,000 mark. Grasim, SBI Life, Titan, Max Health all down in trade today as well. So you're almost seeing 43 stocks in the red, and the ones in the green are also not too high, only between 0 to 0.5 are almost 5 stocks there. So almost 48 stocks, not rather just in under pressure, flat or in red. And you also look at the sectoral heat map, it'll give you that perspective. The Nifty Auto, which was under pressure on Friday, has continued to be relatively under pressure today as well, down 2.8%. Maybe profit booking from a lot of investors where they've made money, trying to limitate or mitigate their losses at this point of time. The metal index down almost 4%. PSU Bank, Realty, Media all down in red. So essentially with Nifty IT, which is barely in the green round and was at up almost 0.5%, has also given up those gains. But Mahima, broader markets also showing you that pain today.
Yeah, I mean, look at that. Except for defense, all the sectors are down over that 1% mark, and that's not something that you see every day, right? So that's, I mean, it's just bloodbath in the markets for sure. But the mid cap 150 and the small cap 250 as well. The mid cap 150 is down over 2%. The small cap 250 also down over 2%. So underperforming the benchmarks by a bit. Let's try to quickly pull up the BSE 500, because it's also a very stock specific market, and also the advanced decline ratio if we can, because the other day we saw that picture of 200 odd advances. Today it's around 330, but the picture still does not look good because that graph is widening by the hour. So that is concerning. The BSE 500 quickly, because a lot of stocks that are under pressure, some stocks kind of making up for the pressure. Tejas Networks today also up by about 4% odd. Praj Industries, Sri Renuka. So sugar as a theme is doing fairly well. Polymedicure also up by about 4% odd. But on the flip side, I mean, look at that. Rain Industries as well as Petronet LNG, both down 10% each, followed by MGL, L&T, Tata Steel, SAIL. So two Nifty 50 names in that BSE 500 as well. So that's the mood of the market right now. But with that, let's also welcome in our guest for the day, Vaishali Parekh, Vice President, Technical Research at Prabhudas Lilladher Capital, and Avinash Gorakhshankar, Founder and Head of Research at Avinash Mental Research Services, joining us now. Vaishali, before I quickly go on to the questions that we have, your quick view on the markets right now. What is the support and resistance that now you will be marking now that we are below the 24,500 levels as well?
Very good morning, all of you. So yes, market has shown a good downside move. So technical support to an extent can come towards 24,200 to 24,000 levels. But if these levels also break, then I think I wouldn't be surprised market going towards 23,000 also. So it's a wait and watch scenario. Bias is corrective. Bank Nifty also showing erosion. So I think overall it's a corrective thing. But 24,000 level on a broad base is the level to watch.
Got that view, Vaishali, and guessing Vaishali will be very busy today with a lot of stock-related queries that we are getting, especially where the pain is. But the first question, it's very pertinent. Reliance Industries is the first one. Mohit from Ludhiana is actually asking this question. asking if it's actually advisable to buy into this counter right now. Avinash, good morning. Welcome to the show. Probably, this counter is back in focus and, given up a lot of those gains. So the momentum was just building in, and then we've seen this geopolitical impact on Reliance right now. You also seen the Jio IPO impending, some holding company discount coming in already. But how do you view Reliance right now? And is it advisable to enter this counter, is what Mohit is asking?
Yeah, good morning, Puneet. See, I think Reliance Industries, the stock has got impacted largely because, oil prices have surged. Obviously Brent prices the way they are. Obviously, if there is a kind of a spike in oil prices, that means that there is definitely going to be some margin pressure for Reliance, although it's one of the most efficient and modern refineries. Our sense is that, in these prices, maybe in the short term, the volatility will continue till maybe a month's time. Our sense is that, this war possibly could get over in the next 25 to 30 odd days. And if it happens, then I think you're going to see a good bounce in Reliance. So I think, investors who have the kind of, appetite to take a little bit of risk can obviously chip in. I think they can probably buy a little bit of quantity at the current level and wait for things to clear. I think fundamentally nothing is wrong, but I think if oil prices continue to remain elevated above $85, $90 a barrel and this war continues for more than a month, then I think problems could, further accelerate. So I think net, one should hold on. Fresh buying is only advisable for, investors who can take a 12 to 15 month call. I think these short-term uncertainties will definitely clear away. But in the longer term, I think the structural story seems to be quite solid.
All right. So that's the view coming on Reliance. We've got our first caller for the day. Kishore is calling us from Bengaluru. Kishore, hi, a very good morning to you. How can we help you?
Hi, Mahima. Very good morning and happy Holi to you.
Thank you so much.
So I have a question on...
Wishing you the same as well.
Yes, thank you very much. So I have a query on the TARL. So recently I heard the conversation from the management as well, and the comments from the management was excellent. I also looked up the fundamentals before I purchased the stock. PE is very good and attractive. Valuation seems to be amazing, and the order book is twice, almost 2 times the market cap. But I'm worried about the legal issues what the company is facing. So I'm wondering what's the future outlook for, let's say, 2 to 3 years.
Okay, Kishore, got your question, and I really appreciate that you've done your research so well. So kudos to that. Avinash, I'll take this up with you. His concerns are valid. What's your viewpoint from a slightly long-term perspective for TARL?
I think in this market, the market does not look at fundamentals. They look at more on the sentiment side. And I think, despite the fact that, I think there are some legal issues pending, the most important thing is transformers as an industry is growing very rapidly. There's a huge pent-up demand for transformers, and we, have come to know that almost every transformer player is operating at peak level capacity. So demand is growing. So I think, in the near term, these factors could play an overhang on the stock. But if the investor has a 12 to 18 month kind of time frame, then I think he needs to hold on. In fact, he can even average at the current levels because it's a good company, a good, management which is able to scale up the business. So I think continue to hold, but yes, take a long-term view.
Got it. Got the view of Avinash. Now it's a difficult time that we're going through, but it's also one that company has listed today. PNGS Reva Diamond actually listed at a 4% discount, making a softer debut. And we had a chance to speak to the management of the company. Let's very quickly listen into what they had to say on their IPO listing as well as what they are seeing going forward. Listen in.
My first question to you is that, largely these proceeds will be used for opening 15 new stores that you're aiming at. Give us some perspective as to how, the timeline is looking for adding all of these 15 stores, and what is the format going to be for these stores, and overall, when do you start expecting these to, start generating money as well for you?
So it will be mainly cocoa kind of stores, company owned, company operated. And 15 stores will be in Maharashtra as well as in north part of the Maharashtra. Presently we have got SIS model working in 33 location of the PN Gadgil Sons Limited, our promoter company. One EBO is already there in Pune, and EBOs will create a brand awareness and footprint in the pan India. Secondly, there is a more inclination towards the studded jewelry nowadays. For last 2 years, we are observing that there is a larger number of people are getting attracted to the studded jewelry, and that studded is a natural diamond jewelry. which gets studied in the 18 karat or 14 karat of the gold with natural diamond. So that inclination, growing market for this diamond jewelry, we have planned to expand through the exclusive brand, that is a Reva Diamond, instead of going with the full-fledged 360-degree jewelry store. We concentrating on the diamond jewelry now.
Got it. Amit, the other aspect, right now, like you mentioned, I think out of 34 or 35 odd stores, almost 33 is SIS, that is shop in shop. Now, via adding these 15 new stores, you will, kind of become a little more independent and not depend on your parent company. Just wanted to understand that, let's say 2 or 3 years down the line, where does this 15 store number go to? How will the mix fare between, SIS as well as the company owned stores?
SI is a passive thing. So commenting exactly on its number is very difficult. But parent company generally set up 1 or 2 store every year, and so that SIS number will go up slowly. But these 15 number EBOs with existing 1 EBO, even if we keep present SIS as it is, it will be a share of 33-66%, and it depends how things gets on expanding or developing. So EBOs will definitely have almost better half side of the entire organization and less dependency on the SI stores which are of the promoter company. But promoter company's SI stores at present are doing extremely well, and they have got good SSG growth also, which we have seen from 24 to 25. So that SSG growth will improve the SIS top line, plus additional top line will come from these 15 stores. So there will be better top line, and if better top line is there, better bottom line also.
So that was the management of PNGS Reva Diamonds, the recent listing coming in, got listed at a discount of 3%, so not as bad as how the markets are doing right now, still down by about 3%. But with that, let's continue with the query. Sanjay is calling us from Gujarat. Sanjay, a very good morning to you. What is your query about?
A very good morning to you also.
Good morning,
and
Sanjay. Go ahead.
Happy volatility to all your viewers and you.
Thank you, Sanjay. Wishing you the same.
Yeah. I have 154 shares of Arvind Limited at the rate 154. Holding from 22 year 2022. What can I do now? It's a deal of America is completed. The share is going up to 380 rupees. But then it is coming down and down. So what could I do? Sold or hold?
Got it, Sanjay. Got your question. I'll take this up with Vaishali quickly. Vaishali, he's sitting on significant profits because his buying price is 150. The stock is currently trading at 330, but it's come back from 380 is what he's saying. Do you think he should book his partial profits or maybe full profits or continue to hold?
Yeah, the fact is that in spite of a market like this, it's still holding on very well. But one never knows because of these geopolitical issues, how much more pain are we looking at. So better partial profit booking should be done at these levels. And if the stock falls again at around 310 to 290, you can again re-enter the stock.
Got that view, Vaishali. But the next question that's coming in is from Siju from Qatar, who is a regular viewer, and I hope everything's all good, Siju, at your end. He's currently holding 30 shares of CDSL, bought at 1244. And he's asking if it's a good time to average this, and since his horizon is almost 3 to 5 years. Avinash, would you recommend this?
Yeah, I think, Puneet, these are basically annuity businesses where, the business continues, because stock markets definitely will survive, and I think, transactions will happen. So CDSL is like a player which has got a virtual annuity kind of business model, not an asset heavy kind of business model. So I think if he's got this kind of time horizon, he can definitely add. But I think I would suggest, even if he wants to add, I think do it in a SIP way, because we don't know how the markets would perform going forward. And if at all there is a price drop even from current level, then he can average out, if he adopts a SIP approach.
Okay, all right. The next question that we have is from Venkat Ramani, who is writing us from Bengaluru, asking about Eternal. She's holding 1,000 shares at the levels of 218, wants to know if she can buy more or continue to hold this for the next 12 months. Vaishali, your view on the charts?
I would say Eternal has done with its correction. I don't see much of a downside from these levels. So I would say start accumulating from here on, at every dip, and I think you will see a good turnaround very soon.
Got that view, Vaishali. But the next question, it's on Bajaj Finserv, and Vanita Bala actually writing in from Kuwait, and I hope everything's good at her end also, because she's been a regular viewer of the show. She's holding 15 shares. She's not mentioned the buying price, but asking if it's a good time to accumulate this counter now. Vaishali, actually I'm going to stick with you, because stock went to 2100 and now has rebounded back to the 1800 mark. Would you advise a good time to accumulate this counter now?
Wait for a while, because right now it is at a make or break levels. 1850 is the support. So if you see a break in this, I think 1700 I would be comfortable to start buying. So if trading is not the idea, then I would say buy to 20 to 30% right now. And if it drops to around 1700 levels, I think add more.
Okay, all right. So that's the view on Bajaj Finserv. We've got our next caller. Benson is calling us from Mumbai. Benson, I hope I am pronouncing your name correctly. Go ahead and ask your query.
Yeah, you corrected my name correctly. My query is on Enviro Infra Engineers. I purchased this almost a year ago at a 344 rate, and I purchased 1255 shares that time. But it has been going down since then, so just wanted to know your view on this.
Okay, I take this up with Avinash. Avinash is sitting on a loss of around 2.5 lakh rupees. What should he do on Enviro Infra?
No, I think, my guess is that he's probably purchased it at the peak level. The company has an order book of almost 3,500 crores. And I think, in the EPC business, especially the water business, the business has been consistently growing. So I think, the market sentiment has been bad, and that is why the stock has been beaten down. But I think fundamentals continue to be quite solid. So unless he gives a time horizon of say 12 to 18 months and he averages his cost, because he's almost 50% minus on his capital, unless and until that is done, one cannot expect a very decent risk reward. So I think start, accumulating slowly and try to reduce your average cost and keep a time frame of at least 12 to 18 months.
Got that view of Avinash, but the next question, it's a very pertinent one in today's context, is on Rain Industries. Now, Siva from Amravati is actually holding 10,000 shares of this company, bought at 178. Stock's trading at 128 now. So he's almost sitting at a loss of, unfortunately, almost 5 lakh rupees as we speak. Vaishali, he's actually mentioned specifically that he can hold only for 3 months. But what would you suggest for Rain Industries at this point of time? Is there any chance of it coming back, hopefully close to the buying price, to reduce his losses or average down? What would you recommend?
Well, so the trend is really getting damaged. So keep now 125 as stop loss, because if we see a close below that, then this is going to trigger a further selling pressure. So it's better to book out if trading is the perspective. Keep stop loss of 125, because right now we've already seen good erosion. So in all likelihood, if market shows some signs of bounce back and we can see some retracement coming in, but otherwise the trend is getting weaker.
Okay, the next one is on Nestle. Nihal Mohandas from Mumbai is asking this question. He's holding 350 odd shares at the levels of 1150. Wants to know as to what price can he sell this counter at. Vaishali, I'll stick with you for this one. 35,000 of profit is what he's sitting on. What's the view like?
I would say continue holding, but keep a trailing stop loss of 1220.
Got that view, Vaishali. But the next question that's also coming in, and it's slightly more open-ended, and in today's market, what we are seeing, hence we are taking this question from Dhananjay. Avinash is actually asking that if in this volatile market, what can he do? Should he hold on or book profits or add investments? I know it's a very open-ended question, but we are seeing, the counters that have actually done well, Avinash, like auto, like metals, have started to see some pullback now. Investors may be booking profits. Would that be a strategy that you would recommend, Dhananjay, as well? What would you suggest?
No, I think, I think whenever you invest in these kind of drawdowns, the alpha creation is very solid. But I think it requires a little bit of time and patience. And I think investors who have a short-term view should not enter the markets. But investors who have got a 12 to 18 month kind of time frame, could look at buying large cap stocks like Mahindra and Mahindra, or for that reason, even something like a NSDL. These are businesses which are not going to be wiped out by short-term events. So I think, you've got to be a little more patient and a little more realistic when you talk about investments. In this market, when everything is going against you, it's only such kind of businesses which will do well. So I think keep a time frame of at least 12 to 18 months and invest in these kind of large cap, because these businesses are not going to get over. Business will come back as usual once the clarity happens, once the war ends. And I think that is something which the markets will obviously get a clear reflection. You'll see a very sharp bounce back in the markets once there's a clear signal that the war has ended.
Okay, all right. But just shifting focus for a bit and trying to understand as to what cues are shaping up in the F&O market. And we have Sharath joining us and standing by as always to give us that perspective. Sharath?
Well, we can see a big sell-off happening, and of course the large, you could say 200 DMA levels, and even you could say much more of the numbers are on the downtick, and there hasn't been any major change, still down 2% when it comes to Sensex, a sea of red coming in. But L&T and Tata Steel, that's where the concern is there. Ultratech, all these stocks in the red, barring Infosys and Tech Mahindra, which is there from the tech space. Only Bharti Airtel comes in the green, and BAL also there, but majority we see a sea of red coming in. No major Nifty. You could say the Sensex heavyweights actually not doing much. BankX also the story remains same. SBI is down almost 2.5%. ICICI Bank and Bank of Baroda also in the red as well. Let's look at the key long build up. Largely nothing much. Coal India and solar industries, defense stocks is something where the street is finding some solace right now. Short covering for Jubilant Foodworks and Infosys. Just look at Infosys, not so much in Jubilant Foodworks. And long unwinding. Let's see what's happening here. SAIL and IOC make it to the list, largely on the reactions coming from the Middle East tensions, and Tata Steel and Petronet LNG. That's where a big short build-up is happening. You should look at Petronet LNG, that's down almost 9%. So, of course, the entire market is moving on the geopolitical tensions. Not much for stock-specific news flow today.
Thanks so much for that, Sharath. But time now for the rapid-fire round in this edition of Fast Profit, where Vaishali as well as Avinash, you know the drill. The first question that's coming in is from Manohar. He's asking, between NSDL and CDSL, what's a better long-term opportunity, Avinash?
I think CDSL would be a better choice.
Okay, the next one is from Lakshmi, is writing us from Hyderabad, asking if she can go ahead and invest 1 lakh rupees either in ICICI, Axis or HDFC. Avinash, which one would you pick?
I think ICICI Bank.
DCS System bought actually at 245 by Sriram. Should he continue to hold for the next 1 year, Avinash?
Yeah, he can continue to hold.
Muthoot Finance bought at the levels of 3153. Khurshid from Delhi wants to know if this is a good time to add more shares. Vaishali, your view?
Accumulate.
Aadhar HFC actually been held by Prakash at 324. Should he continue to hold, Vaishali?
Which one is that?
Aadhar Housing Finance.
Hold.
Okay, the next one is on Force Motors. Gauri Gupta wants to know if this is a good price to buy for the next 6 to 9 months. Vaishali, your view?
20,000 is a good support level. Buy accordingly.
Interglobe Aviation, Avinash, Rajesh Maheshwari, who's a regular viewer, is holding at 3730 over 100 shares. Should he book out, take his profit and come back at a later time?
No, I think he should continue to hold.
Okay, Tata Steel. Is this the right time to buy for the next 2 years? Avinash, your view?
Yeah, I think around 180, 190 could be a good price to enter.
Is it a good time to enter Tata Chemicals and hold it for the long term, Avinash?
No, I think Tata Chemicals, I think one should wait for a couple of quarters. As of now, no buying advice.
Okay, Deep Industries is the next one. The viewers got 35 shares at the levels of 478. Jassi, by the way, is asking this question. Wants to know from an 8 to 9 month perspective, can he continue to hold? Vaishali, your view?
Hold.
Is it a good time to re-enter BSC for K Kumar? Is what K Guru actually is asking this question. He had earlier bought it at 3,100. Vaishali?
Accumulate.
Can I buy Paras Defense at the current level? Is the question that we have from one of our viewers. Vaishali, your view?
Buy.
Suman's holding DLF, bought at 608. Avinash, should he continue to hold?
Yeah, he can continue to hold.
Okay, the next one is on Tata Motors, commercial vehicles. Is this a good time to buy? Shankar from Bengaluru is asking. Avinash, your view?
Yeah, I think he could look at buying in an SIP way, but definitely buying advisable.
Apollo Microsystems bought at 238. Avinash, should our viewer continue to hold?
Yeah, she should continue to hold.
Okay, NTPC for the next 5 years. Is this a good hold, Avinash?
So I think in power generation, I think Tata Power or maybe something like a Torrent Power could be better.
Is it a right time to enter Suzlon, Vaishali?
Yes.
Is this the right time to enter Wipro? Is the question that's coming from Madesh, who's writing us from Tamil Nadu. Vaishali, your view?
I would say go on for persistent or things like that.
All right. Okay. Okay. So that's the view coming in on Wipro. But with that, viewers, that brings us to the end of first rapid fire round. But we'll take up more on the other side of the break. So do stay tuned.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
एनडीटीवी का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब डेट पे हमला होगा तो तभी आजकल चल क्या रहा है सिचुएशनशिप आपको पता क्या होता है कभी मैं कह नहीं पाया
इट्स ओके यार
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज करता हूँ।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice.
The latest trends. It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame.
Welcome back. You're watching Ask Profit right here on NDTV Profit. The next question that's coming in is on ITC. Now, our viewer Madhav from Hyderabad is holding 133 shares at 364. So he's currently sitting on a loss, asking a long-term view. Avinash, the theme likely a little changed now, right? It's more like a defensive play now in this wartime that we are seeing. Do you think that still doesn't make the cut, given what we see in the industry, the increase in tax rates? What would you recommend right now?
No, I think Puneet, at these levels, the downside for ITC looks, almost discounted in the price, and I think the company has also taken some price hikes. So that also could possibly help them regain their margins, possibly not in the March quarter, but at least in the April to June quarter. So my suggestion is that he needs to hold on for the next 12 to 18 months. This is a defensive play, and in this kind of market offers a little better protection as compared to the other alpha, high beta names. So definitely hold on, but I think he could also average if he wants, but take a 12 to 18 month view.
Okay, so that's a constructive view coming in for ITC, but we've got our next caller. Geeta is calling us from Bengaluru. Geeta, hi. A very good morning to you. What's your query about?
Yeah, I'm holding Anantaraj 61 shares at the rate of 518.
Okay.
So is it good time to add more? This is for a long term, maybe 1.5 years or so. So can it give a good returns in long period?
Sure. I'll ask your question to Avinash. Avinash, everything, all buzz going around data centers has, kind of made this stock pretty volatile. What's the view like?
No, I think, investors who invest in this stock, I think need to take a slightly longer term view. The stock has been under pressure. But one thing is very clear that this is one of those, rare companies which has got a mix of real estate and data center business. On the data center business, they are putting up a 300 megawatt data center capacity in, North India. And I think demand is growing very rapidly. The government has also announced that by till 2047, these centers could get tax benefits. So my sense is that if the investor, buys in at the current level, which is currently weak, he needs to take at least a 12 to 18 month or maybe a 2-year view, because data center business is going to grow rapidly. In the short term, there could be volatility, but in the longer term, the business fundamentals continue to be very rock solid.
Got that view, Avinash. But the next question that we're getting is on HAL, another stock that's been down and out in that sense. And, Vinayak actually writing in from Dubai, hope all is well, Vinayak, at your end as well, is holding shares at 4120. Now, Vaishali, he's already holding 30 shares, asking if he should add more at this juncture. Would you recommend that trade?
No, I would say so, because HAL technically 3800, 3500 is a very good support band. So I would say that yes, a lot of erosion has taken place. Start buying from here at every dip.
Right, so that's the view coming in on HAL. We've got our next caller. Ajay is calling us from Mumbai. Ajay, what's your question about?
My question is about Sai Life Sciences.
Okay.
I've taken 300 shares and I'm looking forward to accumulate. Is it a good share? Because I find a good chart structure of this share and as well as fundamentally it's very sound. I would like to have both technical and fundamental view on this.
Okay, I'll take this up with Vaishali first. Vaishali, your view on the charts?
Yes, of course, chartically it looks very promising and already gone high. So I would not be so very aggressive to buy at these levels, but I would rather wait for a dip, maybe around 900 level. That would be making me feel comfortable to, if long term is the perspective, and look for higher targets because the trend is very good.
Got that. Sorry, you are.
Yeah, Avinash, any view on this one? Because he wanted a fundamental view as well.
Yeah, I think here, unless the investor is a long-term investor and can take the volatility in his stride, I don't think in the short term the stock has got any near-term trigger. But yes, if we can hold on for the next, say, 18 to 24 months, a couple of years, I think then a decent risk-reward can be expected.
Got that view, Avinash. But, Aarti Industries is another counter that we're focusing on, and Akshay from Mumbai is holding 45 shares of this counter, bought at 462. Now, Avinash, actually, let me come back to you on this one. Been a volatile counter in that sense. What would you recommend for Aarti Industries at this point of time?
No, again, it's a long-term kind of call, Puneet. I think, these kind of companies have got a very solid order book, a very good revenue visibility. But in the light of the, the geopolitical kind of tensions, there is a possibility that in the short term, the stock could underperform. But yes, in terms of fundamentals, I think the chemical sector is turning around. They have a very good large order book. So I think one can take a long-term view, provided one can face the volatility in the short term.
Okay, the next one is from Ishwar, who's writing us from Kolkata, asking about Avanti Feeds. He says he's a long-term investor, wants to know if he can go ahead and invest in this counter at the current level or some mid-cap stock, to build up his portfolio. Avinash, I'll stick with you for this one. Avanti Feeds or any other mid-cap stocks that you're liking right now?
No, I think Avanti Feeds is a good company, but at these levels, I think fresh buying is not advisable. I think we continue to be positive, Mahima, on the banks, especially the PSU banks, something like a Canara Bank or maybe a Bank of Maharashtra. These businesses are more safer and less volatile. And I think it's business as usual in India. So I don't think, businesses or quarterly numbers for these companies are going to be impacted. So I think rather than putting your money on something which has got a large exposure on the US market, a Canara Bank at the current levels or maybe a Bank of Maharashtra would be definitely be good choices both for the short to medium term.
Avanti Fee is a very interesting counter in that sense because traded between 400 and 600 for almost 4 years till the FTA started to come, and since then a one-way rally for this counter. The 5-year chart of course reflects that, but the 1-year chart will tell you the real picture for Avanti Feeds as well. But another caller actually coming in from on Suzlon now, and Ram from Andhra Pradesh has this particular question. Ram, good morning, welcome to the show. Go ahead.
Good morning. Good morning.
Good morning, Ram.
Now I am holding 20,000 shares of Suzlon at the rate of 48. Can I average at what rate I have to average this company?
And Ram, can you hold on to this counter for a little while, or are you looking to just average out to reduce your losses? So I can take that question then with Vaishali if it's a good time to average. Would that be okay?
Okay.
Vaishali, you had suggested, I think, the rapid fire round that it's an interesting one to look at now, but he's already holding 20,000 shares at 48, down almost a lakh and a half. What price can you look at to enter now?
So I would say technical support is at 36, 38 levels, and we are pretty much close to that. So if fundamentally the view matches, I think this is a good level to start buying again to lower down your cost.
Okay, all right. So that's the view coming in on Suzlon. We've got our next question from Mr. Kumar, who's writing us from Bengaluru, asking about LNT. He wants to know if he can, kind of know an entry price for this particular counter. Avinash, I'll come to you on this one because it has exposure to the Middle East to a lot of extent. To a lot of extent, it's been falling since the past, couple of days since the war news has come in. What should an investor do right now who's holding LNT, and do you think this is a price that one can enter into?
No, I think for an investor, L&T is a kind of a company which can give very good returns over the next, say, 12 to 18 months. So I think, the near-term volatility is something which investors have to obviously face in this market. So they should continue to hold. I don't think they should do any panic sell-off unless they require some emergency kind of funding. And as far as new buying is concerned, I think between 3,500 to 3,800, it could be a good level where one could start buying. I think one cannot predict the price exactly, but around 3,500 to 3,800 is a good level where one can start nimbling, maybe do a small SIP kind of buying approach. That would definitely give a better risk reward in the longer term.
Avinash, you don't expect any kind of margin impact because of the fixed nature of its orders, because that's been one of the key concerns, right? Because while the order book is more long-term in nature, there could be some impact because of the fixed-term nature of its contracts. Is that a concern that you feel, or is it something that the company's lineage provides confidence on?
No, I think some margin pressure, Puneet, will be there, but I think this will not be extended more than maybe a couple of quarters. Because the management is also very clear that they know how to ensure that how they recover their fixed costs. And I think once the sentiment changes, the geopolitical condition changes, I think you could see a good bounce back in this stock. But yes, 3,500 to 3,800 could be a good level to actually start nimbling. We exactly don't know what price the stock will finally settle down. But yes, 35 to 3,800 is a good buying area.
The next caller, dialing in from Shimla now, Vinesh has a stock query for us. Vinesh, good morning. Welcome to the show. What's your query?
Sir, I have TCS 50 shares at 2791. And I want to have a long-term view of 1 to 1.5 years, whether I should hold or sell it now or add more at this level, level.
Got your question, Vinesh, but Avinash, a year and a half, given what's happening with IT now, might seem more short-term than long-term, right, at this point of time. But what would you recommend Vinesh to do? He's holding shares at 2791. Should he average down, continue to hold?
I think it's better to wait for maybe another quarter or so. I think we need to get a little bit of clarity as to how the company is positioning itself, considering now AI is very much talked about. So I think at these levels, it's better to hold, wait for the March quarter. And I think hopefully after the full year numbers are out, we could get better clarity. And I think probably that could be the right time to look into buying fresh into TCS.
Okay, all right. So that's the view on TCS. The next question is on MCX. Sunil from Pune is asking this question. He's got 60 shares. But he already has 60 shares, but he wants to know the right level to enter at from a short-term perspective and target and stop loss as well. Vaishali, of course, the stock has been buzzing on the back of the crude futures and options volume coming in. But your view on the charts?
So to say, actually, it has not really damaged the trend. So even now, today, if we are looking at it, I think 2400 acts as a very good support. So keep that as a stop loss and buy.
Got that view, Vaishali. But another caller now from Bengaluru, Vinod, has a stock query for us. Vinod, welcome to the show. What's your question?
Yeah, I have Muthoot Finance 90 shares. At the price 3,570.
Okay.
So we have to hold or at the book loss.
And Vinod, was this more of a long-term bet or a short-term bet?
Around 6 months.
Okay, got it. Vaishali, then I'll come to you for Muthoot Finance. Vinod's bought at 3570. What should he do with this counter now?
So I would say, of course, the trend is damaged, but I think 3200 is a level to watch for. Can probably, because overall, if you see, it's a good company and the trend is still, I mean, the bullish view still is maintained. So I would say add more at 3200 and wait for it to turn around.
Okay, all right. So that's the view on Muthoot Finance. But viewers, time to slip into a very, very short break. But we'll be right back answering all your queries on the other side. So do stay tuned.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है? कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
Welcome back to Ask Profit right here on NDTV Profit, the last 15-minute stretch of the show. So do start sending in your queries if you haven't already. But the next question, it's another tough one on Dixon Tech. Now, Anita Reddy actually bought it at 11,400. She's asking if she should hold on or exit or consider adding more shares at this point of time. But, Avinash, let me come back to you. On Dixon Tech, what would you suggest? It's been one where it's been a difficult one to actually call for both analysts, investors, shareholders. Is it a good time to add now?
No, I think, Puneet, the stock is corrected from higher levels of 18,000 and now the stock is trading at around 98.50. my sense is that it's better to wait for a quarter and no fresh buying is advisable because see in the EMS space now there are not many big triggers. Almost everything is discounted in the price. And I think even at these levels, the valuations are not cheap. They are fair to expensive. So I would say that, at least for a couple of quarters, let's wait for the company to perform and, deliver better numbers. And only then fresh buying can be advisable. So I think better to hold, but no fresh buying advisable at current levels.
Okay, the next one is on Swiggy. Preetham Chatterjee says that he has 1100 shares at the levels of 415. He wants to know if he can buy 900 more shares and average out at the current levels. I mean, he's bought at elevated levels for sure. The stock is currently trading at 295. Avinash, I'll stick with you for this one. Your view on Swiggy, because Kotak recently added this particular counter to their portfolio, but have slightly cut the target price considering competition. What's the view here?
No, I think here also I would suggest that it's better to wait for a couple of quarters. See, I think the way Swiggy has been recording losses, my sense is that even at these levels, valuations look little elevated. So better to hold. If he wants to buy in, wait for the March quarter. And I think that would be a good time because obviously the March quarter is also unlikely to be great. So probably he could buy it at maybe lower levels and he can average down better.
Vaishali, actually just a quick follow-up on Swiggy. You mentioned Eternal could be very interesting at this juncture. Does that view stay on Swiggy as well?
Technically deeply oversold. So, and today we are seeing that there is some strength coming in Swiggy as well as Eternal. But market is such that you cannot vouch for these levels. I mean, the support levels do break easily. So I would say accumulation, at this juncture, I would definitely not suggest for a short term or, trading strategies. But these dips are good opportunities to add to your portfolio. So yes, I would say start accumulating.
IRCTC is the other one that Sameer is asking a question on and asking if it's a long-term bet. Avinash, a quick view on this one as well?
So here also, Puneet, I think the stock has done nothing in the last 2 years. I think clearly, the internet business has also plateaued because most of the population has been covered. And most importantly, I think the markets want to see very strong numbers. In fact, in the last conference call, the management hinted that on an annualized basis, top line will grow by just 10%. Now, this is not something which is going to excite the market. So I think it's better to wait for Q4 numbers. No fresh buying advisable.
Okay. All right. The next one is on Afcons Infra. Viraj from Bengaluru wants to know if this is a good time to average. He's holding 150 stocks at an average price of 373. Since the IPO, he's been averaging this counter is what he's saying. Avinash, your view on this one?
Mahima, I think Q3 numbers have been very bad. Profitability has taken a big hit. And I think, unless we see better execution and better margins coming back, normally the fourth quarter is supposed to be a very strong quarter. So I would prefer to wait for the Q4 before making a fresh commitment.
Got that view. And the infra space, definitely out of investors in the radar as of now. So Afcons continues to be at 52-week low at this point of time. But another caller now dialing in from Delhi. And Nitin has a stock query for us. Nitin, good morning. Welcome to the show. What's your question?
Good morning. I have about 1 crore rupees surplus money left with me.
Okay.
Ready for deployment. I wanted some stock ideas where I can deploy this. I did buy LNG today at 3800. I'm looking to buy CAMS at about 625.
Okay.
And some other ideas I can get. Warren Beverages is something I'm looking at. CDSL, BSC, and DLF at about 520 if it comes. But some ideas will help.
And Nitin, are these all long-term ideas, Nitin?
12 years. Yeah, 10 to 12 years.
Okay, long-term ideas. Got it. Avinash, he's listed out a few stocks, but a couple of them, Varun Beverages, DLF, I think DLF we did speak about, and you've given your view on CDSL as well. Anything that he said that comes on your radar, or what would you pick right now for the long term for the next decade?
So I think Varun Beverages definitely should do well this year. Last year the winter extended a little more, so the business was impacted. So Varun Beverages at these levels definitely seems to be a good bet. I think if you can consider the next 12 to 15 months, and hopefully, I think the first half of this year is going to be a kind of a very solid year for Varun Beverages. But I think, stocks like Mahindra and Mahindra, Indian Hotels, or for that reason, I think even companies like, Tata Motors, and if he has a slightly longer term horizon, these could be very good defensive bets at the same time could offer a decent risk reward. So I think M&M and maybe, Indian Hotels, which has been beaten down, I think one could definitely look at accumulating.
The next one is, also in that Alcobev space. Aniket from Karnataka is asking about Piccadilly Agro. He says if this is the right time to enter from a long-term perspective of 4 years, or any other stock that you're liking in this space of, Alcobev. Avinash, your view?
I think my sense is, see, this is a stock which has been very volatile, but I think within the liquor space, something like a Radico Khaitan or maybe a United Spirits, these could be better bets. I think these are large players and they command a much better brand premium, and obviously are there in the B2C kind of segment. So maybe these companies, if one takes the next 2 to 3 years, definitely a decent amount of money can be paid.
Got that view, and the numbers for Radico Khaitan has been very strong. Citi also had a note on beverages today, talks about the positive outcomes that he's seeing on the Alcobev space as well. And Varun Beverages is one of the top picks as we discussed in the previous question. But the next question coming in from on JM Financial actually, and Manoj from Hyderabad is asking if he should buy into this counter right now. Vaishali, would you recommend that?
Which one? JM Financial?
Yeah, JM Financial.
I would say, wait, because the trend is down. It can go to 115, 110. That would be a level to buy.
Okay, the next one, in fact, we've got a caller. Nishad is calling us from Mumbai. Nishad, a very good morning to you. What's your query about?
Yeah, I want a 1-year view on RateGain Technologies. And also, can you give me levels like stop loss or their target?
Sure.
If it's sold. Yeah.
Okay, Nishad, got your question. Vaishali, RateGain is the counter. Your view on this one? What is the kind of target and stop loss that you're seeing on the charts?
So I would say RateGain is also weak. I would say exit.
Got it. Got your view, Vaishali. But time now for the rapid fire in this edition of Fast Profit. Vaishali as well as Avinash, the drill. The first question that we're taking in this rapid fire round is on M&M. Now, a 2-year horizon, a good entry point. Would you suggest that, Avinash, it's now a year, given that the base will be quite high next year? Is that any of a concern?
No, I think one can definitely buy into the stock. I think use an SIP approach to gradually add positions.
Okay, MV Photovoltaic, a recent listing. Vivek wants to know if this company is good to invest in. Avinash, any view?
Yeah, I think longer term, if somebody has a 12 to 18 month time frame, one can definitely buy.
Olectra Green Tech is the other one. Avinash bought at 1175 by a viewer. Got a new order win also recently. Is it now on your radar given the management change amongst other key factors?
Yeah, I think long-term prospects continue to be good. So continue to hold.
Okay, Greaves Cotton is the next one. Ramesh wants to know from a short-term perspective, can you continue to hold 3 to 6 months? Vaishali on the charts?
Buy.
On Tata Steel, Vaishali, what would you recommend? Is it a good time to enter? Is what Raja is asking.
180.
Okay, Zydus Life Sciences is the next one. The viewer is asking whether he can hold for a very long-term perspective of 5 years. Avinash, your view?
Yeah, he can continue to hold for the next 12 to 18 months.
Sirma SGS bought at 873 by Yogesh. Avinash, there are some concerns on export share being quite high for the company, but what would you suggest?
No, I think it's a hold at the current level.
Raymond Realty is the next one. From a 6 months time horizon, can Ramesh continue to hold? Vaishali, enough data on the charts?
So Raymond Realty continue holding, strict stop loss of 405.
BEL bought at 251 by Mahalakshmi and she's holding over 1600 shares right now. Asking if she should add more now or book some profit. She's 67 years old and a long-term investor. Avinash?
I think if she's got a time frame of 12 to 18 months, she should continue to hold. The long-term trajectory looks very good.
Infosys is the next one. 85 shares bought at the levels of 1760. Average or hold? Vaishali, your view?
Hold.
Central Bank of India or M&M? What would you prefer, Vaishali, for a short term is what Divya is asking.
M&M.
Okay, the next one is on Bharti Airtel. Bharat is bought at the levels of 2100. He wants to know if he can continue to hold. Avinash, your view?
Yeah, I think keep a time frame of at least 18 to 24 months.
Is it a good time to book profits in Ashok Leyland? Is what Suman is asking. He's up 58%. Avinash, what would you suggest?
yeah, I think he should book part profit and continue to hold the rest one.
Okay, Shankar wants to know if you can buy IDFC Bank at the current levels, planning to add 1,000 shares. Vaishali, would you say yes to that?
Technically, 68 is the support.
Network Tech for the long term, the next 10 years, Avinash, would you suggest that buy?
I think better to wait for some time. I think buy on dips, not at the current level.
Got it. Well, that's the end of the rapid fire as well as this edition of Ask Profit by Avinash as well as Vaishali. Thanks so much and helping us solve the 64 queries that we have in this last 1 hour with a management conversation. So I would say, Mahima, that's a good number on a day where there has been a lot of volatility given in the Sensex and in the Nifty 50. But viewers, stay tuned. If we have missed your query, we will start taking them at 2 p.m. live on Ask Profit, the afternoon edition. And of course, for Mahima, we'll try and get that 100 mark as well.
Exactly what I was trying to say.
But all the time on this show, KYC comes up next.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
बिटिया की शादी है हमारी।
बधाइयों बधाइयों।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं। The stage that brings together India's most compelling creative voices.
एनडीटीवी का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है? कभी मैं कह नहीं पाया।
इट्स ओके यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
First India tour. Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and this is one of the most loved KYC shows as I get you interesting companies which can be newly listed or maybe something which the street is talking about. But I'm not going to give you very easily. I'm going to give you some hints. Try to guess it. What's the company which we'll be talking about in KYC? The first one is it's a manufacturer of renewable energy products. First hint I've given you. Let's talk about the second hint. Surya Kumar Yadav is the first brand ambassador. Of course, the company is having a couple of more brand ambassadors and that includes Anil Kapoor as well. That's Jackass. But let's talk about one more hint, and that is it's listed recently on November 20, 2025. But has that company given money to the investors in the IPO? Well, I don't think so. It's down 22% from the IPO price. And of course, we had given you in the socials also some images which you could have decided what this company is all about. There are a couple of brands to it, but the company in focus is Fujama Power Systems. And of course, they have another brand called UTL Solar also. So, दोनों brand में आप confuse मत होइएगा. But why are we getting this company? This was recently listed. Why is the company coming? Is it different from the solar theme pack? Because solar theme pack seems to be out of favor of the market. The global freight price, that is rising. Now, will this procurement price from China rise because of that? That is the first question I would like to ask. The second one is the subsidy-based business. Has the order slowed down? Remember that B2G risk is always there for a company in the solar industry, or is the company hedging for its B2C business? These are the questions we will be asking Fujama Power. Interesting number is the 18.7% Q3 margins coming in. Is this sustainable? If yes, ये क्या backward integration का जादू है? That's the question we'll be asking. And the capacity expansion plans, capex and the distribution, are they playing in the tier 2, tier 3 cities? All our viewers in Indore, you could say in Punjab, in Jaisalmer, whoever are there in tier 2, tier 3 cities, are you seeing their products near your houses or your neighbors? That's something to ask about. And the progress on the ramp up of the Dadri line. These are the extension I'm talking about, the new manufacturing facilities which start coming up. So these are the key questions we will be asking Fujama Power. Of course, there's a lot of interest on it. A lot of you have written to me about it, but let's take it slowly. Of course, any fundraise plans, if it comes in, because promoters have a good stake, maybe they can dilute going ahead. But to give in all the details, we'll have Pawan Garg, the founder and joint MD of Fujama Power. He'll be on the show. He'll be clearing most of our doubts on all the questions we have raised. But let's talk about the company, how important the company is all about. Is it different or is it just the same? Let's go into this layer by layer. It's an Indian solar solutions company. It was established in the year 1996. So it's not a new company. 30 years already in the industry, has 4 existing facilities and 1 extra facility I spoke about. That was the Dadri facility which we are talking about. And yes, new facility is coming from Ratlam. It's in Madhya Pradesh as well. Also, apart from this, let's look at the total coverage, and that is what something which has taken my eyes, especially the 6,300 dealers, and they are focusing on tier 2 and tier 3 cities. That is where the magic might lie for this company. They are not targeting tier 1 so much or the exports. So this is where the story of Bharat might play out. 90% revenue comes from the B2C segment. That is pretty much decent because a little bit of pricing power can definitely come in here, but overall the industry overcapacity is there. The key focus, of course, I've spoken about it. This is where the focus lies on. And one more thing they have written is off-grid. Off-grid means non-subsidy. Non-subsidy means payment का जो issue है, that can be sorted because ये government से नहीं आ रहा है. But what are the key products to look at? There is solar power generation. This is one of the key first projects which have come in. Then there is solar cells, there is power supply and lithium ion batteries also. So the entire ecosystem comes in. Of course, these are the new ones. I'm talking about around 1.5 gigawatt manufacturing capacity is there in power electronics and batteries. But look at kya extension hai, that's around 2 gigawatt. That means let's add it up to make it simplified for you. Totally it's 3.5 gigawatt. That's what the company is targeting. Capacity levels की तो बात हो गई. But क्या target है? This is very much important, and they are establishing the south and east. ये north की player जो है, if you see in your houses, near your houses, this is where the brand comes in. But south and east, these are the new areas. And remember, east has a lot of tier 2, tier 3, tier 4 cities and towns. But why is the market not giving so much premium to the solar theme? The first is higher priced IPOs, mispricing at times, and that's what the retail complains. The second one is excess dependence on China for procurement. That has been a big question mark for all the solar players, and now they are focusing on their backward integration. The international raw material pricing, that has turned very volatile, and especially the uncertain tariffs which comes in, especially from US, that's where a concern comes. But all in all, if you are in solar industry, there is a B2G, business to government risk and particularly on the payments and the order flow. Kab payment aayega, kab order aayega, there is always a lumpiness in it, and that's the business nature of it. The global overcapacity at times and the reduced pricing power, that is where the solar theme becomes a question mark for investors. But to remove that question mark, I'm going to get into my KYC show and I'm going to give you 8 parameters where we'll judge the company and we'll try to figure out isme naya kya hai. First one is income statement, balance sheet, cash flow. These are the 3 holy grail of numbers which we have to talk about. Return ratios, how much the ROC numbers, ROE numbers have come in. Looking at shareholding, remember, this is a newly listed company, तो कोई बड़ा trend आपको नहीं मिलने वाला. You'll just get something which is there in the December quarter. Street cred, only IPO तक के details और अभी तक. And valuations, we'll compare with a lot of companies which we have discussed all across on social media and on TV as well. And outlook, industry क्या कहता है, company क्या कहता है. These are the 8 rating parameters where we'll talk about it. But let's talk about the first one, income statement. It's one of the most important statement to look at. Revenue, EBITDA, profit, these 3 are there. You can look at it. Over here, the 3-year CAGR, all of them going past the 40% mark. This is something you should be looking at as a long-term fundamental investor. And overall, it looks very strong numbers. But abhi numbers kya hai? Third quarter, let's pull out the numbers and see what has happened here. And has the company performed or not? The Q3 numbers have been on the stronger side, and I had mentioned you about that 18.7% margin. So keep that in mind. And this overall income statement, I will give a strong thumbs up. Let's talk about the balance sheet, and balance sheet is where my concern starts coming in because it's an asset heavy business. Company backward integration कर रही है तो debt बढ़ रहा है, and this is coming after the IPO. That's where the question comes. It's around 346 crore that's coming for FY25. Has that reduced a bit? We'll ask that management. It's roughly 470 crore since the last time I heard in the con call. But nevertheless, debt reduction plan, is there any, or will the company take more debt? So that is why, to balance things out, I have to give a neutral rating for the balance sheet. Remember, the debt figure is around 470 odd crore. We'll ask the management about this entire detail. But cash flows is very much important. And of course, operating cash flows, that has actually come down in FY25. That means there is lumpiness in the business. And I told you, at times, even from B2C customers, at times there is a late delay in payment also comes in. That's something we'll ask the management also. How does this model work, B2C versus B2G? But let's look at that. Operational cash flow to PAT, that has also come down, and that's where the concern comes in. So right now, just to judge the FY25 numbers, I have given this a negative rating for cash flows. But let's talk about return ratios. ROC. ROC means return on capital employed. How things have moved around, and ROC numbers, looking at it, it has gone up from 18% to 21% matter of 2 years. In FY25, it's at 39%. Will they sustain these return ratios going ahead? Why? Because the company is taking more debt, maybe for the expansion. And if it takes more expansion, some return ratios might be under pressure. This is just mathematics. But net on the past data, it is very strong, and I've given a strong thumbs up when it comes to the return ratios. Let's talk about the shareholding, and remember, we have to be very fair to the company. There is no major trend. This is just one all. 2% FIs are there and DIs are almost 5%. So over here, there is a scope of, you could say, some kind of increase in FIs and DIs, but currently entire sector is out of favor right now. So there might be some bargain hunting, but there is some kind of a big correction happening. But promoters are having healthy 87% stake. Remember, by SEBI regulations, this is supposed to come down to 75% in the next 3 years. So promoter sales, fundraise, you can expect that for an asset heavy company like Fujama Power. So net, it's a neutral rating. Let's give it more time. But let's talk about the street cred. IPO was in November 2025. That means almost 2.5 months it has been. But from the IPO price, market condition bhi dekh lo, it's down 22%. Okay, others have also corrected, and I'll get you that picture as well. Last 1 month also, stock is down 16%. So for a short period of time, of course, for the IPO people and the people who have entered post the IPO, you haven't made money yet. That is why I've given a thumbs down when it comes to street cred, but we need to wait it out and see what happens in the future. And when the next time this company comes on KYC, we will judge them on much more longer time horizon. Let's talk about the valuations. Valuations is more important here. I'll tell you why. Most of these solar themed stocks are down by almost 60 to 80% in their valuation from the peak levels. That's where the interest had come in the markets. But now what has happened? There are bigger names, Vari, Premier, they are still at the 30s, but they were trading almost at 90, 100s. Insolation is 16x, and over here the company is still maintaining a little bit of premium against its peers. If you could just show the other companies also, apart from Insolation, and that is what I'm talking about. But Fujama Power is still at 28 times. Feel it's decently priced because company has that tier 2, tier 3 exposure they are talking about, mostly domestic it is, and the distribution is their strength. That's what they have been constantly talking about. So it's a neutral rating when it comes to the valuations when the peers come in. Let's talk about the outlook, how things are moving in outlook, and of course there are a lot of concerns here. See, the long-term story is definitely there. Government is all giving good policies, but these things take time and you need to be a long-term investor, say 5 to 8 years of horizon if you are actually interested in this industry. Now the industry itself, 40 to 45 CAGR is projected for the rooftop solar market, how things are growing, and the Bharat, that is where the strength we are looking at. The supply chain risk from China, that is where the concern comes. Almost 90% import of the total imports, whatever that comes in, it comes from China. And this is not for this company, but this is for the entire ecosystem. That's why everybody is focusing on the backward integration and the key products are taking place. And we'll talk with the management about how these key details are happening. Also, apart from this outlook, apart from the backward integration, the rising raw material prices and the company's pass-through mechanism. कितने महीने में जब दाम बढ़ा तो कब वो प्राइस जो हाइक है या कम हुआ है, कब pass through करते? That's a very important question because we see all these numbers quarterly basis, and the most important thing is the B2G business risk in any kind of a field. Remember, 90-91% revenue comes for the B2C segment. So outlook, it's a neutral. Let's look, go ahead and see how things happen. But let's talk about the ratings, how actually things are panning out, and largely we see the income statement is very strong. Q3 numbers, the margins were really good. Balance sheet, it's neutral, but the debt remains a concern, but that's the business model about it. Cash flows, the company needs to prove itself. Return ratios have been good. Street cred and shareholding, the time period you could say is very less. Let's give it more time to understand the company. Valuations are decent right now because the entire sector has corrected, and outlook also. Long-term specific, everything is good, but of course short-term basis there are question marks. So a neutral rating for my analysis in a general show, we give almost 4 to 4.5 for the most of the companies, and this is, you could say, in the middle. Even Stevens, 4 out of 8 for Fujama Power. Of course there is couple of new things against its peers which I really like, and we'll discuss about that. But joining us would be Pawan Garg. He's the joint MD at UTL Solar. This is their brand, Fujama Power. In 1996, he had founded this company. Now he has more than 30 years of experience in this space. It's not new for him. So of course, anything new which comes in, he'll share with us. And joining us is Pawan Garg. Good afternoon, Pawanji. Always a pleasure talking with you. I'm seeing both the brands of UTL and Solar on your shirt. So I'm like, ये दोनों brand एक ही है, right?
Yes, sir. Yes, sir.
Okay.
Thank you, sir ji. Thank you for the opportunity.
जी बिल्कुल. Pawanji, the first question is definitely going to be on the Q3 numbers, and that margins was something which came in my eyes. That was almost 19% up. Now for a business model like yours, of course, there's a blended basis. Do we expect that to touch the 20% mark because of this backward integration? And if yes, timeline बताइए.
You will see in coming quarter. Definitely, your wish will be completed.
All right, but just one more query on it. Like, what are these margin growth levers? Like, what things are happening? In fourth quarter, okay, we can expect a 20% margin, but what are the growth levers that margins बढ़ेगा इसके कारण?
Okay, sir. Major thing is backward integration and operational efficiency. And one more thing is we have end-to-end solution, basically. End-to-end solutions means from R&D to development to production to marketing and to distribution and services, after sales services. So we have end-to-end solution, and because of that, and we have complete solution included power electronics components, that is inverters, solar inverters, storage, that is power batteries and solar batteries and solar panels. We have complete solution, sir.
And Pawan ji, another question is the amount of global geopolitical tensions are happening. Of course, there is some procurement which comes from China as well, and there is a raw material pricing impact also. Just two important queries, and then we'll get back to the business model. Is that have the procurement prices been impacted because of the higher freight rates? And secondly, are the raw material costing price also going up? And if yes, what is the pass-through mechanism?
So, Saraj rate is very low percentage basically of raw material, and you will see 75% is our domestic procurement, only 25% is import. So, if you see ke total import is very less, against freight is very less percentage of total raw material part. And second thing, if price fluctuations are there, all the market, what happens, they pass on to customer basically. This is market trend basically.
Right. And Pawan ji, apart from the margins, apart from how the situation has happened, अगर पूरा बिजनेस के बारे में बताना हुआ डिस्ट्रीब्यूशन को लेके, दैट इज वेयर आई फील देयर इज अ बिट डिफरेंट देन योर कंपटीटर्स. आपने टियर 2 टियर 3 के बारे में बहुत बात किया है. पवन जी, इस एक्सपेंशन प्लान के बारे में बताइए कि किस तरह आप जाने वाले हैं और क्या कंपटीशन रिस्क भी आ रहा है आपको आपके पीयर्स के साथ देखते हुए, बिकॉज एट टाइम्स ये कमोडिटी वाली बिजनेस भी बन जाती है बिकॉज देयर इज अ लॉट ऑफ कंपटीशन हैपनिंग. व्हाट्स योर व्यू ऑन दैट? क्या एक्सपेंशन प्लान रहेगा?
देखिए सर, अपॉर्चुनिटी बहुत बड़ी है मार्केट में. मेन चीज ये है, 96 से जब हमने शुरू किया, अगर हम देखेंगे तो हमेशा एक अपॉर्चुनिटी को हमने पहले से जज किया और उस पे हमने काम किया और सॉल्यूशन मार्केट के लिए लेके आए. मार्केट में जो प्रॉब्लम्स है, दैट इज अपॉर्चुनिटी फॉर अस एंड वी वर्क ऑन दोज अपॉर्चुनिटीज. तो हमारे पास काफी सारे प्रोडक्ट्स ऐसे हैं जिसमें के हमारे पास जो यूनिक प्रोडक्ट्स है और हमारे पास मोर देन 500 SKU है जो कि मार्केट में सबसे बड़ी रेंज मानी जाती है अपने आप में. और बेस्ड ऑन कस्टमर्स एप्लीकेशंस एंड बजट वी हैव डिफरेंट सॉल्यूशंस. तो वहां पर जो हमारे पास एक मोट है प्रोडक्ट पोर्टफोलियो का, तो वो हमारे को मार्केट से अलग बनाता है.
और पवन जी, एक और सवाल आपसे पूछना चाहेंगे, क्योंकि आपकी जो एक दादरी की प्लांट है और एक रतलाम की प्लांट है, इनके इम्पोर्टेंट जो है अपडेट बताएं, इनके जो है जो प्रोग्रेस हुआ है ये बताएं, और कब जो है आंकड़ों में आप कहेंगे कि इसमें थोड़ा इंक्रीमेंटल बेनिफिट आ सकता है, ये बताएं. ये आपके दो प्रोडक्ट, एक दादरी लाइन है और दूसरा है रतलाम जो मध्य प्रदेश में, बताएं.
ये सर, तो सर अगर आप देखेंगे हमने 96 से शुरू किया तो हमारा जो एवरेज ग्रोथ रेट रही है वो 50% की हमारी ग्रोथ रेट रही है. अगर आप लास्ट 5 इयर्स का भी अगर आप देखेंगे CAGR, तो 50% का हमारा CAGR रहा है. और उसी में अगर हम देखें, अगर फ्यूचर में हमें वो ग्रोथ रेट मेंटेन करनी है तो हमें एक्सपेंशन तो आगे के लिए देख के चलना होगा. तो हाँ.
और पवन जी, एक एक्सपेंशन के बारे में तो बात हुआ, लेकिन कुछ कैपेसिटी एक्सपेंशन, कैपेक्स, अगर अगले साल का कैपेक्स का कुछ अमाउंट आप रखे हैं और डिस्ट्रीब्यूशन प्लान्स किस तरह आप अपने नेटवर्क को बढ़ाएंगे, जरा उसके ऊपर भी थोड़ा सा झलक दें. तो
सर पहले वाला क्वेश्चन मैं एक बार कंप्लीट कर लेता हूँ. जो दादरी वाला है, हाँ जी, जो दादरी वाला प्लांट है हमारा, वो कमीशन हो चुका है ऑलरेडी जनवरी में, और इस क्वार्टर में हमें उसका नंबर्स के रूप में बेनिफिट मिलता हुआ नजर आएगा. क्योंकि आप देखेंगे कि हमारे पास अभी तक जो बिजनेस है, रूफटॉप सोलर का बिजनेस हमने 2008 से जो डेवलप किया, और अभी पिछले 1-1.5 साल से जो हमारे पास अपॉर्चुनिटी आई, खास तौर से PM सूर्यघर योजना के तहत, तो उस अपॉर्चुनिटी का हमें बेनिफिट उतना नहीं मिल पा रहा था. उसके लिए रीजन ये था कि एक कंपोनेंट होता है DCR सोलर पैनल की रिक्वायरमेंट थी, और DCR सोलर पैनल के रिक्वायरमेंट के लिए एक रिक्वायरमेंट है सोलर सेल की, जो कि इंडिया में बना हुआ होना चाहिए. DCR सोलर सेल होना चाहिए, जिसकी के डिमांड बहुत ज्यादा है और सप्लाई काफी कम है. तो वो जो अपॉर्चुनिटी थी वो हमारे से मिस हो रही थी. जितना भी हमारा अभी तक ग्रोथ आप देख पा रहे हैं, अगर Q3 के नंबर देखेंगे तो उसमें से सब्सिडी वाले बिजनेस का रोल काफी कम मिलेगा. मेजर जो हमारा बिजनेस ग्रोथ आई है वो नॉन सब्सिडी बिजनेस से आई है.
जी बिल्कुल। और पवन जी, एक बार दर्शकों को एक बार समझा दीजिए कि जो सब्सिडी बिजनेस और नॉन सब्सिडी बिजनेस होता है, इसमें क्या जोखिम होते हैं और क्या फायदा होता है, और ऑफ ग्रिड और जो आप कहेंगे कि ऑन ग्रिड होता है, इसका मतलब क्या, ये हमारे दर्शकों को बताएं।
सर बिल्कुल। तो सर मेजर रूप से तो हम दो पार्ट में हम अपने सिस्टम्स को डिवाइड कर सकते हैं, ऑन ग्रिड और ऑफ ग्रिड। ऑन ग्रिड में हम क्या करते हैं, इसमें जो एक्स्ट्रा पावर जो हमारी सोलर पैनल से बनती है, उस पावर को जब हम घर में यूज नहीं कर रहे होते तो हम ग्रिड में एक्सपोर्ट कर पाते हैं, तो उस सिस्टम को हम कहेंगे ऑन ग्रिड। उसके लिए नेट मीटरिंग की जरूरत होती है, लेकिन उसकी एक ड्रॉबैक ये है कि हम उसमें बैटरी नहीं लगा पाते, क्योंकि बैटरी बैकअप की उसमें वो बैटरी बैकअप नहीं दे पाते। लेकिन जहां पर हमें बैटरी बैकअप देना होता है, जहां पर गांव है, हमारे टियर 2 टियर 3 सिटीज है, जहां पर पावर कट्स है, वहां पर हमें सिस्टम ऐसा लगाना पड़ता है जिसमें कि हम अपना पावर बैकअप दे सके, लाइट जाने के बाद पावर को जनरेट कर सके। क्योंकि ऑन ग्रिड सोलर में पावर जब हमारी चली जाती है तो उस टाइम पे हम सोलर की पावर भी जनरेट नहीं कर पाते। रीजन उसका ये होता है कि हमें अपने इन्वर्टर में एक एंटी आइसलैंडिंग फैसिलिटी देनी होती है ऑन ग्रिड में। जब हम पावर को एक्सपोर्ट करते हैं तो हमें एक सर्टिफिकेशन लेना होता है गवर्नमेंट से, गवर्नमेंट अप्रूव्ड लैब से, जिसको हम एंटी आइसलैंडिंग फैसिलिटी कहते हैं। उसका रीजन ये है कि अगर
हाँ पवन जी, आपने ऑलमोस्ट पूरा चीज कह दिया, थोड़ा समय भी कम रहते तो इसलिए हम थोड़ा जल्दी सवाल पूछते हैं।
ठीक है, तो ऑफ ग्रिड में हम बैटरी बैकअप दे सकते हैं।
बिल्कुल।
और हाइब्रिड सिस्टम ऐसे होते हैं जिसमें ऑन ग्रिड और ऑफ ग्रिड दोनों का कॉम्बिनेशन।
पवन जी, लिथियम आयन बैटरीज पे भी जो है, ऑफ कोर्स आपका पूरा मेन बिजनेस तो नहीं है, पर उसमें भी आप आ गए हैं। किस तरह देख रहे डेवलपमेंट हो रहा है, R&D की तरफ है कि अभी भी मतलब कवरेज स्टार्ट हो गया है, बताएं।
देखिए सर, लिथियम आयन बैटरी हमने शुरू कर दी थी कोविड के बाद, 21 में हमने शुरू कर दी थी। छोटा हमने एक्सपेरिमेंट किया था, अराउंड 100 मेगावाट का हमने प्रोडक्शन शुरू किया था। उसके बाद लास्ट ईयर हमने 500 मेगावाट का और उसमें हमने एडिशन किया, जो कि हमारी वो पूरी कमीशनिंग हो चुकी थी और अभी हम पूरी प्रोडक्शन कर पा रहे हैं। और इस जो करंट ईयर है उसमें हमारा जो लिथियम आयन बैटरी का जो कंट्रीब्यूशन है वो 25% है, अलोंग विद लेड एसिड बैटरी। तो लेड एसिड बैटरी तो हम बना ही रहे हैं और लिथियम आयन बैटरी भी हम बना रहे हैं। तो नेक्स्ट एक्सपेंशन जितना भी हम कर रहे हैं वो लिथियम आयन बैटरी में ही कर रहे हैं। रीजन उसका ये है कि आने वाले टाइम में लिथियम आयन का जो मार्केट शेयर है वो बढ़ने वाला है।
पवन जी, डेट के बारे में भी आपसे थोड़ा बातचीत करना था। आप Q3 का जो कॉन कॉल था वहां से मुझे ये 470 करोड़ रुपए का आंकड़ा आया था, मैं सही हूं?
आप सही होंगे सर, आपने बिल्कुल सही जी।
हाँ, तो पवन जी जरा बताएं कि ये क्या डेट और थोड़ा बढ़ने वाला है या थोड़ा रिड्यूस करेंगे, क्या होगा अभी?
डेट टू इक्विटी रेशो अगर आप देखेंगे तो वो आप कम होता हुआ मिलेगा आप।
अच्छा, आगे जाते हुए कम होता हुआ रहेगा, ठीक है।
डेट टू इक्विटी रेशो कम होता हुआ मिलेगा।
तो हमने डेट की बात कर ली, लेकिन जो सब्सिडी की बिजनेस है यहाँ पे, मतलब इंडस्ट्री, आपके कंपनी के बारे में नहीं, पूरे इंडस्ट्री में जो है कभी पेमेंट इश्यू हो जाता है, कभी ऑर्डर में स्लो डाउन आता है, तो आप जो है किस तरह देख रहे हैं अभी? करंट चैनल चेक्स क्या बता रहा है आपको पूरे इंडस्ट्री के लिए, बताएं।
तो इसमें 2-3 चीजें मैं बता देता हूँ सर। एक तो ये है कि अभी तक की हमारी जो ग्रोथ हुई है वो बिना सब्सिडी वाले बिजनेस से हुई है। सब्सिडी वाले बिजनेस से जो एडिशनल ग्रोथ होनी है वो हम अब उस अपॉर्चुनिटी को ले पाएंगे। सेकंड चीज ये है कि जो मार्केट में डिमांड अचानक बढ़ी है, मैं ये मानता हूं वो सब्सिडी की वजह से ना बढ़ के सब्सिडी की वजह से जो अवेयरनेस आई है उसकी वजह से वो डिमांड बढ़ी है। क्योंकि सब्सिडी की वजह से अवेयरनेस आ गई है, अवेयरनेस आने से जो अब मोमेंटम आ गया है, मुझे लगता है कि वो मोमेंटम अब रुकने वाला नहीं है। रीजन उसका ये है कि ये
पवन जी, एक और चीज पूछना था। देखिए, आपका प्रमोटर स्टेक तो 87% है, आपको 2.5 से 3 साल में घटाना पड़ेगा 75% तक। इस तरह आपका कैपेक्स हैवी धंधा है, आप एक्सपेक्ट कर रहे हैं कि 6 महीने 12 महीने में एक फंड रेज या कुछ डायल्यूशन होगा?
12 महीने में तो नहीं एक्सपेक्ट कर रहे सर। 12 महीने के बाद जैसी रिक्वायरमेंट कंपनी को होगी उसके अकॉर्डिंग हम, मतलब के अगले 12 महीने में हमें ये दिखाई नहीं देता अभी, पर जैसे कंपनी की रिक्वायरमेंट होगी उसके हिसाब से हम डिसाइड करेंगे सर।
पवन जी, आपने जो है पूरा बिजनेस, पूरे इंडस्ट्री के बारे में आप हम बताया और KYC में आप आए, आपसे बात करते हुए बहुत अच्छा लगा। बेस्ट ऑफ लक पवन जी फॉर द फ्यूचर।
एक शरद जी थोड़ा सा अगर आप टाइम दें तो मैं इसमें थोड़ा सा ये ऐड करना चाहूंगा। जो B2C बिजनेस है, जो एंड कस्टमर का बिजनेस है, जो गांव का देहात का बिजनेस है, ये बिजनेस जो ये बातें हो रही है इंडस्ट्री में कि ओवर कैपेसिटी हो गई है या ये है, लेकिन अपॉर्चुनिटी इसमें इतनी है कि आज 60 जो चाइना है रूफटॉप सोलर में 60 गीगावाट एवरी ईयर ऐड कर रहा है।
सर पवन सर थोड़ा समय कम है, हमें रुकना पड़ेगा, लेकिन आपसे बातचीत जरूर करेंगे, दूसरे केवाईसी में भी आपको जरूर लाएंगे 5-6 महीने बाद कितना यूटीएल सोलर और फ्यूजामा पावर सिस्टम आगे बढ़ा है। धन्यवाद सर, आपसे बात किए और अच्छे बात किया। एंड दिस इज द मैनेजमेंट राइट फ्रॉम द हार्ट, राइट फ्रॉम द हिंदी हार्टलैंड, speaking about UTL Solar, Fujama Power Systems growth plans, and of course answering all our queries which you had put a little bit in Hindi, a little bit in English. But that's all folks, and that's the beauty of KYC. Stay tuned to NDTV Profit.
Stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है,
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है? कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baje, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Conflict in Middle East enters its 5th day. Fresh Israel strikes pound Iranian missile infrastructure while Iran attacks expand. across the Gulf despite the killing of Supreme Leader and the heavy bombing of Iran. The Islamic Republic's leader refused to immediately return to the negotiating table. Ayatollah Ali Khamenei's son Mojtaba elected as the next supreme leader of Iran. The 56-year-old Cleric has been in power in Iran but holds no public office currently. South Korea's Kospi plunges more than 12%, extends a steep sell-off from the last session as the war escalates. Kospi stopped trading for temporarily after hitting a circuit amid a broader Asian sell-off. Broader risk-off sentiment finds its way to Dalal Street. Nifty slips more than 400 points while Sensex plunges more than 1400 points. Metals, realty and PSU banks were the top sectoral laggards, with all major sectors in the red. Oil and gold benefit from soaring geopolitical risk premium. Brent crude extends gains above $82 per barrel. The yellow metal also hovers close to a record high amid renewed safe haven demand. Amid escalating tensions in the Gulf and geopolitical uncertainty, rupee opens at a record low. The Indian currency hovers close to a record low of 92.3 versus the US dollar as demand for more RBI intervention gather pace. Good afternoon. You're watching Markets at 12 with me, Mahima Vachrajani, and this is a show where we get you updates on the top buzzers and news updates at the noon. But first, let's take a quick look as to how the markets are doing. Like I mentioned, overall the market is right now down by about 480 odd points for the Nifty, almost down 2%. So no relief in terms of where the benchmarks go. Let's try to pull up the heat map because you have a lot of those names losing ground on that map today. Something like a Tata Steel now down almost 7%, seeing extreme profit booking. LNG also down by about 6% with having around 37% exposure of its order book in the Middle East. JSW Steel, Tata Motors, Ultratech, Shriram Finance, as well as Interglobe Aviation, SBI Life, Grasim. I mean, the list just goes on right now. Just 3 names in green out of 50 stocks and hardly in green. Let's try to pull up the Nifty Bank to see as to what it's doing. In fact, the Nifty 50 has also fallen below the 24,400 levels as we speak. The Bank Nifty also clearly under pressure, down by about 2.1% below the 58,600 odd levels for the Bank Nifty as well. Let's try to pull up the sectoral heat map, and I suppose that all sectors right now are in the red. And that's the mood of the market as we speak. There you go. That's red across that entire chart. So things not looking nice. Bloodbath in the markets is what we are seeing. Metal falling the most. I mean, I don't remember the last time we saw an index falling as much as 4%, except for IT that we saw because of AI. But realty, metal, banks, auto, all down in that 3 to 4% of range. Let's also quickly try to pull up the broad end of spectrum, the mid cap 150 and the small cap 250. Well, the pressure here also persists. 2.6% down on the mid cap 150 and the small cap 250, seeing a downtick of around 2.5 odd percent. So geopolitical uncertainty, wars happening are definitely impacting the Indian markets as well. And we've seen the pressure in the Asian markets, and that is kind of continuing in the Dalal Street as well. But to answer your questions and to understand as to what one should do right now, we're joined by Nishchal Maheshwari, who's a market expert, joining us now. Nishchal, thank you so much for taking out the time. My first question, the kind of move that we're seeing, if you take a look at history, the average fall in the Nifty 50 during markets was around 4 odd percent, and the history has said that it's recovered within a week or two. But this time we've seen a lot of concerns falling together. You have one war after the other, one conflict after the other, and of course there's tariff overhang that is still there, and all of these reasons combined together are just not right for the markets to pick up. What should an investor do right now who's sitting patiently since the past 1.5 years, considering that the stock markets will go up from here on?
So, afternoon, Mahima. I think investors who have been long enough in the market have seen several of these cycles, myself included. So, I think this too shall pass is the only thing I would say at the moment. But newer investors, I think, hold on. If you are in the right stocks, basically fundamentally strong. So, this is more of an external issue. I think it's going to get sorted, because neither US and Israel and neither Iran can hold on this kind of a skirmish or a war for a very long period of time. So I think in the next 2 weeks, we should see at least the intensity coming down, and thereafter we might see some solution coming off. So I think this is extreme sell-off which is happening. And all kind of assumptions are getting built in. So I think that's where the panic is.
Nishal, the other aspect, right? I was reading this particular article, and that said that a lot of stocks now are available at, attractive valuations. Would you agree with that? Do you think that this is the time when one should go ahead and buy, considering the dips?
So, yes, I do agree with you. Basically, that there are a lot of stocks which are now reasonably priced. But what we have to be mindful of is basically what kind of impact the high energy cost is going to have on all these stocks, and whether the earnings which we were projecting is going to actually materialize or not. So one has to be very careful, basically recalibrating the numbers before saying that the stocks are cheap. So be mindful of that.
Nishal, any particular pockets that you're looking at right now specifically that could, help play the defensive factor?
So I think domestic consumption story still remains to be good. I don't see any issue from the Indian macroeconomic point of view. If oil continues to remain high, then we might see some amount of inflation coming back. But then we have a very benign inflation situation at the moment, and we are not expecting any rate cuts happening further going ahead. So that is the only issue I see for the moment on the macroeconomic front. But I think the consumption still continues to remain good. Indian economy has been okay. We have to see if this impact does impact the export front or not. If it is prolonged, then we might have to recalibrate our growth numbers also. But still, I think a 7% growth is a decent number basically for the economy. So focus on domestic consumption stories.
Nishal, what about metals? What is your take here? I mean, today it is seeing some serious profit booking, 4% down on the entire index. But, counters like gold and silver still continue to rally, right? So what's the view here?
So those are two different categories of metals. One is an industrial metal, and other is basically safety, flight to safety kind of a situation. So industrial metals obviously will get impacted with this kind of a situation happening. And if we have a prolonged war, basically where a major region in the world basically is disturbed for a longer period of time, then definitely demand is going to get curtailed. And that's why you are seeing metals coming under pressure. And I think metals have also run up quite a bit. So I think it's a good time to take away some profits. As far as the precious metals are concerned, I think those should be held on, because this kind of uncertainty only is going to push those prices up further.
Okay, all right. Nishal, thank you so much for giving us that perspective with regards to where the markets go, and of course taking out the time and speaking with us at NDTV Profit. All right, now, sticking with the entire theme of what's going on in the Middle East, Qatar halts production at the largest LNG plant in the world following drone attacks. How will this impact Indian companies and sectors? Somit is joining us with all the insight on this one. Somit?
Well, I'll start off with why Qatar is actually important. Now, if you look at the January 2026 data, the global LNG production numbers stood at, or the trade numbers stood at close to 42.7 million metric ton. Now, that was what the global trade setup or trade stood at. And if you look at the Qatar export data, that stood at close to 8 MMT, which is nearly 19% of the world LNG trade. And that is the reason why Qatar is quite important, and a production shutdown coming in from Qatar could impact prices globally, and that is what we are seeing. Now, what will be the impact on India? India imports nearly 50% of its LNG consumption, and this is as per the January data that we have got it, and 60% of this comes in from Qatar and UAE, and all of this is expected to get impacted, and the volumes would come down on this front. Now, which are the companies that could get impacted? Firstly, Petronet LNG, because nearly 60% of the volumes that they do for regasification comes to the Dahej LNG terminal, and this comes from Qatar and UAE, and volumes would go down, because of which earnings could get impacted. For GAIL, as volumes would go down, the transmission volumes would also be lower, marketing volumes would also be lower, and that will also impact the earnings for GAIL. For IGL, MGL and Gujarat Gas, that is the city gas distribution companies, gas availability could be an issue. Now, among these three city gas distribution companies, Gujarat Gas could get impacted the most, because they have highest exposure compared to IGL and MGL. And purchasing gas for these companies on spot prices could turn out to be expensive, because they will need to continue to supply gas, and if there is lower gas availability, then expensive gas would be an issue. Now, the most impacted would be the fertilizer companies. All of them, nearly 85% of gas requirement for fertilizer companies is met via imports. Companies like FACT, Coromandel International, Paradip Phosphate, Deepak Fertilizer, all of them stand to get impacted. And this table gives you a clear picture of which are the sectors that get impacted the most. Fertilizer is 29% of gas consumption in India, and nearly 86% of this is met via imports. City gas distribution companies 24%, 43% import dependence. Power is 10% of the gas consumption and only 20% of import dependence. Apart from that, there is refinery, petchem and others, which is close to 5 to 22%, and their import dependence is anywhere between 27 to 85%. But apart from this, LPG is also one segment that could stand to get impacted the most, because the import dependence on LPG is much more. Now, India's LPG consumption stood at close to 31 million metric tons, and imported part was nearly 21 million metric tons. 19% is imported via Strait of Hormuz, and the strait's importance or dependence on India is nearly 90%. So that is one segment that we need to keep an eye out for, because if there is lower LPG then, or the LPG cost increases going forward, then that could be negative for oil marketing companies as well. Now, LPG storage currently in the country is close to around 15 to 20 days. Now, India has option to export or import LPG from US, and there are other markets as well, like Algeria, Norway and Russia. But do remember that the orders need to be placed right now, given the fact that shipment time will also be much more given from other countries at this moment. So LPG could be much more pain point compared to LNG.
Okay, all right. Soumya, thank you so much for getting us those details. I think he's put that perfectly into perspective as to how LPG and LNG are the two gases which are right now just under that 15 to 20 days of inventory with India, and how if the war continues, we'll have to export them from some certain other countries. But earlier today, we spoke to Sonal Verma as well, and she tells NDTV Profit that India remains heavily dependent on energy imports that pass through the Strait of Hormuz, making the economy vulnerable. She also mentions that geopolitical shocks tend to be stagflationary, and let us try to understand as to what she's trying to convey through this. Listen in.
Exposure for India is quite high on various counts. We import more than 85% of our crude oil needs. Nearly half of this actually comes from Middle East, and we're not just talking crude oil, but the dependence on LNG, LPG, and then the dependence on the Strait of Hormuz for a lot of this crude that comes through. So I think the challenge right now is that the increase in oil prices is no longer just restricted to an increase in oil prices. It has spread into sort of other derivatives. And the uncertainty right now is on the duration of this shock. So for a net, oil and energy importer like India, this is a negative terms of trade shock.
And amid the ongoing tensions in the Middle East, Indian shipping companies are also facing a huge problem with their shipments. Anil Devli, CEO of Indian National Ship Owners Association, says that due to this, freight rates are likely to jump over 3 times. Let's listen in to what he had to say.
The insurance, incidentally, I must clarify here for your information, is the insurance has not been taken away. What happens is that the insurance companies, because a war-like situation develops, they come back and say, now within this area, whatever standard insurance you have is now not valid, and you need an additional war risk premium. So starting today, the war risk premium would apply to ships which are going to be in that region, and the cost is dramatically going to increase. At this stage, our vessels freight rates are fixed, at least all of these vessels which I mentioned, these 37 ships. So those freight rates will not change. But any new contracts that start from tomorrow or day after, those will see higher freight charges being levied. Very difficult to give you a figure, but from going by generalities, I think you can take it that freight rates will go up at least 3 times, if not less. For example, on the container side, CMA, CGM, etc., have already announced a surcharge of about $3,500 on a 20-foot box, for example. So that's really 4 times, in going up to 4 times the freight rate.
Okay, so we talked about shipping, but aviation is, as an industry, is also in focus. Indigo is seeing a clear softening in air traffic trends, with February showing muted domestic and international growth, and the first 2 days of March starting even weaker. Somit joins us to explain what is adding to the strain. Somit?
Well, a clear triple whammy that we are seeing for Indigo. Firstly is the fact that there is a clear weakness in the air traffic. Now, if you look at the February data, which is yet not out on the DGCA website, we have collated this from the Ministry of Civil Aviation. And what we can see here is that the domestic air traffic is down nearly 0.3% on a YOY basis, while the international air traffic has reported a growth of just 0.7%. This is quite weaker. And if you look at the March data for the first 2 days, what we are seeing here is that domestic air traffic, average air traffic on a daily basis was 4.8 lakh, as against 5.1 lakh that we had seen in the previous month. And for the international air traffic, it has seen a big drop, coming in at 70,500 on an average daily basis air traffic for the international, as against 1.2 lakh that we have seen in the month of February. And this is largely because of the flight cancellations in the Middle East. Now, if you look at, so first is the weakness in air traffic. The second one is flight cancellation. On 1st of March, nearly 166 flights were cancelled. 2nd March, 162. 3rd March, 156. And so far, what we know is, as of today, around 57 flights have been cancelled. And this flight cancellation will lead to notional revenue loss and fixed cost loss coming in for Indigo in the 4th quarter. So what could be this amount of notional revenue loss and the fixed cost loss? Firstly, if you look at the Q4 estimated capacity, it was supposed to be around 46,375 million. Of this, nearly 30% is deployed towards international, and out of that, Middle East exposure is close to 45%. Now, this is a collation of all of the analyst estimates that is there currently. So the total capacity that is under risk or under stress is close to 6,260 million. That is the traffic that we have towards Middle East. 1 month impact would be close to 2,066 million, and 1 day impact would be 66.6 million. Now, this is the capacity impact. What would be the rupee impact or the rupees crore impact? Now, if you are assuming the yield of 5.3 rupees that the company generates, then the potential or the notional revenue loss every day would be close to 35 crore rupees. And if this issue persists for 1 month, then the actual notional loss could be close to 1,095 crore rupees for Indigo. On the fixed cost side, generally for an airline company, 40% of the cost is fixed, while the remaining 60% is variable. Now, assuming the fixed cost, assuming that the unit cost is close to 4.73, the number that we had seen in the 3rd quarter of FY26, fixed cost would be close to 1.89 rupees, which means that the everyday fixed cost loss is close to 12.6 crore, and the actual fixed cost loss, if this issue persists for 1 month, is close to 391 crore, and this will be the actual impact that would come in on the net profit of the company. So that's the second one. And the third one is the oil issue. Nearly 40% of the total cost for an airline is fuel cost, and Indigo has limited fuel hedging as we have seen in the past. And as per analysts, for every $5 per barrel increase in the Brent prices, EPS impact for Indigo is close to 13%. And so far, we have seen crude prices increase to around $85 per barrel in the past 3 days from around $71, $72 per barrel that we had seen earlier.
However, do remember that the impact of the same will be realized in a lag effect. If we have to see the impact on Indigo's financial of this increase in crude oil prices, crude prices need to remain around these level even going forward. So that's when the actual impact will come in. But clearly a triple whammy coming in for Indigo at this moment.
Thank you so much. Quite an insightful link that you gave us on the entire aviation space. But shifting focus from aviation to currency, we're seeing rupee hit record lows. And to discuss as to how this will fare going forward, we're joined by Naveen Mathur, who's the Director, Commodity Currency and Gift City, IFSC as well, at Anand Rathi, joining us now. Naveen, thank you so much for taking out the time. We're seeing continuous, record lows on rupee right now. What is it that you now are kind of penciling in when it goes to rupee as compared to or as stacked up against dollar?
Thank you very much for having me on the call, and good afternoon to all the viewers. I think there is a depreciative stance on the rupee. The dollar is appreciating as a safe haven currency. Plus, the weakness definitely is surrounded by the surging crude prices and the Middle East tensions, which we all know would raise the inflationary concerns. It seems like that the rupee did touch an all-time low of 92.30 and currently at around 92.24. Looks like that the RBI has intervened by selling dollars to support the rupee. But still, having said that, the rupee definitely has a depreciative stance. The oil prices, I think, as mentioned earlier too in the call, would remain heightened because of the concerns with respect to the Strait of Hormuz and the risk surrounded that, which may tighten the supply, the energy supplies to an extent. So I think the current account deficit, all the Middle East tensions, the global economy impact would lead to the safe haven demand of the currencies like dollar, the Japanese yen, and the Swiss franc, which would also have the negative impact beyond the geopolitics to the rupee factor.
And Naveen, just trying to understand, because, you track commodities as well. There is crude, there is gold, silver, all of them, spiking because of this entire war escalation. What's the view like on these?
Yeah, so the safe haven currency, I would say commodities like the bullion, particularly gold and silver, they surge on the safe haven demand. So, and whatever we are seeing is a right situation for the safe haven demand to come into gold. I will not talk too much about the silver as a safe haven demand, but gold definitely, because silver is around 60% consumption on the industrial metals too. So I would say, whatever plus we would see on the prices for both gold and silver would be largely due to the safe haven demand. But at the same time, we also would need to consider that the dollar might appreciate, which would be negative for the dollar-denominated prices for gold and silver. So I think it will be kind of neutral because of the safe haven demand and the surge in the dollar, which may impact on the other side for the gold prices. So, but then definitely neutral to positive for both gold and silver. And at the same time, whatever the energy markets are talking about in terms of the supply, in terms of the concerns with respect to the supply coming in from the Strait of Hormuz, particularly to the Asian countries, would be negative for the crude prices and negative in terms of the prices would increase, so to say.
Okay,
but as of this particular moment, we see the crude at around $82 to $85 on the WTI.
Okay, Naveen, thank you so much for helping us understand the entire perspective with regards to where the commodity and currency goes and taking out the time and speaking with us at NDTV Profit. The other basket that is in focus today is sugar, because sugar prices see a strong up move. In fact, all of these stocks buzzing in trade today and globally and back at home, driven by tighter supply expectations and better ethanol economics. Now, the rally is also improving because of export visibility for Indian sugar mills. Sharad joins us with, kind of help us understand as to what this perspective is and what's powering this wheat surge. Sharad, I think the concerns that Dubai is one of the largest exporters or refiners rather for sugar, and attacks happening there could probably be beneficial for Indian sugar companies. What are you picking up?
Well, right, the sugar stocks have been buzzing in trade and a very welcome move coming in a sea of red today. But remember the US sugar futures, last time I checked, that had climbed almost 14 cents per pound over the last two trading sessions. Now, this means that the geopolitical tensions have gone up, crude has gone up, ethanol prices have gone up, and of course, the demand, or you could say the diversion which can happen from Brazil, which is one of the largest exporters in the world, they might feel that ethanol diversion might be much economical if you compare that with the sugar exports, and that is why we are seeing some kind of a positive up move coming in the international prices. Remember, the domestic sugar prices were actually on the lower side because of the supply glut. The domestic prices have also increased a bit and they have come actually in a parity with the global prices, and when that happens, definitely the export becomes very viable for the Indian sugar players, and that's what we are seeing, a positive momentum coming in the Indian sugar stocks, and largely we are seeing some kind of an export quota open also in this season which was there. So this is the reason why all the sugar stocks are buzzing in trade.
Okay, Sharad, thank you so much for giving us that perspective. But with that, we're completely out of time on this edition of Markets at 12. But do stay tuned to NDTV Profit for more news and updates on the other side.
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है,
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया.
It's okay यार.
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं.
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar.
Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds,
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Daria and Sharad Dubey, standing at the NDTV Profit market pit with all the action in the market today. Sharad, I mean, the pressure has continued. In fact, the first day when we saw the markets react to the war was not as deep as what we're seeing in terms of today's session, and that's the story of the day. It is escalating. Markets are going deeper. What are you picking up?
Exactly, Hiral, and of course it's unfortunate because we're seeing a selling happening across the board. India, Asia, all the global assets are under pain. Just look at that, it's below that 24,400 mark and it's still not showing any sign of recovery for Nifty. Let's see how Nifty Bank is panning out. It seems like it's going to show you the same thing. It's a gap down opening and nothing major happening. Both of the benchmark indices down 2%. What are the key factors right now to watch out for? That's very much important right now. Especially let's talk about how the numbers are actually panning out. If you could show Thailand and South Korea markets, they have already hit their circuit levels. Thailand falling 8%, South Korea falling 12%. That's the concern. Long only investors, only you should do buy the dip in important ETFs and select stocks. But nevertheless, rupee has hit its record low levels and it's weakened past that 92 per dollar mark as well, and that's also impacting the market. Brent crude prices have spiked above that $80 mark and it's sustaining here. Apart from this, also the India VIX, that's at 10-month high levels in the last 3 sessions, Hiral. It went up 50% and that's where the concern starts coming in. Right now it's above 21. All key sectors are in the red. Only 2 sectors are there which are giving a little bit of respite to the markets. That is of course sugar and the IT space, but risk of sentiment across the asset classes. We need to wait until the key levels come out. If you're tracking the indices or stock specific moves, dollar indexes, that's near that 100 mark. It's strengthening for the 3rd straight day. That means the safe haven movement is going towards dollars as well as little bit of gold, but not bonds as well. But yes, too much stress coming in the markets, too much stress coming in the numbers, too much stress coming on the portfolio. Over to you, Hiral.
Thank you so much for that. Stress across portfolios is what you're seeing, and that's absolutely evident in the watch list that we have bought for you as well. L&T, high Middle East revenue exposure is what has put pressure for consecutive sessions of declines coming in on this counter. Shriram Finance as well is the biggest drop that the stock has seen in 21 months. Metal counters are also buzzing in trade. In fact, the war implications is what JP Morgan is highlighting. Indigo, the hike in ETF price likely is what is putting pressure on Indigo, and a revenue loss that's coming in on the back of flight cancellations that are happening. Titan also has a high Middle East revenue exposure, and that's the reason why the pressure continues. Coal India is also in focus, and you have a Tata Motors PV, which is seeing pressure because Land Rover volumes have declined 19%. Defense rally continues amid the war escalation and some contract wins coming in the hands of Paras Defense. Tejas Network is an extended rally post the 5G order with smart moves coming in on that counter. And in fact, this is the only company that offers the service for which it is rallying. Ola Electric, now Holy Delights is what they're offering. But if you see in terms of what's happened to their market share, it's the least. It's, I think, away from that the 5th stage as well. And still that stock is seeing some recovery in today's session. Natco Pharma, one of the launches that they've done in the US is providing it some boost, and Rain Industries is a volume buzzer. Petronet LNG, you have the LNG blackout which is impacting that, and MGL. And the global tensions are lifting the sugar sentiment in India. So that's what is on our watch list. But Sharad, I'll pass it across to you to take the rapid fire with Rajesh Bhosle of Angel One.
Thanks a lot, Hiral, for that. Good afternoon, Rajesh. Always a pleasure to have you in our show. But Rajesh, most of our stocks, likely we are going to ask stop loss or maybe a positional buy because the situation is happening as such. The first stock is Shriram Finance. Of course, the valuations were on the higher side. Stock has run up. But do you see in this fall, a medium-term positional buy comes in, or you'll avoid this counter?
So Sharad, I mean, this stock has been an outperformer. If we see the chart structure of last 6 months, it has been trading in a higher top, higher bottom structure. But today we are seeing a bearish formation. In fact, on the weekly charts, we are seeing a evening star kind of pattern. So in the short term, we expect further slip in this counter. So as of now, we would suggest to avoid. But if the stock slips towards 950, which is its 89 EMA, that would be the ideal level to add on. As of now, we would suggest to avoid catching this falling knife. Wait for a further dip towards the levels of 950.
And Rajesh, your views on Tata Steel and JSW Steel, both of these ferrous candidates taking a beating in the day's trading session?
Yeah, similar kind of chart structure, both Tata Steel and JSW Steel. Till last session, it was showing relative strength, holding on to its short-term 20-day EMA. But today, we are seeing a sharp cut of more than 6 and 7%. So as of now, we expect further slippage in both this counter. Possibly, if we see Tata Steel can slip towards the levels of 185, and similarly, if we see JSW Steel, it has also broken below its recent higher bottom. So we expect further slip in JSW Steel as well, where prices of around 1150 can be retested. So as of now, high volatility is there in both this counter. So avoid as of now.
Alright, Rajesh, next stock is Coal India. Channel checks are also suggesting that the Feb dispatches might be on the lower side as well. Your views on the technical charts?
So very strong formations. In fact, in the today, if we see fresh breakout is there on the derivative front as well. Long formation is there, and it's trading at the highest point of the week. So despite broader market sell-off, this stock is showing relative strength, and we expect that this stock can move towards the levels of around 450 to 455 levels. So a positive approach can be kept with a stop loss below 420 levels.
Alright, of course, Coal India is a low beta and a dividend play as well. But next stock, Rajesh, is Paras Defense and Zen-Tech. These stocks are buzzing, of course, on the order flows as well. Your views on these technical charts, and either of these two, which one would be your pick?
Paras Defense look very interesting. I mean, if we see since November, it was trading volatile within the range of 620 and 740. Fortunately, it has now broken the high side, also 200 DMA. And if we see sharp volumes are there, so we expect Paras Defense can move towards the levels of around 780 to 790 level. Similarly, Zen-Tech is looking positive, but it's still trading in a consolidation. We'll wait for prices to break above 1450. Once that is taken out, then possibly the stock can head towards the levels of 1600. So as of now, Zen-Tech could be the weight, but Paras Defense definitely looks positive.
And Rajesh, your view on Tejas Networks, important company development also coming in as a form of product launch. But last 4-5 trading sessions, the stock has given a parabolic move. Good time to book your profits now on this counter?
So yeah, definitely one of the underperforming counters, but in the last 1 week it has surprised, and a sharp move from the levels of around 300 to 490 as of now. I would suggest booking some kind of profit when it comes around 530 to 540 levels, because now the indicators are moving into the overbought zone, and also we see a strong 200 DMA. So we would suggest somewhere around 530, 540, at least partial longs can be booked.
And an interesting counter, Ola Electric. Market is going one side, the other side this stock is going. Is this a dead cat bounce, or value is emerging now?
Yeah, so definitely a dead cat bounce. I mean, this kind of news bounce is there, but we don't expect it to sustain. I mean, the prices are struggling on any kind of bounce towards it 20 EMA. So we'll suggest any bounce towards 27 to 28 should be taken as an exit opportunity.
Right. And Rajesh, your quick view on Natco Pharma as well. This stock at times always gets institutional support, even if all the pharma packs go down. There is a contra bet coming into this picture. But how is the technical chart suggesting for Natco Pharma?
So on the weekly chart, there is a double bottom kind of breakout. So we are bullish on this counter. Possibly the stock can move towards the levels of 1050 to 1100. So from the morning highs, it has come up, but we remain positive for the levels of around 1100.
And kind of an alumni proxy from the chemical space is Rain Industries also. Your views on that? What levels to track?
I mean, we'll wait for Rain Industries. I mean, today it's under tremendous pressure, and it has also breached the 200 DMA. The stock may slip towards the levels of around 115 to 120. So we'll wait for Rain Industries as of now.
And Rajesh, views on the sugar stocks, Dalmia Bharat, Balrampur Chini, either of the sugar stocks. Of course, this is a very small trade, the way it looks like. It's not maybe a positional trade. Do you think a good up move can come from here, Rajesh?
So Balrampur Chini has an interesting chart structure. We can see a inverse head and shoulder pattern breakout on the daily chart, and prices are now well above short-term moving averages. So positionally, we can expect a move towards the levels of around 530, 540. If in case there is any kind of dip towards 470, that can be bought.
All right, that's rapid fire for you. Over to you, Hiral.
So much for that, interesting names. And as Sharad pointed out, it's the sugar pack that is in focus. Now, the question that everyone has right now is how India stands to benefit when it comes to sugar and the Iran-Israel war. Mr. Praval Vitlani, Chairman of ISTA, All India Sugar Trade Association, joins us. Mr. Vitlani, welcome to the show. Always a pleasure to speak to you. My question coming to you is, currently the area of contention is why are sugar stocks buzzing in trade today, and how does India stand to benefit when it comes to the Iran-Israel war? Because we are talking about Iraq and Dubai, which has the largest sugar refineries. Any disruption over there probably could mean some bit of positiveness in terms of Indian sugar mills as well. Your initial take?
Yeah, thank you for inviting All India Sugar Trade Association ISTA. And regarding the sugar stock buzzing today, India is well settled with required production, and we have some room of 3-4 lakh ton for exports. But the world is engulfed. Actually, everywhere the position is surplus in the world. So the thought on the sector is going on that due to this situation, geographical situation, the highest producing sucrose is the Brazil, and Brazil have two-tier system, ethanol as well as your sugar. So the prices on Life Nibot is 5-year low today, and season is likely to start by end of this month or next week in Brazil. So the industry in Brazil will opt to produce more ethanol than the sugar. So this is a support to the 5-year low price of this thing, Life and Nibot international markets. Plus, how India is going to benefit is that there is a pending demand of the sugar industry to increase the ethanol procurement price by OMC. Once though we don't wish that this battle goes more time, but crude price if goes up continuously, then there will be a chance, a room for government to increase the procurement price of ethanol by OMC from the sugar millers. Third thing is like the vessels which are come to Indian countries, Asian countries, and the Gulf countries, they are being that will get disturbed to have from Brazil. So some demand from the neighbor countries will come to India. So there will be a small room for export. So 2-3 reasons are there.
Right, Prafulji, hi, this is Sharad here. Good afternoon, always a pleasure to have you. I just wanted to ask, because India does have some neighboring countries where they're given their exports, like Afghanistan is there, and a couple of more countries are there. Just because of the parity of the sugar, domestic sugar prices and the global sugar prices, will this mean that there might be more exports coming in for the other countries also?
No, I see. First of all, sir, nice talking to you. The two things are the beta risk factor while doing a sugar trade is the transportation from Brazil takes 1.5 months. whereas India can get delivered within 10-15 days. So your risk ratio is lower while buying Indian sugar. Indian sugar is having highest, we can say, sucrose into it, that is 99.8, world's number one. And pricing, we are not matching. We don't have parity. That is the concern, because we are onto the lower stock. Maybe closing stock could be, according to our January, around 43-44 lakh, which is required for the domestic this thing. We have expected, we have make a projection in January that there will be a 7 lakh metric ton exports. So that room can be cleared immediately, because the person who need immediate sugar, they can buy from India.
Okay. Mr. Vitlani, then what's the kind of impact you're seeing when it comes to prices? In the near term, are you seeing any trends? Because India as a market, at least from a domestic front, is very controlled. But anything that you see in terms of, apart from ethanol sugar pricing?
Yeah, see, actually, ethanol pricing is also very well, controlled by the central government. Even the monthly quota restrict a sugar mill to sell how much quantity is being decided by the central government. But at the time of when the entire world is in surplus, we are not that much surplus which we can offer more exports as such. So we need our own domestic consumption also. So I personally, we had projections of 293 lakh ton in January, and within a day or two we are going to revise second estimate and in that we are looking that it will be slightly lower than 293. So yes, there is a room is less from India to export as such, particularly sugar sector is concerned. And now the season is almost going to be over by 15th of March. So making ethanol will also be a slightly difficult.
So, two things that are fueling the sugar rally and trade today. But thank you, Mr. Vitlani, so much for joining in. It's always a pleasure to speak to you as well. So, when Brazil comes in, they might divert to ethanol production versus sugar. So, two, there are chances that if crude prices keep going up, there is a potential that crude procurement prices will also inch up. What all these sugar companies get from OMCs, that's number one. And two, when it comes to neighboring exports, India could be one of the preferred destinations as well, because we do have a surplus in the quantum that Mr. Vitlani also mentioned. So that could be a benefit, because the margins, when you talk about exported sugar versus domestic, is always higher. So that becomes a beneficiary for all of them as well. But let's quickly look at what's on Google Trends today, because we've highlighted a few of the stocks that are on NDTV Profit's radar. But let's see what's on Google's radar today. ICICI Bank, that stock is down. RVNL, BEL, GAIL and Adani Power. These are the ones which are trending on Google as well. In fact, Rajesh, let me come to you. A dip in terms of ICICI Bank, if you have to look at it, do you think that it's an opportunity there?
If we see today's candlestick pattern, it's a open low Marubozu kind of structure, and it has formed exactly on its previous swing low. So with a stop loss of around 1320, yes, a contra bet can be done, expecting a bounce back towards the levels of around 1380 to 1390 levels.
Apart from that, how are you looking at a BEL and a GAIL?
So BEL has come up from the higher levels, but overall the chart structure remains positive. And on Monday there was a strong breakout. So BEL, we are positive on this counter. Somewhere around 430 to 440 there is a strong base formation, and over a period of time we expect BEL to move towards the levels of around 485 to 490 levels. GAIL, if we see, there is a sharp gap down opening. Recently it failed to cross its 200 DMA, and we expect the struggle to continue. Possibly GAIL can retest the levels of around 145 levels. So as of now, we'll suggest to avoid GAIL.
Thanks a lot, Rajesh, for that. But moving on, amid this ongoing geopolitical crisis, the Indian shipping companies are facing a lot of problem. And interestingly, Anil Devli, he's the CEO at Indian National Ship Owners Association. He has stated that due to this, the freight rates can increase 3 times. Do listen in.
The insurance, incidentally, I must clarify here for your information, is the insurance has not been taken away. what happens is that the insurance companies, because a war-like situation develops, they come back and say, now within this area, whatever standard insurance you have is now not valid, and you need an additional war risk premium. So starting today, the war risk premium would apply to ships which are going to be in that region, and the cost is dramatically going to increase. At this stage, our vessels freight rates are fixed, at least all of these vessels which I mentioned, this 37 ships. So those freight rates will not change. But any new contracts that start from tomorrow or day after, those will see higher freight charges being levied. Very difficult to give you a figure, but from going by generalities, I think you can take it that freight rates will go up at least 3 times, if not less. For example, on the container side, CMA, CGM, etc., have already announced a surcharge of about $3,500 on a 20-foot box, for example. So that's really 4 times, going up to 4 times the freight rate.
Well, that's a very interesting take on the shipping rates and the freight rates going ahead. But joining us is Gaurang. Good afternoon, Gaurang. Short time, but definitely your views on these important developments coming in the geopolitical tensions, especially on the shipping costs, shipping companies actually, Shipping Corporation of India and even GE Shipping. Your views on that, because the rates are going to go up and it'll be positive for them.
Thank you so much, Sharat, for having me on the show. Good afternoon to all the viewers of NDTV Profit and to you and to Hiral as well. A small disclosure, all recommendations are a part of our fundamental research stream recommendation. Our company, Geojit, or myself do not have any kind of personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interest. See, the risk premium goes up, as you were listening into the gentleman who was speaking just before me. And the cost eventually lands up at the customer's end. And this is not the first time, Sharad, we have seen such premium shoot up, including the Baltic Index, which is the index that gives you a kind of a view as to which way the freight rates are moving. With this, and given the fact that almost half a dozen containers or crude oil carriers or container ships have been set ablaze, I think it's only going to be a big question as to who will have the courage and the guts to send vessels through that route. I think it's going to be equally dangerous, and I think Iran has already mentioned that they are controlling the Strait of Hormuz, and any vessel which will be passing through will be dealt with severe consequences and circumstances. So I think it's going to be very, very challenging. Difficult times, but I think we'll have to sail through these difficult times.
I mean, they are difficult times, but Gaurang, good afternoon, Hiral here. I want to talk to you about L&T. 4 consecutive sessions of declines. I think in the last 5 sessions, it's little over 12% in terms of cuts. Middle East contributes around 37% of the total order book, and it's critical growth engine for the company as well. Now, Middle East, actually, if you have to look at the new order inflows as well, it's around 33% that the contribution has come in during the 9 months of FY26. The international order book, which is at around 3.6 lakh crores, 49% of that total international order book concentration is Middle East, and over 80% of the international order book is concentrated from that source. You can see the numbers on the screens as well, the contribution that they get from Saudi Arabia, UAE, Qatar, Kuwait and Oman as well. And the projects in this region are heavily weighted towards hydrocarbons, power transmission, distribution, renewables, large-scale infrastructure. So there is a potential execution risk that comes in over here as well. There could be project delays. There is supply chain and logistic issues as well on the back of the closure of sea routes like Strait of Hormuz and the airspace closures. What would you do, Gaurang, with the L&T? Because the debate over here is right now, yes, a lot of pressure points that are building in, but once things have to be rebuilt, it becomes an opportunity for the same company. Would you say then this is an opportunity for an investor to buy into a L&T?
Hi, Hiral. Good afternoon to you as well. Since Monday onwards, correct me if I'm wrong, a lot of obituaries have been written about L&T and the kind of order book that they have in the West Asia / Middle East, and how difficult it is going to be, at least in the short to medium term, to carry any kind of execution of that order book. And I come from the same school of thought that you're coming from. Whatever gets destroyed needs to be rebuilt stronger than what it was built earlier, and there are going to be many more projects that are going to be coming up. The big question over here, Hiral, is that how and when and in which form and on what date this mess that has been created by US and Israel does get sorted out. I don't think we can have a near date of this particular geopolitical situation and the resolution on that. But I strongly believe, and as a disclosure, Hiral, we have a positive coverage on LNT. Targets are somewhere close to about 4,500 plus. So the risk reward is extremely favorable. And I think after 2 days of deep cuts, the stock has managed to, stabilize a little bit from the lower levels that we saw in the morning. It has recovered a little bit on the upside. So, and given the track record of L&T, Hiral, I don't think you can write off L&T just like that. Long term, stay invested. If you have investable amount, you can add to your investments. And if somebody is looking for fresh investments, I would definitely advise that.
Stay invested, or you can look at investing as well. But thank you, Gaurang, so much for joining in. Always a pleasure. We're running short of time today. But thank you from Sharad, the team that put the show together, and myself. There's lots lined up on NDTV Profit. The impact in terms of shipping companies, impact in terms of pharma companies, hospital trades, all of this and more in the latter shows that you will see on NDTV Profit. But thank you so much for joining in. Up next is Lunchtime Trades.
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक आजकल चल क्या रहा है सिचुएशनशिप आपको पता क्या होता है कभी मैं कह नहीं पाया
It's okay, yeah.
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज करता हूँ.
2 powerful days, 14th, 15th March, Sundar Nursery, New Delhi.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
All right.
Conflict in Middle East enters its 5th day. Fresh Israel strikes pound Iranian missile infrastructure while Iran attacks expand across the Gulf. Despite the killing of Supreme Leader and the heavy bombing of Iran, the Islamic Republic's leaders refuse to immediately return to the negotiating table. Meanwhile, Ayatollah Ali Khamenei's son Mujtaba, elected as the next supreme leader of Iran, the 56-year-old cleric has been a power broker in Iran but holds no public office currently. And South Korea's Kospi plunges more than 12%, extending a steep sell-off from the last session as the war escalates. Kospi stopped trading for temporarily after hitting a circuit amid a broader Asian sell-off. Talking about markets back home, then broader risk-off sentiment finds its way to Dalal Street as well. Nifty slips more than 400 points while Sensex plunges more than 1,400 points as well. Metals, realty and PSU banks were the top sectoral laggards, with all major sectors in the red. Oil and gold, meanwhile, benefit from soaring geopolitical risk. Premium Brent crude extends gains above $82 a barrel. The yellow metal as well hovers close to a record high amid renewed safe haven demand. On the flip side then, amid escalating tensions in the Gulf and geopolitical uncertainty, rupee opens at a record low. The Indian currency hovers close to a record low of 92.30 versus the US dollar as demand for more RBI intervention gathers pace. Good afternoon. Thank you so much for tuning in. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, a quick look at the markets, and it's largely the risk-off sentiment that is actually making its way to the markets here as well. When you talk about Dalal Street, you're looking at a cut of about 400 points thereabout. As far as the Nifty is concerned, when you talk about Sensex as well, the cut is a gash actually, because you're looking at about a 1300 point knock coming in as far as the Sensex is also concerned. With that in mind, let's quickly take a look at the list of sectors. Amid the kind of sell-off that you're seeing, you have all sectors barring one, IT just holding on to a tinge of green, and that too just in the last few minutes. You've seen just that little bit of green coming back to IT, if you can even call it that right now. But it's actually metals that are ailing in trade right now, so that's about a 4.5% cut coming in. For the metals pack, PSU banks, realty, auto, media, oil and gas, all of your top sectoral laggards, exactly in that order. When you talk about the list of stocks as well, you're looking at something like a Petronet LNG, Mahanagar Gas, Force Motors, Tata Steel, SAIL as well as JK Tyre that are down anywhere between about 7 to 9%. When you talk about the list of losers from within the Nifty 50 pack as well, similar list that you're looking at, L&T 5.5% cut coming in on that one. Something like an SBI Life, Interglobe as well, where you do have that triple whammy coming in for Interglobe Aviations and 4% cut coming in on even that counter. When you talk about the list of gainers from within the Nifty 50 pack, something like Coal India is holding up quite well, and even Infosys and Bharti Airtel, those are the only top 3 gainers that you have right now from within the Nifty 50 pack at least. So that's largely the picture that you have. Of course, it's declines that you're looking at more than advances. So when you talk about the advance decline ratio as well, very heavily tilted in the favor of declines, and that's 1:9 that you're looking at in terms of the advanced decline ratio as well. So about 2,100 stocks thereabout in red as we speak. So that's largely the kind of picture that you have. Red is really the color that the Dalal Street is also carrying even today as the sell-off continues. But with that in mind, let's also shift focus onto the world of commodities, where you're seeing a different kind of ripple effect really when it comes to the West Asian conflicts. What is Middle East for the West and what's West Asia for us? But with that in mind, let's quickly take a look at some of these developments coming in as far as the world of commodities is concerned, because you do have a bunch of these updates that have been pouring in. So when you talk about oil prices, they're largely by and large extending gains, and that's largely the sense that you've had also ever since the conflict even kicked off. When you talk about the forecast coming in, you do have something like Goldman hiking their average second quarter Brent price forecast as well by about $10. So that should give you a little bit of an understanding when it comes to the trend going forward as well. Of course, we'll be getting your insights in just a bit. Before we do that, quickly taking a look at gold as well, because you're seeing quite the recovery coming in from the last session as well. When you talk about gold, dip buyers largely entering the market, and the market is fraught with risk. And those risks, in fact, are going to be something that we'll be talking about now, because we do have Dinesh Somani, founder, Pro IntelliTrade Services, and Kunal Shah, head commodities research at Nirmal Bang, joining us this afternoon. Thank you so much, gentlemen, for taking time out and joining us. You know, it is a very interesting afternoon that you have had thus far, you know, and that's been the kind of trajectory broadly that you've seen when it comes to the commodity landscape as well. Firstly, Mr. Somani, I'll come to you with the entire picture when you talk about oil. Do you think that the geopolitical risk premium has been sufficiently digested, if you can say that about the risk premium right now?
To some extent, we can definitely say, because crude oil prices risen more than 16 to 18% in the last 2 to 3 sessions. If I look at last 10 to 12 sessions, it made a gain of almost close to 26 to 28%. The supply disruption that has came because of the Strait of Hormuz is close to 20-25%. And I think that much prices escalation has already happened. Probably we may see some relief or we can see profit broking today at the end of the session, and prices would stabilize around 68.50 in MCX market.
And that's something that you're looking at when you talk about oil prices as well. You know, Mr. Shah, I'll also take the question across to you. I wanted to quickly try and understand what you think is going to be the path going forward. Of course, geopolitical risk premium is something that we've discussed. I wanted to try and understand what you think it's going to be looking like for oil prices in the next 3 months and for the next week.
I think for week and 3 months, from both point of view, the major thing to watch out for will be whether any oil fields are getting attacked and getting a supply disruption. So far, we've seen refineries being attacked, not in major oil fields. That is one. And second, what I want to see is when the Strait of Hormuz opens up. Okay, these are the only two things one should keep, because the longer this delay is taking place, the longer the Strait of Hormuz remain closed. I think the price will again go up gradually, because what happens is that right now we have a scenario where a lot of ships are on the way and about to reach their destinations. So we may not feel the shortage. But if this continues for another 10-15 days and the Strait of Hormuz doesn't open, then I think we have a big crisis on our hand where the prices may abruptly shoot up and test 3-digit very soon. So I think the sooner this Strait of Hormuz gets open, better for the world and vice versa.
Absolutely. And Mr. Somani, I wanted to take that point across to you as well, because, you know, when you talk about this particular conflict, just 5 days into the conflict, it's very difficult to try and predict what's going to happen from here on. And given the kind of headlines, it's actually quite unpredictable right now, and volatility is the name of the game right now when it comes to commodities as well. But with that in mind, Mr. Somani, it does look like it's going to be a little bit of a protracted conflict. Is that the sense that you're also gathering? And with that in mind, how are you looking at the entire disruption when it comes to the Strait of Hormuz?
You already witnessed the disruption. Prices have escalated quite a bit, and a move of close to 30% is actually huge in just 10 to 15 days. The prices were stabilizing around $60, $65, and suddenly they went up to $77. I think the WTI crude would escalate further to $81 or $82. And probably at that point of time, I think the supply destruction would ease out. Probably there may be a possibility as well that the OPEC countries would increase their output as well, and the supply is going to ease. As and when I said that from there are statements from US that they are going to make the energy supplies to all over the world. They make sure that the vessels carries that insurance, and probably even the Navy would help to make those vessels free from Strait of Hormuz. So things would come down in next 3 to 5 days, and probably we may see max to max $80 to $82 by that.
Absolutely. And Mr. Shah, when you move the focus onto gold as well, and when you take a look at the path forward, when you talk about gold as well, what you're looking at is that, one, there's of course inflationary risks that you have on the back of this entire conflict. Other than that, you do have a bunch of uncertainty that has really entered the conversation right now when it comes to the entire Fed trajectory as well. Is that the sense that you're looking at right now when it comes to both of these factors?
I think gold, if you look what has happened ever since this war has started, broken out. So from Monday onwards, we are seeing a constant pressure in gold. So Monday morning, it was up almost by $100. And ever since then, we are seeing gold making new lows. Yesterday, gold prices tested $5,000. And after that, we've seen a sharp rebound taking place. So I believe that what is happening in gold right now is the capitulation. Deleveraging trade is going on, like South Korea market. If you look what happened today, 12%, 13% down, but that was up by 26% on from the 1st January till day before yesterday. It was up by 26%. So what if it goes down by 14%? The deleveraging, some people have to book some of their profits wherever they have incurred profits in order to manage their losses. And that is what is happening right now. Even with the gold, people are having a big margin calls in some of the other asset class, and hence gold has been sold off and in this kind of volatility, and they are paying their M2M. So I believe that deleveraging is going on right now, which should prevent any sharp spike in gold futures. 50 to 50, 50 to 60 good levels to sell, and I think gold also eventually should remain under pressure.
Absolutely. And Mr. Somani, when you're looking at the technical charts when it comes to oil as well, you know, when you're looking at the prompt spread, in fact, you're looking at a differential of about $3. When you look at the difference between the two contracts, essentially, it looks like a little bit of a bullish pattern that you're seeing when it comes to oil prices already, and we're just 5 days into the conflict. What are you looking at when it comes to the entire technical picture when you talk about oil, and how are you looking at it for the next 3 months as well?
Yes, the oil prices were wrestling around the $68, $70 mark, and post to that level, that process, and it made up the high of almost $77. So the technical breakout is already in place, and things are moving in that particular direction. So a dip is probably on cards as of now, because a rally of 16-80% should have a correction, and the correction may last up to $72, $73. From there, I think prices would move up again at $10 to $12 to $81 or $83, and probably that prices are going to stabilize at that point in the next 1.5 months. So I don't expect much crude oil prices to go beyond $83 as of now.
Absolutely. And Mr. Shah, I wanted to come to you with that point, get your closing comments as well. When you think about somebody who's already invested in a market like this, there's a bunch of volatility that you're looking at right now. So given that entire backdrop, what should somebody who's holding on to, you know, their positions when it comes to gold and silver, when it comes to either the physical commodity or ETFs as well, what should they be doing? And Mr. Somani, I'll come back to you with the same question.
Hold on. I mean, there's no reason this kind of volatility, this kind of the period of unprecedented volatility is a new norm right now. We've seen that in gold and silver. Now we are seeing that in equities also. So I think one should really brace themselves against this kind of moves. Long-term trend should not change. The long-term fundamental doesn't change with this short-term volatility. This is a part and parcel of the game, and I believe that one should have adequate risk management policy in place in order to counter such moves. Otherwise, if you ask me from the long-term point of view, yeah, you should continue to hold.
All right, then continue to hold. That's the word coming in from Mr. Shah as well. Mr. Somani, like I said, I want to come back to you with the same question, because everything that we knew about how the market is going to be functioning is really out the window right now. A lot of our assumptions are changing against that evolving backdrop. What should somebody who's already invested and has chips on the table be doing?
I think one should get accustomed to these kind of volatility, because these things are going to persist for now. Because at times gold was trading at a range of $2,200 to $3,000, and now it moved past to $5,000. So accordingly, volatility has to increase, and one should get accustomed to these kind of situations. One who is not able to manage this kind of risk reward, I think he should be not part of the game. Probably, I think things are going to stabilize ahead. Prices are going to move up again, because the geopolitical conditions are now going to remain. And if there are more rate cut chances in the US, I think they would definitely support gold and silver prices. So long-term traders should definitely be invested. Short-term intraday players should avoid for time being. That's my suggestion.
All right, then. Thank you so much, Mr. Somani, as well as Mr. Shah, for taking time out and joining us this afternoon. So the real verdict coming in here is that if you have an iron stomach, then you should be taking positions and changing things. If not, stay there, hold on to the kind of positions that you have when it comes to the entire commodities complex. But with that in mind, it's time for a very quick break right here on Lunchtime Trades. More news and updates on the other side.
stage that brings together India's most compelling creative voices,
NDTV का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो तभी आजकल चल क्या रहा है सिचुएशनशिप आपको पता क्या होता है कभी मैं कह नहीं पाया
इट्स ओके यार
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Welcome back. Thank you so much for staying tuned in. Well, it's time now to take a look at the pharma sector as well, because you do have war-driven disruptions and rising transit costs that are set to hit the Indian pharma exports as well, just as the industry enters a crucial shipping month. Freight, insurance and rerouting costs are spiking, and US-bound consignments are already facing delays. Now, Nimit Dikshit is joining in with the full report there. Nimit.
Indian pharmaceutical companies continue to face blow. Even as they're reeling now from the Trump tariffs, an additional charge is going to be put on all exports from India owing to the escalating Middle Eastern crisis. Freight charges, insurance premiums, and reroute transit costs are all going up owing to the closure of the Hormuz Strait, even as the Iranian government now says that they have control over the entire strait. And this comes, some senior sources say, in the most crucial month of March, where sales targets and pressure is at a high, and most companies are looking to close those accounts. What we have to understand is 65% of India's pharmaceutical export is done by sea. This is primarily done through the Strait of Hormuz route. Now, the reroute cost itself is going to increase that transport time through the Cape of Good Hope by 15 to 20 days. That means additional cost, additional freight charges, and of course, a renegotiated risk premium. The remaining is done through air. A lot of this is controlled substances, which are drugs which need to be carried under particular requirements such as temperature. These are done by air. Now, a very senior person at one of these companies says that these companies are now scrambling to find alternative routes to Dubai, which was a major transit hub for them all this while. But the bigger problem is that these controlled substances require permits, and these permits have to provide the route that is being taken. So if you have to reroute, you have to reapply for the permit with the government, which is going to take its own time. Now, in terms of impact, the Indian Drug Manufacturers Association says that this is going in the short term to impact escalation costs, of course, but it's also going to affect shipping schedules because of the uncertain nature of the way shipping is happening through through the Hormuz Strait, and how much shipping has to be rerouted now through the Cape of Good Hope. It is important to understand here that India exported 30 billion worth of pharmaceutical products last year, 60% of that going to the EU and the US markets, 10 billion to the US alone, 1 billion, of course, to the Middle East. What this means is there's going to be a large cost addition, some experts say to the tune of 20% on pharmaceutical exporters. Lastly, it's also important to note that the government and these industry bodies over pharmaceuticals are looking at the situation closely. They're in a wait and watch mode, but sources say it is likely that they will meet in the near future to determine how best they can cushion the pressure that these pharmaceutical companies are facing.
No, absolutely, and thank you so much, Nimit, for getting us all of those details. But that's not the only sector that is going to be under pressure. Of course, we'll keep getting you the latest updates when it comes to this particular war, either on the right-hand side of your screen or the bottom of your screen, and on the channel as well. But let's also decode the sector-specific impact, keep it going with the sectors. In fact, JP Morgan has come out with a note when it comes to the entire metals pack. There's a bunch of stocks that are also in focus. Even other than that, Jasmeet is joining in with that entire list.
Well, thank you for that. We have JP Morgan's note which speaks about overall metal pack. What they say is they give an understanding of how the metals would react given the overall Middle East issue. What they say is Middle East conflict could have some implications over the overall metal pack, including Indian metals and mining stocks as well. While they make a note stating that they see a potential near-term bullishness risk for aluminium manufacturer, that's Vedanta and Hindalco. While they expect a minimum supply chain disruption when it comes to coal, given the Swiss Canal accounts for just 1% of the overall coal. So they don't see any impact coming in terms of the coal, and they see a limited up risk coming in for Coal India. While the next stock is Natco Pharma, while this stock is in focus on the back of a new drug launch. While the company has launched Pharma capsules in the US market, and they expect the product range to have an estimated benefit of roughly 3.2 billion market size, which they'll be targeting going ahead. While the launch strengthens company's oncological presence in the US. While the third stock in my focus is the Ola Electric, while the stock came up with a new Holi Mahotsav news where they say that they are introducing Roadster range starting at 79,999, where they are giving the motorcycles at a competitive rate compared to petrol and diesel at a competitive rate of 79,999. While this is the reason stock is buzzing in trade up about 3% while if you look at the overall stock performance, the stock has beaten down 54% over a year. So it's a wait and watch how does the overall stock react in the coming day.
No, absolutely, and we'll keep watching out for that reaction. Really, Jasmeet, thank you so much for joining in with that as well. But it's a new age war that you're looking at. You do have allegations being made about Claude AI being used, a bunch of things that you're looking at. In terms of the entire new age aspect of it, in fact, let's take a closer look at how the cheaper drones, in fact, are changing the entire game. In fact, Shivarur breaks down exactly how drone warfare is rewriting the battlefield.
I want to show you just how cheap these drones are compared to more advanced drones that are used for similar missions. First of all, how do they actually change the game? They are low cost, which means they are expendable and there is no financial pinch. They are very, very easy to build. You saw that drone, a man was just manhandling it, which means they are elementary, they're rudimentary, they're simple and easy to build very quickly in large numbers at scale. Number 3, disproportionate capability for damage. You've seen the Shahids smashing into targets in different Gulf countries and causing untold damage, which means a $35,000 drone is capable of causing a geometrically more amount of damage than it was built for. It's cheap enough to deploy in swarms because the operator doesn't mind losing them. They can be sent out in large numbers. They deplete the air defenses of countries like Israel and others by forcing their air defense systems to constantly send out missiles to engage them. Therefore, you're depleting the enemy's air defenses. The attacker spends thousands of dollars. The defender spends millions of dollars. That is the mathematical key to how these drones actually work. Now let's show you a little bit about the figures. I showed you the Shahid drone, which is where this entire story started. They cost anywhere between $20,000 to $30,000 a piece. The Lucas drone, which was inspired by the Shahid and in fact was reverse engineered, is just slightly more costly at about $35,000. An Israeli suicide drone with similar capabilities called the Harop costs about $1 million. India operates these drones. Slightly more capable drones like the Hermes, which are more for surveillance, they cost about $6 million. The MQ-9 Reaper, which is the Rolls-Royce of attack drones, which are capable of firing missiles and staying in the air for extended periods of time. Can you believe it? They cost about $30 million a piece. And then there's the Global Hawk, which is a very, very long range, very high altitude, absolutely advanced drone for surveillance purposes, costs $100 million, about as much as an advanced fighter aircraft. So where is $35,000 and where is $30 million? That is the kind of mathematics we're talking about, and that is the kind of range of prices we're talking about as far as drones are concerned. Now, a dirt cheap drone versus $1 million interceptor. I want you to think about this arithmetic as well, my friends. The cost of one Shahid drone or one Lucas drone is about $20,000 to $35,000, okay? The cost of one interceptor missile, one single interceptor missile that Israel or any other country will be forced to fire in order to intercept such a drone, costs anywhere between $1 million to $4 million. So you're firing a drone that costs about $20,000 and you're forcing your enemy to fire something as much as $4 million just to bring that down. The cost exchange ratio is 1:100 in favor of the attacker, and that is the advantage of such a drone. Iran's drone stockpile right now of Shahid drones is understood to be in the region of 80,000. Just think about that figure, 80,000 of those drones. The production capacity, 500 drones a month. Iran can fire 2,500 Shahid drones a day for the next 30 days if it has to, just to exhaust its existing stockpile. These are, of course, numbers that may come into question depending on the attacks that continue against Iran, but these are just some numbers to think about at this point of time.
Anothan, thank you so much for getting us that entire analysis, but that's all the time that we have on the show. Thank you so much for tuning in.
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है,
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है? कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today, either on the back of price or volume action. Firstly, let's look what's on the show today. Firstly, we'll be speaking with the management of VFin Solutions. Now, despite maintaining a positive outlook for FY26, the stock is down nearly 24% on a YTD basis. What's the way forward is something that we'll be discussing with the management on the shows today, so stay tuned in. Apart from that, we'll be discussing a host of stocks. Firstly, when it comes to sugar stocks, a sudden surge in trade, is it because of the war impact that is happening in the Middle East? Is that the reason, given the fact that Dubai and Iraq are set to have the world's largest and second largest sugar refinery? So any positive cues coming in from that front is something that we'll discuss on the show today. Apart from that, we'll be also speaking about Idea Forge. Now, that stock is up for the second trading session. The stock has gained nearly 10% in the last two sessions despite such a weak market. What could be leading this rally is something that we'll discuss on the show. Atul Auto, that stock is down 5%. Has the EV aggression slowed down or coming down for the company? Puneet will give us more details on that front. And lastly, when it comes to Jindal Drilling, that stock has gained nearly 30% in the last two trading sessions. The stock has touched its 3-month intraday high, and if you look at the volumes, nearly 62% of the total shareholding has changed hands in trade today. So what's been buzzing here is something that we'll also discuss on the show today. Now, if you look at the markets, the Nifty has seen some recovery from the day's lowest point. It has gained around 150 odd points from the day's lowest point. It did manage to find some support around the 24,300 earlier, and then 24,400 has also acted as a support level for the benchmark, that is Nifty 50. Which are the sectors that have been leading the gains from the day's lowest point? Nifty Private Bank Index has seen some gains. Apart from that, it's Nifty Metal and Nifty IT Index, which is managing to stay largely flat as against the declines that we have seen in other indices in trade today. But when it comes to Nifty Small Cap Index, Mahima, what's been buzzing in trade there?
Overall, I think, Samit, if you take a look at the broader end of spectrum, the mid-cap 150 and the small-cap 250 both are down by about 2%. Slight recovery here also we're seen from the day's low points, but the pressure still persists to say the least. Now, specific names, you know, as Samit was mentioning about sugar stocks, a lot of these names are buzzing today. There's Awadh Sugar, which is up 10%, Bajaj Hindustan up 9%, Ugar Sugar, which is also up 8.5%, Dwarikesh Sugar, which is also up around 8%. So all of these sugar names doing fairly well in trade. Something like a Ruby Mill also is also locked in upper circuit at that 20% mark. Samit also talked about Jindal Drilling, which is up almost 13%. Something like Bajaj Hindustan we talked about, but something like Premier Poly is also up by about 7% Solex Energy is also seeing gains of about 6% and PNGS Reva, the recent listing is also fairly in the green now. But with regards to counters that are not doing very well, you have Orchid Pharma, which is under pressure, down by about 8%. You have something like Veranda Learning, which is seeing a downtick of around 6.7%. Train Industries, as well as something like Lakshmi Organics, also seeing downtick of around 5%. Kaveri Seeds also is seeing pressure in trade today, down by about 5%. Infobeam Tech also down by about 5%, as well as something like Ratan India Enterprises also seeing a downtick of around 5%. So that's with regards to where the market stand, with regards to where the broader end of spectrum stands. But as promised, we're going to speak to the management of VFin Solutions, and we are joined by Raja Debanath, the Managing Director at VFin Solutions, joining us now. Mr. Debanath, thank you so much for taking out the time. Overall, my first question, this is a two-part question that we're trying to understand. We took a look at your Q3 numbers, from that, I kind of wanted to understand with regards to margins, because consolidated margins were impacted this quarter on the back of lower margin services. Is this temporary or structural is what you're seeing, first thing? And what is the sustainable range of margin profile that you should build in from here on, from a slightly long-term perspective? This, of course, being the second part of my question. Firstly, I would want you to give a perspective about the company to our viewers, because not a lot of company have heard about, not a lot of people kind of know about what you exactly do.
Thank you. Thanks for having me here. And you're right that this is a company which is usually seen in the background. Customers don't see this. We are a company which is in the transaction banking and digital lending space, providing technology to banks. So banks use the VFin solution to allow their corporates to transact transaction banking and digital lending businesses. That's what VFin does. To your point, in terms of the margins being contracted in our Q3 numbers because of services. Yes, services businesses are something which don't have standard margins, the business that we are in. They will keep going up and down in that sense, and there's a range to it between 4 to 10%. That's the range that it remains at, the services business. But that's something which over a period of time, you will start seeing a stabilize at around 7 to 8% on the services side. Our core business, which is VFin's core business, as I said, is transaction banking, software, enterprise solutions. That's something which will stabilize at around 40-45%. That's the margin range for the standalone product business. So for the viewers here, when you're looking at numbers from VFin, you have to split it between the product business and services business.
Okay. Mr. Devanath, the other factor, everybody today is talking about AI. You as, who operates that SaaS platform, just want to understand as to how are you kind of adopting AI and, providing it for your customers?
First is VFin is a SaaS price platform. VFin is not a SaaS platform.
Okay.
Slight difference in that. And AI is a boom for the IT industry. That's the way I would put it. Because we are going to see and we are seeing huge improvements in productivity happening because of AI. Now, that's a given. But what you will also see and what the market is seeing is companies are facing pressure with companies which margins or business is dependent entirely on seats. So if your margin or your revenues are based on the number of seats that you sell, that's where the AI is going to be challenging. So we are going to be seeing new changes in the pricing metrics, new changes in the pricing models when it comes to AI. But for a company like VFin, which is in, as I said, business of providing enterprise tech, AI helps us deliver products faster. AI helps us get to market faster. Those are the benefits for us. So we see a margin expansion because of AI when it comes to using AI. And the future is going to be not about whether you need software or not, because it's a given. Software will be needed, but how the software is going to be built is the question. The software is going to be built using AI. That's the way we see it. And we are embedding a lot of AI in our own products that we are rolling out.
The PSB exchange, can you just let us know what is this platform? How does it help your clients? And what is the kind of traction that you're seeing here?
So PSB Exchange is a platform which was launched by the PSB Alliance. Now, PSB Alliance is an alliance of the 12 public sector banks in the country. They wanted a platform which we now run and manage for them. This platform on one end connects the public sector banks as well as most of the MNC and private sector and NBFC banks on one side. On the other side are corporates, your sourcing channels, and various partners and SMEs directly who come onto the platform. So one connection on one side of the platform from the corporates or the SMEs gives them access to the entire banking ecosystem in the country. That's what the platform is about. And this platform right now has been launched for supply chain financing, but it will be eventually opened up for supply chain, trade finance, and all forms of working capital and term financing.
Recently, you also announced the acquisition of, I believe, White River Media. Is it a non-core investment or a non-core acquisition? Can you just explain the rationale behind the same?
So, yes, it is partly a non-core. It's an investment that we have done. The reason it shows up in our consolidated numbers right now is because we happen to have board control there. And that is the reason why it shows up. Otherwise, it's a brilliant product. As a company, it's a 12-year-old company, one of the most awarded companies in the country on digital. Soon we will start seeing changes out there in terms of how we showcase our financials so that our investors are better able to get a view of that business separately from our core product business.
Mr. Devnath, overall, if you take a look at how the numbers have fared over the years, as compared to March 24, March 25, you almost tripled your revenue. Just wanted an understanding as to how you're planning FY26 to end at, and what is the kind of CAGR growth that you're aiming at for the next 5 years?
We are a company based out of India, but we're selling globally. So this is a very large market when it comes to the business of transaction banking software for banks. So we have given a guidance in terms of where we're going to be ending this year at, and we will double the numbers from last year. So the numbers that we had tracked, we are in terms of hitting those numbers. We will continue seeing very healthy growth rates and managing very similar growth rates over the next couple of years at least. Because our pipelines, which are there right now across on the product side, are very, very strong. In our Q3 numbers also, we have shared those pipelines. A very strong pipeline at a global level. And not just across for supply chain financing, but across the entire transaction banking space.
Can you give us a perspective on that pipeline number that you're talking about? What is the number looking like, and how much of that gets converted in 12 months in one financial year?
So we have a $60 million pipeline, which we had shared. And that's the $60 million pipeline, which is the revenue will be earned by us over the next 5 years. That's the way to look at the pipeline. And this includes around 50 odd deals across the various products that we have. The way to look at these pipeline numbers is a year from now, we will start seeing 25% of these numbers getting into the P&L.
Lastly, sir, from my side, just wanted to check on the merger. What is the status here? Has the final approval come in? When will the amalgamation of the merger be effective from now?
We have received our queries from the BSE. We have answered those. SEBI queries have been answered. We are waiting now over the next maybe couple of weeks. We are hoping for the final approval from them before we move to NCLT. And then NCLT will take its own time. But the final date has been agreed as 1st April. So 1st April 2026 is the date of the amalgamation, and that date doesn't change.
Mr. Devnath, thank you so much for helping us answer those questions and taking out the time and speaking with us at NDTV Profit.
Thank you. Thanks.
All right. We're now also joined by Abhishek Jain, the head of research at Arihant Capital Markets, joining us now. Abhishek, a very good afternoon to you. Any quick view on this particular counter, VFin?
So VFin is a very niche company right now, especially on the transaction side right now. They are very niche. It's a company which has been largely initially focusing on SCF side and now pivoting towards only from a supply chain finances into services and the investment phase project like PSB exchange and other products. I think the impact of this we have seen, there has been some margin deterioration where the core margins have been for the SCF is close to 50% plus, while the new business investments are dragging down the margins. However, the company has been taking, I believe, now the 75% plus pipeline is of the non-SCF products, especially on the cash management, trade finance, and loan management side. I think this can be an interesting story to play out for, and with the merger expected in next few days, as the management is guided, I think this will lead to a surge in earnings. We believe definitely at lower level for the high risk investors because it's a relatively young company. Should be there in some part of their portfolio. Can be definitely have a look.
Right. A sudden.
And they have,
right.
And their team has been very strong from the Kotak, the CEO and other people are there. So I think the capability wise, we don't have an iota of doubt on their execution side also.
Right.
Moving on, a sudden surge in sugar stocks is something that we have seen despite a weak trading session. What could be the reason behind this? Is it the fact that Middle East holds the largest and the second largest sugar refinery? Could that be the reason? Let's get in Sharat to understand more behind this.
Well, yes, Soumit, that might be one of the reasons also. But remember that the global crude prices are up, ethanol price up move is happening, and of course, the sugar-related theme is also picking up. Now, of course, the US sugar futures over the last two trading sessions, they have seen a good jump coming in, almost 14 cents per pound. That's the up move coming in. And the domestic sugar prices, interestingly, becomes at parity with the global prices. That means the exports become more viable right now. Remember, the ethanol production might be diverted from Brazil, which is the world's largest exporter. And because of that, the global prices are also buoyant right now. But why it is important for Indian sugar exporters? This is firstly because of course, the pricing which I spoke about. And it becomes more viable to export sugar-related products and even sugar to the neighboring countries as well. And the transportation issues are still there for the South American sugar exporters. And the Indian sugar exporters won't take the extra cost. That's what is coming in from the freights and the insurance. The Indian sugar industry is still the world's second largest exporter after Brazil, and the government has allowed roughly 15 lakh tons for the new season currently. But of course, because of the rising prices, the parity has done well for the sugar export themed stocks.
Abhishek, anything that you're picking up when it comes to sugar companies? Not much, I believe, fundamentally could benefit them in the short term, but still the stocks are up more than 5% in trade today.
No. So I would like to add one more thing, which I one need to highlight is basically E20 mandate. The guideline has been mandated to the 1st April, which came last month. So that is also surging. We have seen this can be approximately for the structural growth. This will keep the ethanol prices higher for the longer period of time. And this has been announced last month only. I think this has also pumped up. There are multiple factors which are working. So obviously, because of the global issues, which can lead to ethanol price hikes, speculation also. Also, on the domestic side, the government has announced E20 mandate guideline, and this is something which is keeping both the triggers are keeping the sugar prices higher, which is obviously led to higher sugar prices also. And we have seen global sugar prices also future also rising, especially in the global markets.
Okay, got it. So that's the view coming in on the entire sugar pack. But it's time to look at the F&O space and setup and what are the cues shaping up right now. We have Sharat standing by to help us decode that. Sharat, over to you.
Thanks a lot, Mahima, for that. A minor recovery coming in from Sensex. Remember, largely oversold positions were there. That's what the options data was suggesting to me. But only Infosys, Tech Mahindra in the green, and Bharti Airtel doing well as well. But across the counter, especially L&T and Tata Steel, the deep cashes are there. Bankex also, the story remains the same. No major support coming in. All of the constituents you can see in the day's trade. Let's see what's there in the green. Let's see the long build-up. Solar Industries and Oil India make it to the list. It's a bit on the lower side. Solar Industries, but we are seeing a good volume pickup. Let's see the short covering also, which stocks make it to the list. And of course, there is a confusion here. Nothing much to look at. Long unwinding, let's see what's happening there. And SAIL, that's down 7%. Bank of India, that's also down 6%. Remember, there's a income tax of almost 600 to 700 crore demand coming in for this. Short build-up for Petronet LNG and Tata Steel here. These are the main stocks. We're seeing a major short building up. But remember, most of the F&O space is seeing major short build-up happening. And today, the sell-off is intensified, after the last two trading sessions. So yes, the sea of red today in the F&O space.
Okay, Sharat, thank you so much for helping us understand as to how the F&O cues are shaping up right now at the SAR. But shifting focus, the other stock that we promised that we'll talk about is Idea Forge Technology. Now the counter is seeing strong market action with volumes spiking to nearly 10 times the 20-day average. And Jasmeet joins us with all the details as to what's happening there. Jasmeet?
Well, thank you for that. If we look at the overall stock performance, we see a good up move coming in on Monday, and today when the stock is up to about 2.5%, while the entire defense pack is buzzing in trade on the back of the overall global sentiment and the demand for the defense requirements. Now, in terms of this company, the company operates as a business of manufacturing unmanned aircraft systems, and company also recorded a record order book in Q3. That's roughly 440 odd crores of orders. In terms of use cases, the overall goods that company manufactures are used in civil uses. That's for surveillance and security patterns collaterals, while it's also used for mapping and applications of anti-terror requirements. Now, if we look at the defense, the overall book of defense of this particular company, we have 12% only coming from the defense segment, but while the rest comes from civil segments. So it's something to watch out how the overall mix changes going ahead. In terms of the Q3 numbers, company did see a mixed set of numbers, with the revenue did see a good jump of 78%, but the profit tanked. In terms of the overall commentary, management remains strong that they would want to convert 40 to 55% of their order book in Q4 going ahead, while they also see that they have gained 1 or 2 crore of order in Q3, which they expect to conclude by FY27. Further, lastly, they also said the overall gross margin is improving on the back of the change in the mix, where they are promoting more of high margin mix initially. So that's something to wait and watch of how does the overall order book pan out for the company going ahead.
Okay, Jasmeet, thank you so much for getting us those details. Abhishek, your quick view on Idea Forge?
Idea Forge, after last year defense, after India-Pakistan's skirmishes, we have seen there's been a surge in order book. We remember the company has an order book of 30 crore last financial year, and now it is at your team has been suggested at close to 400 odd crore. So that has been a jump right now. However, some old orders are likely to be executed in this. That's why the profitability has not come. But I think if someone has there are very few players if you want to play on the listed space, on the UAV space, and Idea Forge is one of them. So someone wants to keep some small bit of defense in their portfolio, this can be an interesting bet to play out for. But I see this stock is one can add in tranches rather than looking at buying in one shot, because they have recently it has run up from 20 odd % after the Middle East crisis.
Similarly, another stock which has been gaining in trade is Jindal Drilling. The stock is up nearly 30% in the last 2 trading sessions, and on an intraday basis, the stock touched its 3-month high. Now, if you look at the volume action here, nearly 18.1 million shares traded on both the exchanges, that is BSE and NSE. And if you look at the total number of shares for Jindal Drilling, it's close to 28.9 million. So nearly 62.5% of the total equity have changed hands or have traded on the exchanges. So clear intraday basis positions have been taken and squared off when it comes to Jindal Drilling. Now, what could be the reason also? There is some fundamental reason behind that, and that could be the rising crude oil prices. Brent crude is trading around $83 per barrel. Now, usually higher crude prices lead to improved drilling activity, and improved drilling activity also lead to higher offshore rig rates for the company, and that is the business of Jindal Drilling. Now, the company is a leading offshore drilling service contractor in the India's oil and gas sector. It has been into this business for the last 35 years. It has offshore jack-up rigs. Nearly 3 of them are owned and 3 of them are rented. And currently 5 of them are operating with ONGC, and 1 is under refurbishment and will come up for a renewed contract. So that rig could see a higher price contract going forward. So that is one benefit that Jindal Drilling could see going forward. Apart from that, the company also provides mud logging and directional drilling services to oil and gas sector. If you look at the current order book of the company, it stands at close to 1,200 crore rupees. And as I was mentioning, there's 1 rig which will be coming up for contract renewal. But apart from that, 3 other rigs will come up for contract renewal in FY27 end. So not immediate financial benefit, but if crude prices continue to remain at the higher levels even for the next 8 to 10 months, then these rigs could also see higher pricing going forward. The management has guided for a 350 crore EBITDA for FY26, and similar number is something that they have guided for FY27 as well. The net cash stands at close to 325 crore rupees as against 111 crore at the start of the quarter. Now, despite this rise in cash, the company is not looking to do any big buyback or dividend on an immediate basis, because they are trying to conserve cash for the rigs that will be coming up for refurbishment and contract renewal. So they will be deploying the cash towards that, and then whatever will be remaining, they could look to give back to shareholders. Abhishek, have you looked at this counter, Jindal Drilling? I believe there won't be any immediate financial benefit that could come in because of the rising crude oil prices. But if crude prices continue to remain at higher level, will the company benefit?
Yeah, definitely some benefits are expected. Also, one of their new acquired Jindal Drilling Pioneer rig is also operational now. So that is also boosted the numbers right now. And as you mentioned, one of the rig which has been a refurbishment is when it's going to be back. So obviously there is going to be some impact is there some positive impact is also there. And when we do some simple maths also, the stock is still, despite the rally we have seen in the stock in last 2 days, the stock, I'm not recommending a buy currently because this is something which is not in our coverage stock, but I'm just giving a plain numbers only. This is 350 to 380 crore of EBITDA numbers. If you take on the basis of management commentary also, the stock is available at 5 times, less than 5 times yield by EBITDA, 4.5 times yield by EBITDA, which looks interesting in the current market scenario with not a debt. And promoters actually acquired some shares recently in the previous quarter also. So that is also give a certain positive impetus to the investors also.
Okay, thank you so much, Abhishek, for giving us all those insights for all the stocks that we discussed today. But with that, we're completely out of time on this edition of Small Cap Buzzers. But do stay tuned. Ask Profit up next.
Stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
Where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है? कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance.
I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome. You're watching Ask Profit, the afternoon edition here at NDTV Profit. I'm Mahima Vachajani and with me is Puneet Zaveri. And for viewers who are tuning in, you can go ahead and ask all your stock related queries to us on the WhatsApp number or even call us on the number that's flashing on your screen up there. But before we do that, let's take a quick look as to how the markets are doing. Well, for the benchmarks, the Nifty 50 has slightly, come off its day's low point at least that is a sigh of relief for sure. We're now above the 24,400 levels. For a short brief, we did slip below the 24,400 levels as well. So right now, we're now kind of seeing support on that 24,400 odd levels. The Bank Nifty also trading around 1.9% lower, although Bank Nifty has not recovered much from its day's low point, but trading around that 58,600 odd levels. The Nifty 50 heat map, if we can try to pull that out. In terms of where the pressure goes, it continues on counters like LNG, Tata Steel as well as Tata Motors, PV. All of these counters down in that range of 6 to 4% but oil, India is still up in that range and still, holding its overall gain. Coal India still up around by about 2% and Bharti Airtel is something that's turned into green and has gained by about 2% right now as we speak. And Infosys is the other counter that's doing fairly well. But with regards to where the sectors go, let's try to pull that up and see as to how sectors are doing. When we started, it was a sea of red. Yet again, it's still a sea of red. Metals tanking the most, seeing the most profit booking down by about 4%. Nifty Realty also down by about 4%. PSU banks clearly seeing that profit booking and taking the knock, down by about 3.5%. But Nifty IT largely flat at the 0.07%. Barring that, everything is down below that 1% mark. Let's quickly pull up the advance decline ratio as well because that would be indicative of how the broader end of spectrum is looking like. Still at that around 300 odd advances. I mean, if it's not mockery, I don't know what it is right now, just 2,000 odd declines versus that of 300 odd advances.
And continues to be that, you've not seen an inch here or there in that sense. So we are actually quite happy that the screen is restricted there because you don't want that to increase much further from this point as well. But the mid cap and the small cap very quickly, reflecting the pain that we're seeing in the benchmarks today and down almost 2.5% for the mid cap 150 and the small cap also down a similar point. Not seen buying too much at all in today's trading session. The BSE 500, while there are some gainers to talk about, like Sri Sugar, the Polymed, that's largely been the gainers for the day. But in terms of the losers, you've seen some reprieve for Rain Industries, was down 10% at one point of time, and so was Petronet LNG, but still a down and out trading session as well. But let me welcome in Narendra Solanki. He's the head fundamental research analyst at Anand Rathi right now on the fundamentals, and we'll also be joined by a technical guest very shortly. But Narendra, good afternoon and thanks so much for joining in. Welcome to the show. Let me just take the first question and pose to you as well, and that's largely on Grow. Now, our viewer Madhva actually holds roughly about 385 shares bought at 180. Do you have coverage on the stock firstly, and if not, any view that you have on that space?
Yeah, good afternoon. Yeah, definitely we do not have any coverage and recommendation on this stock. However, if you look at the overall business, the way the company has been growing and the strategy, so it's a good business to have for the long-term growth story perspective. Plus, the overall sector is also expected to show decent amount of growth over the period of 3 to 5 years. So I think from a sector perspective, it's a growing sector, and the penetration is also expected to increase further. Yeah, definitely the growth is there for 3 to 5 years long term.
Okay, all right. So that's the view with regards to where Grow goes. The next question is on infra companies. Capsite Infra and KNR Construction are the two companies that our viewer wants to know about. Abhishek, in fact, is asking this question. Should I buy or hold is his question on these two counters. Do we have Kunal? Can I take this up with Kunal? Okay, we still don't have him. But Narendra, your view on these two particular counters, or broader end of spectrum, your take on these infra companies?
Yeah, KNR Construction, we have a hold rating, so we can continue to hold the stock for medium to long term. However, near term, the performance should continue to remain subdued and is expected to pick up from next financial year onwards when the activities and the bidding in the road segments continue to look up. So it's a hold from our side.
Hold on, KNR Construction, a stock that's not done well for investors also. But let me welcome also at this point of time of the show, Kunal Rambia. He's the fund manager and trading strategist at the Streets, who will be helping us with the technical side of things today. Kunal, good afternoon. Welcome to the show. First question posing to you on Kararo India. It's actually a small auto ancillary company. Sriram Raghuraman is holding shares at 325 and asking if there is, if it's a good time to exit this counter or should he continue to hold. He's also asking if he can add more at this point. Any view on the charts, Kunal, that you can recommend for Kararo?
So, if I look at the overall trend, it's still sideways to negative bias. I would suggest take an exit because, see, again, there are other counters which are showing good bottom formation, and there is some kind of recovery also, and which we have been suggesting on our channel regularly, right? So, I would advise an exit for now and wait for some kind of consolidation if you want to still continue with the same counter. Otherwise, go for the counters which are recommended on the channel.
Okay, all right. The next question that we have is on Motilal Oswal Financial Services. The average target price that our viewers bought it at is 764. Wants to know if it can hold average or what should be the course of action. Kunal, I'll stick with you for this one. Your view on the charts?
See, again, short term to medium term is a negative trend, but overall, if you look at the counter, it has not done much in the last one and a half year also. And right now, it's near to this round of support level of 700. So I will advise to hold for now. Don't average out the losing counters. That's very, very important for a trader to remember this. If the counter manages to go above 730, 35, then you can think of adding little more when the momentum picks up. But otherwise, for now, you can hold on and the stop loss can be 690.
Got that view, Kunal. But Shankar from Bengaluru is actually asking the next question. And viewers, you can also actually call us, talk to us directly for stock-related queries as well. The number is flashing on the top of your screen. That will be the landline number. The one which is visible right now, of course, is a WhatsApp where you can send your queries as well. Shankar from Bengaluru actually asking a question on ITC Hotels. He's asking if he can buy 100 shares right now. Kunal, would you recommend that? Because, it's been in a free fall in that sense, right? From that consolidatory 200, 220 mark where it was. What would you recommend right now?
See, the only thing which I can see on the chart is that now it's reaching the previous bottom, which was around 160. But rather than, catching the falling knife, I'll recommend to stay away from this counter. Let the dust settle. This chaotic market is creating a lot of trouble in terms of volatility. Rather than just randomly buying at this level, let the price consolidate somewhere near the lows and then show some kind of recovery. Initiate buy at that time, though it is at the present level, which is good level, but I'll still recommend some kind of wait for it.
Okay, all right. So that's the view coming in on ITC Hotels. We've got our next caller. Pavitra is calling us from Hyderabad. Pavitra, hi, very good afternoon to you. What's your query about?
I'm holding CIE Automotive 47K. 494 is the price. So, is it good stock to hold or do I need to exit?
Okay, Pavitra, when you bought this, did you see the charts or did you see the fundamentals of the company while buying it? Okay, we seem to have lost her. But Narendra, any view on CIE Automotive?
I think she can continue to hold on to it. And we have a positive view on the company, and gradually over the past years, they have not performed, but I think the business is picking it up and should improve going ahead. So I think she can continue to hold.
The next counter is RVNL, another one that's been not done well for investors at this point of time. And Lalita from Bengaluru, who is a regular viewer, is holding shares at 333. Kunal, coming back to you, should she exit this position, continue to hold? What would you recommend?
See, over a longer period of time, this counter was decisively holding on to 300 mark, but today it has actually broken that and it's now trading at 285. I would recommend an exit. Even if the counter recovers quickly and reclaims 300, I would advise wait in that case and revisit the channel and ask someone who is available if the counter crosses 305 mark. Till then, it's a clear exit.
Okay, the next one is on Wipro. Jaiprakash has bought 3,000 shares at the levels of 222. He's saying that it's declined around 20% for him. The stock is currently trading at 195. Holding Wipro is valid or should I exit is the question. Narendra, with everything that's happening in the IT space, with the AI concerns, would you recommend him to continue to hold Wipro?
Yeah, definitely. See the kind of volatility we have been seeing in the IT space. So definitely there are concerns in the near term. However, if you look the overall space, the companies have taken note of the emerging challenges and they have started investing into the AI-led developments. So there may not be an immediate upside in the next 2 or 3 quarters, but definitely from medium to long term perspective, it's a space where one can remain invested and the green shoots from the AI investment would start coming 3 to 4 quarters down the line. So definitely, it's a space wherein one can continue to remain invested.
Got that view, Narendra. But the next question, actually, it's on a IPO that's open today on Sedemic Mechatronics, and our viewer, actually Arvind from Mumbai, is asking a particular view. Narendra, I did see the Anurati note come in. Any view that you have that you can offer, Arvind, at this point of time for this company?
I think we have a subscribed long-term rating. So it's basically a electronic manufacturing services providing company which manufactures ECUs and provides to OEMs across industrial markets. So from valuation perspective, the valuations are fairly priced in. Hence, if the investor has a long-term investment kind of view, then only should subscribe and don't look for any listing gains, etc.
Okay, Infosys is the next one. Naktoda from Telangana is writing in. He's got 100 shares at the levels of 1421. What's the outlook for 3 months? Should I continue to hold? Kunal, your view?
Absolutely. At 1300, I'm very, very comfortable with this counter. It is consolidating now since 15 days, though the whipsaws are very, very high. But keep the support level of 1275 in mark, which can be a good stop loss also. And one can definitely initiate a buy at this level.
Got that view, Kunal. But the next question that we're getting in is on a very topical stock, Larsen and Toubro. And, our viewer, and I hope I'm pronouncing his name correctly, Tabakti from Hyderabad, has bought it at 3851. So could be that he might have bought it today as well. And he's bought 250 shares. Now he's asking if he should hold on or sell out of this particular counter. Narendra, do you have coverage on L&T? And at this point of time, what do you recommend clients to do? Because almost 37% order book coming in from Middle East, and a lot of those orders, almost half of them fixed price. What would you recommend?
I think as far as Middle East concerns are there, so I think definitely in short term, the company may face some challenges. However, if you look at the longer term view, so I think the company should be able to face the challenges and come out on the top. But definitely the near term looks challenging for at least 2 to 3 quarters. So if the person is not able to hold on, ride on that period of pain, then I think that she can switch. Otherwise, can continue to hold if the horizon is more than 1 year.
Okay. All right. So that's the view coming in on L&T. We've got our next caller. Vishal is calling us from Mumbai. Vishal, a very good morning, a good afternoon to you. How can I help you?
Yeah, I want to know about ONGC. I'd actually bought it because I thought the oil prices were going to go up and it would benefit. But now the oil prices are going up and it's not benefiting. Like the stock price is not increasing. And today also it's lower. So should I buy more? Would it increase because of the oil price? And I also have Oil India. I have really less quantity of Oil India.
Okay, got it. Narendra, and his point of view is not wrong, right? But I think it's just the kind of way the markets are moving right now with everything in the red, and probably that's why you're seeing those moves coming in on ONGC as well as Oil India. But your view on ONGC?
I think you can continue to hold on to the stock. And as far as the logic is concerned, I think the oil prices should continue to remain at the upwards. What the markets might be at this point in time, maybe thinking that the sudden rise in oil prices may not be sustainable enough for more than a quarter or so. And once the war settles down, I think the whole lot of crude supplies would be coming down. coming in the markets, and the crude price would again fall. So I think the longer the crude price remains higher, then only the exploration companies actually gets to get a benefit rather than the short volatile moves. But however, having said that, I think the volumes recovery should come for the stock, so you can continue to hold regardless of the recent volatility of the crude oil price.
Got that view, Narendra. But another caller now from Bengaluru, and Pramod has a stock query for us. Pramod, good afternoon. Welcome to the show. What's your query?
Yeah, good afternoon. Actually, I'm holding Titagar shares, 170 shares, total quantity, at the average price of 891.
Okay.
Right now, I'm sitting at the loss of around 42K.
All right.
Is it the time to average? Because I'm planning to hold it for the next 5 more years.
Okay, got it. Well, Narendra, do you firstly have coverage on Titagar as a stock? What would you recommend, a viewer, because he is sitting on a loss of almost 42,000 rupees. Do you cover this particular counter?
No, we do not have any coverage and recommendation on the stock right now.
Kunal, just trying to throw this your way, if you can help our viewer in that case. In terms of the charts, would it recommend or would it make sense to average it right now?
So, if you look at the entire rail stock rally, which we witnessed during 23-24, this counter, which was trading near 100 levels, went up to as high as 2000, right? And from there, it is now down to 650. And if you look at the price correction and time consolidation, it's been a pretty long time that the counter has underperformed. But even at the present level, there is no sign that the counter will stop its correction. Just like RVNL, which we discussed in today's show itself, I think this counter is also breaking its very important support level, which is 650. So on this coming Friday, if the counter remains below 650, it's going to be a cautious sign. I would not really advise average out. If the view is long-term, you can certainly stay invested because the longer-term chart is still showing positive trend, but the immediate trend is negative. So rather than averaging out, wait again for this counter to consolidate somewhere and then think of initiating a fresh entry into it.
Okay, all right. Now it's time for our rapid fire round. Kunal as well as Narendra, you both know the drill. Try to keep your answers as short as possible. The first one is on Jeevan Small Finance Bank. Vinay wants to know if he can continue to hold from a short-term perspective. Kunal, your view?
Yeah, it is a sideways consolidating, support at 53, continue to hold.
Apollo Hospitals bought by Govind from Dubai, and hopefully Govind is all okay at your end. He's holding 20 shares at 7550. Any view, Narendra?
No view.
Okay, 15 shares of Tata LNG purchased at the levels of 6350. Now sitting on a loss of 3000. Rahul wants to know if he can hold or sell. Kunal, your view?
The trend is negative, but near to the support of 4300, continue to hold.
Kunal, you had a view on Apollo Hospitals by any chance of our previous viewer?
Absolutely. It's at the support level itself. You can add even a little more with the stop loss of 7400.
Okay, any defense counter that I should take fresh entry in is the question coming in from one of our viewers. Kunal, any particular counter that you're looking at?
I'm looking at HAL. I think this counter can do good from here on. Keep the stop loss of 3800 and keep a watch for consolidation.
Afcon Zinc bought at 380. Kunal, it's been a downtrend for this one. What would you recommend Sunita to do?
It's an avoid for now.
Paras Defense, from a short-term perspective, the viewer is holding 50 shares at the level of 736. Kunal, your view?
Paras Defense has come down really good, very quickly from the today's high also. So it's an avoid for now. If the momentum continues, it's a buy.
James wants to ask a question on Kotak Bank. He's bought 100 shares at 420. Should he add more right now, Narendra?
Yeah, can I?
Interglobe Aviation, 20 shares bought at the levels of 5,300. What should I do? Rajiv is asking this question. Kunal, your view?
If the counter reclaims 4,600 in next 2 to 3 days, it's a hold, otherwise exit.
Concord Enviro bought at 420 rupees per share, Kunal. He's holding 80 shares. A 6-month view is what Giridhar is asking.
No, it's an avoid for now.
Zaggle is the next one. Kishore from Hyderabad wants to know the fundamental view on this particular counter from long-term perspective. Narendra, your view?
Yeah, no view right now.
Zaggle, any view, Kunal?
No, I would still avoid for now.
And Tata Steel also, Kunal, is it a good time to buy is what Biswajit is asking.
Tata Steel, this counter is showing good momentum, and right now in consolidation, near to 195, it can be a good buy. Stop loss can be 185.
KPI Green is the next one, 25 shares, bought at the levels of 523. What about long-term view? Narendra?
Yeah, no view right now.
Kunal again, KPI Green.
325, strong support. You can think of buying near that level.
Any PSU bank, Narendra, that you like currently? Bank of Maharashtra is a question that Rajesh is asking, but anything that you might be in your coverage?
Yeah, definitely PSUs have been our preferred pick for last 3 to 4 quarters. So if the person is interested in large bank, then SBI is one of the banks which you can buy. And in small banks, the Indian bank is okay.
10-second answer, Kunal, because we are at 99 queries on IRCTC, a long-term view. Very quickly, because I want to complete the 100.
So IRCTC, as we discussed about other railway counters, I think this counter is also falling right now. If consolidates near the present level, it can be a buy.
Perfect. Well, thanks so much, Kunal. Appreciate you answering so many questions so quickly, as well as Narendra for your insight. But 100 queries, Mahima, we have hit that target today.
So Puneet did fulfill his promise.
I did fulfill my promise today, but that's all the time we have on this edition. India Market Close comes up next.
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
Where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है? कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baje, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner.
Welcome, you're watching India Market Close, and I would say maybe a bit of a relief for markets. Remember, the word relief is relative over here. As Alex and I will bring you the show. Neeraj will also join us in a bit. 341 points down on the Nifty. You'll be wondering why I'm saying it's a relief, because it's off by a mile from the low point of the day. So the Nifty definitely looking better, even at a time, Alex, that the news coming in from the Middle East war has been thick and fast.
Yeah, absolutely. If you thought that it would dissipate, well, you've been completely wrong. So at the start of today's program, let's talk about the 5 key developments that you need to bear in mind with regard to the war and what is happening right now. Iran continues to strike various targets with drones and missiles. In fact, the latest development could well be an attack on oil tankers. This is something that is just about coming through. We'll get you details of that in just a bit. Beyond that, of course, the election by an assembly of Mojtaba Khamenei, who is the son of the previous leader of Iran, and that has come through. Of course, there is an allegation that there could well have been certain motivations behind this. Let's leave it at that. Beyond that, certain other developments. Israel has struck Beirut. Remember, a lot of the proxies of Iran continue to be targeted by both Israel as well as the US. And beyond this, there is also an Iran vessel that has sunk off the coast of Sri Lanka. Apart from this, and this is very important to note, Iran says that it has complete control over the Strait of Hormuz. This is an important statement to make.
Yeah, you know, this I think the Strait of Hormuz is a word missing here, but Strait of Hormuz is what we're talking about. 10 ships have been attacked, so that's the new theater of war. So that's what's happening on the geopolitical front. Here's what's happening on the market front. Now, obviously, sell on rise strategy has followed in trade. There's no large buying action seen across the board, and that really is the pain point right now. Some defensive action was seen in select IT stocks, because think about it this way, as the rupee gets weaker, maybe there is some tailwind there for IT, and frankly AI fears don't look so big right now compared to everything else. Defensive rupee depreciation and cheap valuations play is the reason that you're seeing IT doing okay. Private banking names also saw some buying action at lower levels. Think HDFC Bank, ICICI Bank, and remember, if you joined us this morning, that was something Parag Thakkar was talking about. Nifty could see a technical pullback after a 1,000-point decline in 3 days. The RSI has dropped below 30. That means it's now in the oversold territory. Support levels for the Nifty right now at 24,400, 24,300 and 24,200, and it's seen a 150-point recovery from the day's low, largely technical, as a sell on rise strategy continues. So there's no doubt about it, we're essentially seeing a pullback. Let me pull up the Nifty heat map for you as we're taking you through those details, and the Nifty heat map will show you that the only relief, if at all, is from some IT stocks. CIL doing okay. Bharti Airtel is also seen a strong move. Again, I mean, I don't want to keep saying this, but the fact is that this is what we talked about in our opening show today.
What is interesting though,
the Bharti Airtel, Infosys, as well as HDFC Bank.
Absolutely. Yeah. What is interesting is ONGC was at the top of the list. It has dropped down though 1% lower. And also Tata Steel, which is down about 7%. There isn't necessarily any major trigger on steel.
And we spoke about this as well. Parag Bhai was talking about the fact that
input costs will go up.
Input costs, but he was talking about certain other pockets in the metal pack that could see pressure.
Yeah.
Steel was one. He said that if there's a decline, you might want to look at closely.
Tata Motors PV, because of some data coming in, actually a Bloomberg report on their JLR numbers has depressed the stock a bit. And Larsen & Toubro, can we just pull up the intraday for Larsen & Toubro? Because even while it's looking bad at 4% down, it's really off its lows. It was as much as 7% down at one point. The sectoral heat map, if you can just pull up very quickly, and then, you know, if you want to come to individual stocks, Alex, but the sectoral heat map is showing you the picture. Nifty IT is turning out into maybe a contrarian play. Metals, the biggest loser, Nifty Realty, and some of that could be not just Sobha, but even the fact that there is now exposure to Dubai real estate could be depressing the realty pack.
Yeah, absolutely. Let's talk about a few of these key levels that we should watch out for. We've got Nilesh Jain as well as Dharmesh Kant joining us this afternoon. Nilesh, I'll come to you first on the charts and on the levels. As much as they matter right now, we're seeing a technical pullback perhaps. So the question is, do you buy into this, Nilesh, or do you hold out? Do you wait for the dust to settle? What would you say?
Very good afternoon to you, Alex. Good afternoon, everyone. Well, a similar kind of a pullback move we did see on Monday as well. But today we open on a gap down note, and now we are making a similar attempt to fill the intraday gap. But looking at the overall setup, today Nifty's low that is placed somewhere around 24,300. That is acting as a very strong support, because that's a support area, and these are the levels that we have seen earlier last year in the month of July, August, and similar kind of rebound that we have seen over in that particular time. So overall, as of now, looking at the broader structure, which has already turned on the negative side, so we can expect merely a pullback since the Nifty RSI, which has gone into near about oversold territory at 30. So a technical bounce that cannot be ruled out, but these pullbacks are unlikely to be as sustainable. And on the upside, 24,600, 24,650, that's the immediate resistance zone that might be tested on this particular pullback. But overall, I would rather wait for a confirmation about 24,800 to call it as a short-term base, and then probably we'll get more confidence to ride this pullback up to 25,000. But as of now, I would rather wait for dust to settle down, as you have rightly pointed out, and I'll keep an eye on important support that has shifted to 24,500 on the closing basis. If Nifty manages to close about 24,500, then yes, tomorrow may be a pullback continuation day.
All right. Individual counters, Nilesh, or would you say that you should wait for a bit? Are there still pockets where you can deploy?
Well, absolutely. So we are keeping an eye on metal space as a whole, specifically aluminum play, that's Nalco. We have already recommendation this particular counter to our client as well. And on the technical front, we have seen a very strong pullback move on Monday. Today, we are witnessing a follow-up move. In spite of such a sharp sell-off, we are witnessing. So this particular counter is outperforming, and we are expecting a pullback move to continue on the upside towards 380 to 385. And one can keep a stop loss below somewhere around today's low at 361.
Dharmesh Kant also joining in today. Nilesh, of course, stay with us. Dharmesh, are you in a holy mood? Or did you come prepared to celebrate today? Because in Bombay, people have celebrated yesterday. I think you're in a bit of a holy mood. But have you managed to celebrate through the day at all with everything that's happening in markets?
Yeah, good afternoon, Tavanna. Happy Holi to you and to all of you. Yeah, definitely the hangover of yesterday is being carried forward to today. And I thought it would be a bit different the day, but it's not panning out that way. And it's a very gloom-doom kind of a scenario across the dealing room and the people and the Chennai's everywhere. And the worrying factor is post-December, the last 2-3 months, what we have seen whenever the selling is happening in the market, throwing everything out. And that is what is worrying the investors as well. I mean, the only question they are asking is not about on the fundamentals, but about why such aggressive kind of a selling is always, occupied on any news flow, whether it is a slightly negative or, grossly negative kind of a news flow. So that is what is hurting the entire space.
Was Dharmesh, to come back to you, because I think we're having a little bit of problem with your frame, with your feed. We'll come back to you once that is settled. In the meanwhile, let's go across to Puneet just to get you a check of what the F&O setup looks like. Puneet, oversold zone for the Nifty 50 and a lot of people calling for a sell on rise strategy. What are the F&O cues telling you?
Especially in the auto space that are seeing selling out. And the safe spaces in that sense, right? Oil exploration as well as defense, that continues to have money being deployed in those particular stocks. And solar industries as well as Oil India are a couple of them that are seeing long build up today. When you also see short coverings in that manner, you are seeing stocks like Infosys actually out of, on today's trading session, as well as Oracle. So the IT pack seeing covering of shorts, but not in terms of with rigor in that sense. So Infosys looking at 1.7%. But largely seeing only a little bit of coverings in terms of shorts, still very depressed in terms of what the last 1 month has been for the IT names. In terms of the other key stocks, in terms of long unwindings, steel names as well as PSU banks, both spaces that are done well, seeing longs being unwinding to profit booking here as well. And finally, in terms of shorts being built up in the system, Petronet LNG led by factors that we've discussed since the morning on the Israel-Iran conflict, as well as Qatar stopping the gas supply, is some of the key aspects, and Tata Steel is the other one that is seeing build up of shorts yet again as stocks that done well. So overall, these are some of the key stocks that we are tracking at this hour, a lot led by what's happening globally as well.
And what's happening globally is really where the story is. Aditya Rajkol joining us from Tel Aviv now to get us the latest developments. Aditya, first, I hope you're doing okay. I think the entire world is following your reportage from Tel Aviv and all of the inputs that you've got from what is the scene of action, even though it's looking very serene and people are, I think, permanently jogging where you're standing because wherever I see you on TV, there's someone jogging behind you. Having said that, the news flow is suggesting that the fighting is only getting more intensified.
Well, that's right, Tamanna. What we are reporting from Tel Aviv is normalcy, a sense of normalcy out here for the people because they're used to the war. They're used to fighting for years together. So every time there's a siren that buzzes all across and blares across the skyline, there are incoming missiles coming in. So people run to the bomb shelter. So that's part of a daily routine. So normalcy isn't impacted really because of that. But coming to your question of what really is happening out here, from your standpoint and from the business community that is really looking at things and, unfolding, the state of Hormuz is the central focus point today. Because Iranian claims clearly indicate that 10 oil vessels have been attacked. And the Iranian IRGC has also given a threat saying that they will not let any of the ships or the oil vessels really pass through the Strait of Hormuz at this time as the fight continues. So there's a blockade that the Iranians have claimed in that particular area. They also claim that 10 vessels have been attacked already. Yesterday, US President Donald Trump came in and he said that he will be policing this. He will be sending in US vessels and US ships in that area to ensure smooth passing of all the oil tankers in that particular area. But the fighting continues as of now. We'll have to wait and watch whether the Strait of Hormuz really impacts the global, oil connectivity and oil trade, because India gets a significant more than 40 to 45% of oil through that connectivity route as well, even though sources in Russia claim that they are ready to fulfill all the needs of India at a time of need. So India has stood with Russia. Russia plans to stand with India in this hour of eventuality. On the fighting line, on the front lines, the missiles are flying thick and fast between Israel and, of course, Iran. What we also know is that several other countries are engulfed in this, including UAE, Saudi Arabia, Kuwait, Bahrain, and others as well. So
clearly, it seems to be spreading because you have a strike reported in Cyprus. The French are sending one of their destroyers there. But, I'm trying to understand your perspective on this entire news flow that Iran is looking like its position stronger than what was earlier believed in terms of the amount of ammunition they have, the cost of ammunition they have, and the way that they're striking at Gulf countries. How long will this war last? What's the assessment of people who you are talking to over there?
Well, Tamanna, it was always expected that Iran was preparing for this day. Even when the 12-day war happened between Iran and Israel, Iran had a huge stockpile of weapons, ammunition, and missiles in their kitty. This time around as well, perhaps Iran at a certain point expected that US will intervene in this. There will be a joint US-Israel, kind of a operation against Iran. And they had thousands and thousands of missiles, including long-range missiles, cruise missiles, and ballistic missiles that are prepared already. So what the US and Israel are currently doing, they're trying to dismantle first the air defense system of Iran, and second, the entire potential capacity of all those batteries that are lined up in several launch pads across Iran right now. So all the launch pad areas are being slowly targeted so that Iran is decapacitated of the entire potential of attacking Israel or surrounding countries wherever the US bases are currently. But even though, we're talking about Strait of Hormuz, which is completely Strait of Hormuz, which is currently blockaded apparently, there's also flight connectivity that is disrupted majorly. Ben Gurion Airport here in Tel Aviv is completely shut. They will be, briefly opening it tonight so that the incoming Israelis, more than 1 lakh who are stranded outside, can get back to their country. Outflowing traffic may not be allowed till now. Dubai, Abu Dhabi, and Doha are also slowly, opening up to the global traffic right now, but not a permanent normalcy restored. So it will take some time for entire normalcy to be restored because, as you know, US embassies and US consulates in Dubai and several other locations, including Kuwait, have been attacked in the last 24 to 48 hours. So the situation remains grim. It's very critical and fluid right now. We'll have to monitor developments very, very closely, even as NDTV continues to report from ground here in Tel Aviv.
Yeah, Aditya, very quick last question. It seems to be that other countries are entering the fray as well. You saw the update from France. Is this something that you're looking at on the ground as well in terms of what Israeli forces are going to see in terms of cooperation from countries in Europe? Of course, US has been with them from the start.
That's a very important question that you're asking because many countries are literally forced to enter the war because when we look at France, the French naval base was attacked in Abu Dhabi. Even though there were no casualties there were some injuries that were and some infrastructure damage. But at this point in time, France has said that their Rafale aircrafts are circling around the airspace and ensuring the safety of the naval base. Apart from that, UAE and Qatar have announced that they will not, in fact, engage in a war or retaliation against Iran at this stage, but they have the right to act. At the same time, Saudi Arabia, apparently through sources in Saudi media, have been saying that the Crown Prince has said that he will be retaliating against Iran. Whether Saudi Arabia enters the war to support United States at this particular time remains to be seen, because that will be a historic moment, really, that the Saudi Arabia is opening its military and, of course, air capacity to, in fact, have attacks against Iran. So the entire conflict seems to be widening at this stage. It almost seems like Iran is at a cusp. Will democracy be restored? Will there be a new governance mechanism? Or will the same old Iranian regime continue to operate under Mojtaba, who's the son of Ayatollah Khamenei? So we haven't seen the end of it. It seems it will take a few days or perhaps weeks for the end of the escalation or some kind of an off-ramp.
The off-ramp is what matters. Meanwhile, it's really pleasant to see that view behind you, Aditya. Stay safe in Tel Aviv. Aditya Raj called there. Reporting from Tel Aviv. Now, meanwhile, the point that we were making, it's a claim by a senior IRGC Navy official who says more than 10 oil tankers have been struck in the Strait of Hormuz after ignoring Iran's warning that this is a war zone. So this picture coming in from media reports and looks quite worrisome at this point. Mihir Vora, CIO of Trust Mutual Fund, joining us this afternoon on India Market Close as we try to make sense of what's happening around us. Mihir, some recovery from the lows from markets, but would it be fair to say that we don't really know if we're going to see a de-escalation anytime soon? Would you say that this is the sign that there would be a reversal, or there's more to come?
Oh, absolutely not. This is a time where everything is up in the air, frankly. We don't know how long this can last. So right now, it's more of a wait and watch as far as the markets are concerned, market view is concerned, frankly. Because, when the war started, the stated objectives were to keep it short, but there are lots of moving parts and it's too early to take a call on which direction or what time length is going. And this probably is a critical time because
unlike in the Ukraine situation, this time around the oil supply and the gas supply, etc., for the world are disrupted quite more significantly than before. So it is a situation which is trickier than earlier.
Yeah, okay. Mihir, hi, Alex here. I'm just wondering from the perspective of a money manager that has most of their assets here in India, and what is your approach going to be? Are you utilizing cash that you might have held strategically? Are you doubling down on certain investments where you think that this is overdone? Of course, at this moment, quite a bit of the market is bearing the brunt of the sentiment impact and the risk of sentiment. So there will be pockets of opportunity. Are you seeing them?
See, this is not a time where valuations matter, frankly speaking. So whatever you like, you have a list ready and you try to nibble. But as I said, it's only been the third or fourth day of activity, and there are so many moving parts that we'd rather conserve the cash that we have currently rather than try to hurry the situation. So normally we don't keep too much cash in any case. Typically 5 to 7% is the 4 to 7 I would say is a normal range. So we are within that range. But we are in no hurry to deploy, frankly, because there are, as I said, lots of moving parts.
Okay. On the fundamentals that could have changed dramatically for the pockets that you're monitoring, and obviously the oil and gas pack is something that you looked at very closely. Fertilizer stocks are one that are bearing the brunt. Several other stocks obviously react to a sharp increase in oil prices, transport and aviation among them. But from the pack that you are looking at, maybe even in the financial space where you saw private banks today, Mihir, this morning, a couple of them open with cuts of 3% and then recovering from the low point. You're saying that you would hold off on significant deployment at this moment. But are there opportunities that you see will arise?
Oh, absolutely, because we have a portfolio which is 90+% invested, right? So these are stocks that we like in any case. So one option is, of course, to spread it across the existing portfolio. Other option is to see if, because of the war, certain stocks get corrected or hammered down a bit more than expected, and then you try and pick and choose the opportunities. So we'll kind of use both the approaches. We'll look for new opportunities where stocks get hammered down because of the situation, and we'll also add to the existing portfolio. But as I said, we are not doing anything in a hurry as of now.
Mihir, I wonder how you are looking at the contrarian view on IT right now. Is it in relative terms, IT is looking safer than the rest? Would you nibble at IT, at private banks today, maybe even in L&T?
Oh, absolutely. Because, as I said, right now, it's not a question of valuations. Because when the market turns, frankly, it's not the cheapest stocks which will go up. It will be the stocks which earlier or even continue to have the positive momentum in terms of earnings growth, etc. So buying value for the sake of value is typically not our strategy. Having said that, certain pockets like IT had become overdone, had become, too cheap temporarily, I would say. And while our view on IT has been negative, there is always a consideration from the benchmark. So we were quite underweight versus the benchmark. And with the kind of hammering that is happening in IT, it was anyway a good time to start reducing the underweight, as I would say, from an extreme underweight to a less underweight position. But that, frankly, had nothing to do with the war situation. We would have done it in any case because of the the AI event-driven hammering that the IT sector went through. So it's always good to lock in your gains, relative gains, because when you're underweight and the sector underperforms, then you make relative gains. But then you want to lock in some of those gains, so to say. So we've been doing that, but that's irrespective of the war situation.
Here, often events like these are looked at in retrospect as opportunities to have bought in a large way. Is there a reason why you're saying that you would like to hold your horses? You would like to wait? You're not in a hurry. What if this gets resolved at the end of the week? Nobody knows. And if that does take place, this would have been a blown opportunity. So why are you saying hold your horses?
I'm talking from my point of view because we are anyway invested, right? We are always 90+% invested. So the opportunity cost of that extra 5-7% cash is not that great, because we anyway would be picking stocks when the situation turns. So that much cash we would like to preserve in any case. But having said that, this sell your jewels and buy stocks kind of a situation is still not there, frankly. The Nifty is only, a few percentage away from the peak, while the broad market has seen a lot of correction. It's not a panic or a bloodbath kind of a situation. So that, once in a lifetime opportunity would come when, if I hope not, but if the correction is far sharper. So far, I would still call it a normal market correction. The good thing is that with India having underperformed for quite some time, we may fall significantly lesser than some of the other markets. So if you see the reaction in Korea today, the market's down 10% and almost 15-20% down in the last 2-3 days. That is because of the stretched, performance of Korea in the last 6 months and 12 months. The market's almost doubled and tripled. A lot of stocks, went up crazily. We haven't done anything, frankly, for the last 1.5 years. We were the anti-AI trade, so to say, ignored for the past 1 year. So we may not react as badly as other markets in case there's a downturn, which is a good thing. As I said, even before this correction, we had corrected to a level where valuation comfort was there, where there was growth visibility. Now that still remains, but if the situation elongates, the war elongates, then the growth part also might start coming into question. That's why we are a bit cautious. Otherwise, anyway, we are 90+% invested. So if the market turns around, we are happy.
Market turns around, everyone's happy. I don't think anyone will be sad today. Hopefully, it'll be sooner than later. There has been a decent recovery. I wouldn't say a sharp recovery, but some decent recovery that we have seen. Thank you so much, Mihir Bora, for speaking with us. Always a pleasure to have you on. Going across to Puneet now, who's joining us with our stock of the day. And our stock of the day is Larsen & Toubro. Battered for obvious reasons, but smartly off its lows today. What's the story here, Puneet?
Well, thank you for that. Definitely a stock that's seen some recovery now, but was down almost 5% today as well as on Monday. Now, there are two key numbers here. 37% of the company's order book comes from the Middle East. That's point number one, and almost 33% of the company's net order inflow in the 9 months of FY26 has been from this region as well. What's the bigger number that you need to focus on is that 55% of these orders are fixed price. That means that if there is a cost escalation because of the factors that we are seeing, the company will not be able to pass those on. And hence you saw that reaction over the last couple of days and just seeing some buying as we're putting on the stock of the day. The other aspect of the order book concentration from the international exposure, it's almost 49% of the company's current order book that comes from the international space, and that's largely from the Middle East amongst other key regions. Saudi as well as the other key regions do dominate, as well as the UAE do dominate that. So when you look at the next point, almost 80% comes in from the Middle East, and go across to the next one as well. You see Saudi as well as UAE largely contributing. This is a very important chart though. For almost 37% is the L&T's exposure. What about the peers? It's much lower than L&T. So it's almost 20% for KEC and 8% for Kalpataru project. This is exposure of the Middle East in their current order book. So you're seeing a much bigger impact here. And when you see the revenue contribution for FY27, Saudi as well as UAE contribute almost 28% consolidated, and any, what we are seeing friction in Saudi as well could have a material impact on this counter. Now, there is, of course, what we've seen about the hydrocarbons as well as the other key sectors, but the risk outlook is something now that potential disruptions in the current orders as well as the workforce and the manpower, those are a risk factor as well to watch out for. Finally, I just want to quickly highlight what brokerages have been saying, because while we've been highlighting this key aspect, 82% still hold a buy call, and this is brokerages across the board that have on L&T, while roughly about 20% is the return potential that they also see even from this current market price. A couple of notes which came today as well as yesterday, Macquarie was one of them. They have a target price of 4,910 rupees, continuing to maintain that while this conflict could have an impact on L&T, they've maintained that they see some margins could be impacted at this point of time for Larsen & Toubro. And MK had a much more interesting point here as well. They see that for Q4, the management could have given some guidance of 5.9 lakh crore in terms of order book. That is a number that we continue to monitor. So overall, while there has been a lot of pressure, brokerage is continuing their positive momentum for now and awaiting commentary for the big Q4 at this point of time.
Okay, important. Thanks so much for putting that into perspective for us. By the way, in the meanwhile, you have had Larsen & Toubro stock price recover as much as 3.5% from the low point of the day, now trading with cuts of about 4%. Dharmesh, quick view from you. on whether you see this is an opportunity to add a portfolio stock in the past, and there's no question about the size of the order book. It's only about the tension in the Gulf region and the potential impact on the revenues going forward. What do you think about this?
Yeah, Alex, I mean, there are 2 points. One has been clearly highlighted about the near-term impact on LNT because of its huge exposure in the Middle East. And the second point is around 23% of the consolidated PAT comes through IT services, that is LTIM and LTTS. So those are the two overhangs in the near to medium term on LNT. I think IT overhang will continue with it. But if you go back into the history like Gulf War and all, but that time also LNT was having a significant exposure, over 20% of the order book was from that area and they were building on that. But post that, they got more work. So I think from a structural perspective, it's a good buying opportunity, but it all depends upon the length of this duration of the war, which may continue. I am having a bad sense about this. If it turns out to be a Russia-Ukraine kind of a stretched conflict, then definitely, I mean, even these prices level would be sustainable volatility and there would be further drawdown on the stock price. So as of now, we are waiting and seeing it. We have not taken a sell call on LNT as yet, but we are watching from the sidelines.
What do you have a buy call on, Dharmesh?
Sorry?
What do you have a buy call on, if anything?
Tavala, this is actually a very critical, difficult market. The point which I was trying to make earlier in our earlier discussion was that the type of selling which we have seen in last 2.5 months was as if people are waiting to sell, and because of some news flow or some triggers, the selling was activated and it was hurried up, and that's not a good feeling. So, I mean, war declared was on Monday morning, but if you see Thursday or Friday kind of a selling which happened in the market, despite of any news flow coming in, was disturbing, and we were discussing that only, and Monday morning this news flow came through. So my sense is more or less it's more to do with the valuation resetting of the Indian market. I mean, it's a detailed long discussion we can have later on. We are already working on a report, but the idea for a tactical buy for this kind of a selling opportunity is go with the strength. So where there was strength, buy those, and I think public sector bank was showing a great strength before the selling came in. So those are the good areas to taking a trading or tactical bets out there, followed with automobiles. So these two are clear winners whenever the market stabilizes.
Okay, stay on with us, Dharmesh. Just getting a commodities and rupee view as well. Navneet Damani, Head of Research Commodities at Motilal Oswal Financial Services, joining us this afternoon. Navneet, very good afternoon to you. Really, let's get the take first on gold and silver. Today, a bit of softness versus the dollar, really. But is it a no-brainer that we might see another mini rally in gold, considering that its safe harbor properties will become more attractive over the next few days as the conflict looks like it will stretch out?
Well, good afternoon, Tamanna. And as the conflict started, we saw gold prices moving from $5,000 to $5,500. But eventually, what happened is over the last 3 days, prices have cooled back from 5,500 to back to 5,100 odd levels. Market has started to discount a lot of things other than the war also. Typically, the rate cut projections, which were now 3 rate cuts possibly in 2026, is now down to about 1 rate cut. Dollar index has been rebounding. We've seen lows of 96, and now currently as we speak, it's about 99 levels. And the possibility of an inflation spike is what is having a bigger overhang at this point in time in the market, which is kind of not going too well with gold and silver as a commodity. Gold definitely is a safe haven and will come into action as and when the war kind of news escalates. But silver typically is witnessing a lot of slowdown, predominantly because the use of industrial commodities, industrial metals, because of higher inflation price, higher energy prices, will take a beating, and that is what we've been seeing on aluminium, zinc, copper, as well as on silver.
Okay. So that's a view on gold and silver. Navneet, hi, Alex here. I'm just wondering what your call is on the rupee as well, because the latest bout of depreciation in the rupee is on account of the strength in the dollar. And this is a strength that is across a basket of currencies. And you are seeing perhaps signs, maybe you can tell us, of the Reserve Bank of India stepping in to curb that volatility. But do you see a further slide possible in the rupee, further weakness?
Well, there are two parts to the rupee narrative. One is predominantly the dollar index, which is strengthened from 96 to 99. And second part is a sudden spike in crude oil prices over the last 4-5 sessions, where prices are up about 18-19% in a matter of no time. For the last 1 year, crude oil has been pretty much range bound within a $55 and a $65 bracket. And it was very comforting as far as inflation was concerned. But now this sudden spike and control of Strait of Hormuz with the Iraqi soldier is definitely a negative news for the rupee, because almost 50% of oil coming into India is passing through the Strait of Hormuz. So on the global framework, it's about 20%, but in the Indian framework, it's 50%. So risk premium, insurance premium, cost of oil is going to definitely go higher, and that is going to be a negative impact on the inflationary scenario. Our purchasing cost for the oil will go up, and that is what is kind of impacting the rupee at this point in time. My sense is maybe 93 or 92, 80, 90 kind should be a short-term top, and RBI should step in around those levels. This will coincide with dollar index at 100, because reaching 100 and sustainability going above that will give us supply shockers to rupee eventually. So my sense is that 100 for dollar index and 90 to 70 or 90 to 90 for rupee will hold for the next few days.
What is the level that the rupee can fall to, Navneet, if you see crude spiking up further? Because from the action that we've seen in the last hour or so, where 10 tankers have been attacked by Iran, it seems crude prices could be heading north again.
So if something like that has to happen, and if dollar index also breaches above 100, then maybe dollar index next pit stop is 102.5, where rupee also could slide toward 94.5, 94.70.
Okay. 94.70 are the levels we could look at. Thank you so much for speaking with us today, and just giving us a sense of where rupee and gold will go. Navneet Damani there, commodities expert. We're going to take a very short break. I'm just going to pull up this post from Nitin Kamath of Zerodha before we go into that break. I thought there was quite something. He says the market is too calm given whatever is happening. I'm not sure it should be, and even that is making it even scarier. Do you think the market is too calm? Tell us what you think. We're waiting to listen to you. We'll be back after a very short break. Stay tuned.
The stage that brings together India's most compelling creative voices,
NDTV का क्रिएटर मंच है,
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है? कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
the latest trends. It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Hi, I'm Tamanna Inamdar. Welcome back. You're watching India Market Close. All right, quick look at what's happening in the markets. I want to pull up the Nifty intraday because a bit of a slump again, still in that 1.5% drop range. But after some recovery, you have a little bit of a downtick. So it's clearly a sell on rise market, even if the rise is that minuscule. You're still about 360 points down. Nothing really to cheer there. The Nifty IT is the lone ranger in the markets today in the sense. Pull up the Nifty IT intraday and that also off its highs, but Nifty IT seems to be turning into a bit of a contrarian play. What's hurting the most? Of course, your gas stocks, Petronet LNG, MGL, all of them seeing a fair bit of pain today. Tires as well, JK Tires, all your steel, Tata Steel, SAIL, of course GAIL, coming in with most pain. On the other side, look at what's happening with sugar. This is turning out to be an interesting side story really. Balrampur Chini about 7% up. All of them, if you pull up all of those sugar counters on your screen, you will see some interesting moves on sugar stocks as well. The reason for this is some sugar refining facilities in the UAE are also not really firing right now, and that's giving a good fillip to our domestic sugar companies. You also have the chance of ethanol being required in higher quantity once crude prices go up, which is why sugar is tasting even sweeter today as far as the stocks are concerned at least. But I want to pull up European markets for you, and I found this quite interesting. Look at how Europe has opened and is sustaining nearly 0.5% up or thereabouts on the DAX. The CAC also in the green, a little over 0.25% up, and the FTSE completely flat. US futures also not as bad as they were. Could you see some signs of recovery at least coming in from Europe? Not so for Asia. I mean, South Korea's Kospi witnessed its sharpest fall since 2008, battered by escalating Middle East tensions, surging oil prices and aggressive profit booking. Chip heavyweight Samsung Electronics, SK Hynix was sliding sharply. A weakening won is also intensifying foreign outflows. My colleague Hiral is joining in for more on what is spooking the Kospi even more than other Asian markets.
Absolutely. You know, I mean, a 20% plunge is what you've seen in totality over the last 2 days when it comes to the Kospi, and a sharpest 2-day decline in the South Korean stocks since the 2008 financial crisis. Now, if you talk about Kospi, it's gone from the all-time highs above 6,200 to a free fall below those 5,300 levels already. Along with that, if you see the broader index, which is KOSDAQ, that has also fallen by around 13% in intraday trade in today's session. Now, very quickly in terms of circuit breakers, the fall triggered a trading halt on at least 2 occasions, and the trading was halted for 20 minutes after that initial 8% plunge. In fact, the circuit breakers have been triggered for the first time in 576 trading days. That's what you're looking at. Now, if you talk about the market value that has been wiped out, you're talking about almost $270 billion that has been wiped out in a single day. Now, let's understand what are the key reasons. First up, the Middle East geopolitical turmoil is what is impacting markets across the globe. Now, energy supply fears is the bigger one because South Korea is the world's 4th largest oil importer. So it is really very sensitive to swings in terms of oil prices as well as geopolitical shocks in the Middle East, and rising energy costs could actually go ahead and put pressure in terms of industrial as well as the export-oriented sectors in South Korea. Secondly, you're seeing profit taking that's coming in because Kospi is one of the best performing markets so far in 2025 and YTD 2026. The gains have actually extended in 2025. 75% is the kind of returns that you've seen. And if you talk about the index, it's gained nearly 50% in the first 2 months of 2026. So you understand why the profit booking is coming in as well. Secondly, as Tamanna was mentioning, the semiconductor sell-off. Now, the investors had actually continued to pile into AI and semiconductor themes, where there was a lot of diversion that happened into heavyweights like SY Hynix, Samsung Electronics. Both of these counters are the ones actually who are leading the losses on Kospi in today's session as well, and are already down 18% in the last 3 trading sessions. And the Korean won, which has weakened past the 1500 per dollar for the first time in 17 years, that has led to almost 1 trillion won worth of equities outflow in a single day. What next is the key from here on? Now, the authorities are preparing a 10 trillion market stabilization fund to counter this Kospi crash. Secondly, they are preparing to conduct Korea Treasury bond purchases and expand the market operations. And they might be forced to actually keep interest rates higher for a longer term from here on. So they have, a lot of ammo in place as well right now to counter this crash. Whether it works or not is anyone's guess. But this is going to be interesting.
Certainly interesting. Hiral, thanks so much for getting us all of the reasons why the Kospi is under such a lot of pressure, and that market as a whole, the South Korean market, under pressure. But speaking of under pressure, you are once again seeing selling pressure emerge for the benchmark Nifty 50. We're at 1.6% on the downside. Let's pull that intraday chart up, and there are a few counters that stand out. Ultratech Cement, pull up the intraday chart for Ultratech Cement, and you will notice a pretty sharp fall off from the recovery that you saw. Reliance Industries also being sold into, Bajaj Finance is being sold into. So a few of the stocks that had gained from the low point of the day are in fact being sold into at this point. Let's get Shivangi Sarda, who's an analyst, equity and derivatives and technical at Motilal Oswal, joining us right now, just to give us a sense of whether this is more of the same in terms of a sell on rise strategy playing out. Shivangi, is that at play right now?
Very good afternoon. Thank you for having me. So we've seen that, with India VIX spiking to 21 zones, it's clearly a sign of discomfort and volatile cues in the market. Of course, we've seen a good pullback from the lower levels, and the Nifty index has recovered from its lows after the gap down. But then we've seen that global concerns are still intact, and there will be geopolitical tensions which will be impacting and influencing our market. We've broken the budget day low, and we've actually, we are on a verge at the 20 monthly exponential moving average for Nifty. So these levels would be very important to watch out. 24,300, which also happens to be the low for today. This will be an important zone to watch out. And upside still remains capped because of the lack of follow-up, but we are seeing 24,750 as the next cap for Nifty index. Of course, volatility will continue over here unless Nifty India VIX kind of cools down. Talking about Bank Nifty, this index has shown slight, resilience as compared to the broader market. And of course, we've seen weakness has crept in here as well. But then again, we are holding on to the important lower levels on the weekly chart frame, which indicates that there will be some sort of stability provided in Bank Nifty as compared to the other sector.
Shivangi, just want to understand what's your take about the kind of selling pressure we've seen at 24,600. Just pull up that intraday of the Nifty. Sudden sharp selling pressure coming in. Is this technical levels where the support is not holding up for the index?
So absolutely, we've seen that the call writers have been consistently strengthening their positions here, and we've seen IVs have shot up a lot in all the premiums, which clearly indicates that there will be some sort of pressure which will be intact for the time being. Now, unless this IV cools off, we'll be seeing some volatile swings in a range as well. So we are expecting, the index to consolidate in this range unless and until there is some trigger from the geopolitical tension. But if it, manages to hold these levels, then we could see some bit of stability and, bottoming out over here. But then again, 24,000 would be the next important support to watch out for Nifty.
Okay. All right. So that's the technical view on the benchmark. Dharmesh, I want to come to you on a few of these financial names because if you look at it, Bajaj Finance down 3.5%. A couple of those large public sector banks also getting battered a tad bit. You have HDFC Bank, ICICI Bank that have recovered from the low point of the day but still taking a bit of a battering. Are these opportunities, in your opinion, to buy, and which of the financial pack would you prefer?
Yeah, Alex, definitely it gives you an opportunity to do the cherry picking out there. But there are two caveats again here. One is because what is happening is inflationary in nature, so inflation will definitely rise going forward in next 2 or 3 months. If the war is prolonged, there will be furthermore danger of higher inflation. So one interest rate cut is totally ruled out in such a scenario, and there can be a possibility of interest rate hikes going forward. So that will hurt the financial valuation at where they are setting on. So again, nothing is very clear as of now how the things are going to turn around. But again, from investor perspective, if you are a long-term investor, then I think public sector banks with 5% kind of a cut in most of the stocks offers you a good opportunity. Bank of India being a case in point. And on private sector banking space, we are betting on IndusInd Bank and Axis Bank. So these three picks, as far as NBFCs are concerned, we are just staying out of them because one is we are expecting a slowdown in the NBFC space on the growth run rate. And secondly, the cost of funding goes up, then definitely there would be some compression in the NIM. So there we are having a wait and watch kind of a policy.
Okay. So we were talking earlier about sugar prices and how the up move in sugar prices is today reflecting in sugar stocks. Sharath, what is the reason we've seen this sudden spike in the sugar pack today?
Well, exactly. It's a Kadwa din, but there is something meeta definitely there on the sugar stocks. Interestingly, the US sugar future prices, they have jumped up almost, you could say 14 cents per pound. And interestingly, overall, if you see the up move which has come in the prices, that's actually auguring well for the ethanol segment as well. Now, the domestic sugar price, that has also turned a bit attractive and it's at parity with the global price. Remember, a higher ethanol mix, especially for Brazil, which is the largest exporter. Now, because of the rising prices, they can divert it to ethanol segment as well, and that is what is aiding the global sugar prices as well. But why it is important for the Indian exporters? That's very much important because the Indian sugar export, now it becomes viable to give it to more nearby countries because the South American countries, the transportation costs are on the higher side, and currently as per channel checks, the Indian sugar exporters are not taking extra costs on themselves. That means there's a viability coming in for the sugar exports and the ethanol segment as well, and that's why we are seeing a good volume-based buying in the sugar stocks.
Okay, stay on with us, Sharath, because we'll talk about insurance also in a second. But I want to quickly take Dharmesh's view on the sugar pack. And if this is truly an ethanol as an option kind of a story, then it could be more than a single day's move.
No, Taman, I think this is a sugar punt which is playing out because for Indian perspective, from India story, the export quota is already been quantified. You cannot export more than that. And ethanol blending has been 20%, which actually is the case. I mean, the running case of ethanol blending is around 20%. So you don't have a scope even out there. The only key, best case scenario can be uptake in the ethanol base price by the government of India. So if that is the key, because of the higher petrol prices, if some leeway is given out there, then it will be good for the sugar mill owners, and that is what I think is playing out. Other than that, I don't see why, Indian sugar stocks should be jumping out. Overseas is a different story. You can go to blending up to 90% of the petrol inflow of the country. So Brazil stands to gain most from this uptick in the oil prices. So, couple of days punt, you can be lucky and book your profits if you have bought it earlier.
Let me ask Shivangi then what she thinks about something like a Balrampur Chini or a few of the other sugar names. Should you take your money off the table, go on a diet perhaps?
Absolutely. In real life, yes, definitely we should balance out the sugar and go on a diet. But of course, technically speaking, there has been a tremendous amount of surge in the price volume today in Balrampur Chini and the other sugar stocks as well, for that matter. Now, the good part is that Balram Chini has kind of sustained in the last 5 weeks, and it has crossed its key exponential moving average on the weekly basis, which kind of gives us a good sustainable levels at these zones. So this could be a buy, but of course, this will take a little bit of your patience. Because it is, a kind of a slow and steady one, and it, tends to fizzle out after a good momentum. So after, today's surge, we could see some consolidation, but overall structure looks quite positive from here onwards because of the base formation that has been done.
Would you hazard a BTST or any calls with about 10 minutes to go for trade? Because you've seen some recovery candidates.
Yes, of course. In fact, from the BTSC space, I would like to go for Coal India, which has seen that, the stock is coming out of its consolidative band from the last 8 weeks. And there has been good amount of buying from the opening tick itself in today's session. And overall, this stock is not dampened despite the volatile cues. Also, we've seen amidst all this, geopolitical tensions, this space has been one of those spaces which has been, quite strong as compared to the others. So recommending a buy here, and we're looking at the next targets of around about 450 and with a support of 425.
Yeah, fair point. All right, so Coal India, one of the top gainers, if not the top gainer on the Nifty 50 at this moment. It is in fact the top gainer, followed by Bharti Airtel, Infosys and Tech Mahindra. There you go. That's the list of the gainers on the Nifty 50. I didn't even have to take a breath. But let's talk about DLF, because there's a significant development that has come through with regard to the Supreme Court and what they've said. They've ordered a CBI probe into the DLF home buyer complaints, and we've got Nimit joining in to tell you about what the key details here are. Nimit, what are you picking up?
Yeah, so if you're a homeowner that's frustrated with the representations your developer has made about the home or the building that you have, then there's good news for you, because the Supreme Court has ordered a CBI probe into DLF home developers on allegations made by home buyers about various things, including no power, no running water. And this development comes as the Supreme Court notes that there's a huge mismatch between the legal requirements and what is allegedly happening on the ground. The Supreme Court has also noted that the representations made by DLF to prospective buyers at the time have not been fulfilled into reality. The Supreme Court also points a finger at regulators and the role of the regulators, which is to protect these home buyers. Now, the CBI Director Praveen Sood appeared in court and agreed to take up this matter. The CBI will now inquire and take evidence on what is going on. They will collect that evidence and present a report to the Supreme Court on April 25th. Now, the Supreme Court, while did not make a final opinion on the matter yet, has said that this should be the tip of the iceberg, the proverbial tip of the iceberg, and this is not just a one-off incident. And it looks like they're going to take action on how developers sort of treat these home buyers when they make the representations and they sell these products. Back to you.
Okay, so amongst other reasons why DLF is seeing some pain, although it's difficult to tell today why there is pain, because it's across the board a pretty dismal scene. We are trying to look for those slight silver linings with the advance decline ratio improving a little bit, but it's still
no unrelated stocks as well getting battered, and par for the course really. DLF, of course, losing about 3.3% and pretty much not too far away from the low point of the day. It has recovered about 1%, but in that scheme of things, it's not too much.
It's not at all. Insurance is another interesting sector. So not too much reaction to this today because larger issues have taken over. But there is a new proposal which will be implemented April 1st onwards. It's called IND-AS. Shall I just start by explaining to us what this proposal is and what it means for listed insurance companies?
Well, Tamanna, this is an important announcement coming in from RDI, and this was largely expected on the lines. This is the implementation of IND-AS. This is nothing but the IND accounting standards. This comes under the new IFRS or the accounting rules to make it in a very simple manner. The insurance will, of course, be submitting their old accounting and the new accounting, both of these statements for FY27 as well. Brokerages are bullish on both of them. Morgan Stanley has stated that this is a meaningful step taken in the right direction, and after this implementation takes place, the economic performance would be undertaken unlike the previous accounting, so there will be more clarity coming in, and this will also give a good comparability of Indian insurers with the global insurers, maybe on the valuation front as well. You can compare them. Jefferies, on the other hand, they have stated that this transition has come earlier than expected, and the likelihood of these delays may be as low as most insurers have already studied, actually have given up their gap studies for FY24 and FY25. So more or less the alignment is already there in the system, and the top picks here is Star Health and ICICI Lombard also. And interestingly, Tamanna, Star Health is near the day's high as well.
Star Health is near the day's high. Exactly, that's the point, because, you know, at this point, we need to start looking at stories that could really react positively once the overall fear ebbs, because that will happen, if not in a day or two. And which is why that's what we're trying to do on the closing show today, really find you some of those ideas. Thank you for that, Sharath. Kotak Securities, talking about ideas, Kotak Securities has added Swiggy to its model portfolio. That's why you're seeing that over 2.5% bump up. And they've retained a buy. They've cut the target price to 400 rupees versus 415 rupees earlier. They're saying they're aiming profitability improvement at the cost of growth in quick commerce. Most competitors are incurring large cash burns, which is not sustainable. Remains a high beta play. Might see significant benefits on account of industry consolidation. So at least that's a take there. Shivangi, Swiggy and Eternal, any of these that you're finding favorable on charts?
Yes, of course. With the festivities, we've seen that quick commerce space stocks have done really well. Talking about Swiggy, of course, we've seen a good amount of volumes building up over here. But then again, the monthly structure still remains quite dampened. We've seen that the stock has made lower top, lower bottom from the last 5 to 6 odd months. And of course, it is near the previous support zones, which it was respecting, in May 2025. But then again, we've seen that, this stock tends to, consolidate once it's lost the momentum. So we could, a little wait and watch over here. Of course, if we talk about Zomato, we've seen that there is a bit of more momentum here. But then overall, both these space stocks could wait a little. And if a preferred pick out of the two would be definitely Eternal here.
Okay, so that's the view on Swiggy and Eternal. There are still certain pockets or individual stocks that stand out even in this kind of a market. And pull up this counter called Jindal Drilling. It is a small cap, market capitalization of 1,700 odd crore or thereabouts. 1,734 in fact at last count. The stock is up 30% in 2 trading sessions, and this is something that benefits significantly with a higher crude oil price. So with crude oil at close to $83 per barrel and moving up from close to $67 per barrel just last week, this is a significant beneficiary. Improved activity could lead to higher offshore rig rates is what is playing out for this particular counter. What does it do? It operates 5 offshore jackup rigs for ONGC in India, and it also provides mud logging and directional drilling services. Its order book actually stands at 1,183 crore rupees, and it has guided for 350 crore worth of EBITDA in the current financial year. This is similar to the FY26 guidance. But bear in mind that the company is now net cash positive. 325 crore rupees compared with 111 crore rupees at the start of the year. So this is a company that is benefiting. The quick question to you, Shivangi, if you track this or if you can look at the chart, is this something that you would take money off the table on, or would you build into this?
Now, of course, we are in a market which is quite jittery at the moment, and we've seen that the stocks have been dampened a lot overall. But then if we look at stocks like, of course, Jindal Drilling, we've seen good momentum catching up from the last few sessions. Of course, today the price surge is quite high with over 15% volume price rise here. Overall, I would recommend that one could maintain a stop loss over here and trade, because
what's the stop loss, Shivangi?
We could look at around about 520 here.
Okay. 520 stop loss for Jindal Drilling. Thank you so much, Shivangi, for joining in today. We're just going to close off the markets on what has been a very worrisome Wednesday. For some reason, over the last couple of days, things have gotten even bleaker as far as the Middle East crisis is concerned. The Nifty closing 1.5% down or thereabouts, and this is actually slightly better than what was expected in the beginning of the day. You had at one point a 500-600 point knock on the Nifty. The advanced decline ratio is telling the entire picture, and you have definitely the bears firmly in charge today. But as we get to that closing rate, it's very clear that the Nifty is going to close with nearly 400 point knock coming in. Let's pull up the heat map very quickly. We'll go to the Nifty and then the broader markets to give you a sense of what that day has looked like. Tata Steel, biggest loser, 7% down. Tata Steel getting punished more than any other stock today. Tata Motors, PV, also seeing pain, but for more reasons than just the Middle East crisis. SBI Life, JSW Steel, some of the others that are in pain. Larsen and Toubro actually seeing a recovery from the lowest points of the day. Shriram Finance is the other one that we're looking at today. But on the winning side, Infosys standing out. IT stocks actually standing out as clear contrarian bets in today's market, as is Coal India. But the India VIX is what we should pull up for you, nearly 22% up on close. Let's just pull up the full chart of the India VIX and then we'll go to the broader markets as well. 22% up. This is continuously inching higher. You're seeing the fear in the street, and obviously you don't know what's happening. The latest coming in with Saudi Arabia saying that their refinery Ras Tanura has been attacked once again by Iran. So all of this pain is going to continue. The broader markets, I just want to take a look at the broader markets, please, and look at where the knock has been there. 2% down on the Nifty mid cap 150. The small cap 250 also showing a 2% knock today. The sectoral heat map will give you a sense that pretty much everything is in the red except for the Nifty IT. Will we see a recovery in metals tomorrow? I think will be the big question more than anything else. Last look at the BSE 500 gainers and losers before we wrap up the session for today and see if there were enough winners. Just the sugar stocks seem to have had a good day, 7.5% up on Sri Renuka. Balrampur Chini also doing okay. Polymed was fine, but the losing side is all of the gas companies, right? Gas and steel, Petronet LNG, MGL, Tata Steel, SAIL, all of them seeing a lot of pain today. Well, that's all the time we have on India Market Close. From Alex, me and the team that put the show together, thank you so much for watching, but stay tuned. Market Express up next.
Stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है,
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है? कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Watching Market Express with me, Shreyanti Singh, and this is the show that gets you all the headlines at this hour, the entire lowdown in terms of the action when it comes to stocks as well and even sectors. But before we do that, quick look at the markets then. Middle East war jitters were seen on Dalal Street even today as benchmarks extended their losses. Nifty, Sensex started the day with sharp cuts but managed to end the day with some recovery from day's low. When you talk about broader markets as well, you're looking at a deeper cut coming in amid heightened volatility as India VIX spiked to that 10-month high, and you're looking at that 21 level also coming in as far as the India VIX is also concerned. But with that in mind, let's also talk to you about sectors as well. Take a closer look at the sectoral picture because you do have Middle East war escalation that continues to impact the stocks, as metals and realty were really among the top laggards in the trading session today. When you talk about the IT sector, that was just one pocket of resilience today, aiding by the sentimental trade as rupee, of course, hit the record lows against the dollar. Let's also talk to you about this particular fall coming in as far as the Indian currency is also concerned. The rupee sunk to a new low today as the conflict in the Middle East showed no signs of ending, pulling money out of emerging markets. So you're talking about India very much being included in that list and into the safety of gold and US Treasury bonds. Now the INR, when you talk about it, it fell about 71 paise to hit a record low of 92.18 to the US dollar soon after trading opened as well. And the percentage decline, when you talk about that as well, that was the sharpest since January 21st. Let's also talk to you about oil and gold. First things first, let's take a look at oil because that is powering higher once again, riding a wave of geopolitical tensions as the Middle East braces for deeper turmoil at this point in time. Brent's rally has accelerated, fueled by fresh attacks across the region and a growing sense that supply routes are under real threat. Now, when you talk about the traffic through the Strait of Hormuz, that is very much in the spotlight, still choked. Traders are baking in a premium for risk, one that keeps widening as each new flashpoint also emerges and into this uncertainty largely. You do have Donald Trump stepping in, pledging US-backed insurance for vessels navigating Hormuz in a bid to keep the world's most vital energy artery open. And we'll talk about that in a bit, but concerns are far from easing when you talk about oil because you do have reports that Iraq has begun shutting output at the giant Rumaila field have only intensified fears of a tightening supply horizon, and that is something that you can be seeing very clearly being reflected in the prices as well. Let's also talk to you about gold as well because that's also on the front foot, in fact, recovering part of yesterday's pullback as dip buyers step back into a market that's anything but calm right now. Prices are climbing as much as about 2%. after snapping a 4-day winning streak, with traders carefully parsing through gold's elevated risk premium against a firmer dollar. Now, when you talk about this particular metal, it's rallied more than 20% this year, and this is despite that really sharp January rout that you had coming in, a sign that uncertainty remains the market's dominant theme. So volatility really is the name of the game, rising as much as about 2% in today's trading session thus far. With inflation risks bubbling and investors also guessing the Fed's next move, you do have bullion continuing to trade like the world's favorite insurance policy, if you can even call it that. And this is even if the premiums keep shifting. We'll keep getting you more details, but for now, front foot is what you're looking at when you talk about gold. And conflict in Middle East enters its 5th day. Now, the regional standoff between Iran, the US and Israel has entered a dangerous new phase, with Tehran launching hundreds of missiles and drones in a massive retaliatory strike targeting Israel and US assets. Now, the attack followed the killing of Iran's Supreme Leader Ayatollah Ali Khamenei, and an incident that Iran really blames on Israel. US and Israeli forces intercepted most incoming projectiles, but the scale of Iran's response has really raised fears at this point in time of a broader regional conflict that goes beyond some of those borders that we've been talking about. Washington has vowed to defend Israel, but also says that it does not seek a wider war at this point in time. Moreover, despite the killing of Supreme Leader and the heavy bombing of Iran, the Islamic Republic's leaders refused to immediately return to the negotiating table. Now, Iran's Revolutionary Guard Corps has claimed that at least 10 oil tankers were hit by missiles in the Strait of Hormuz. This comes as IRGC declares that Iran is now in complete control of the Strait of Hormuz, warning that any US move to intervene is going to be met with force. And the IRGC announcement comes hours after US President Donald Trump threatened to keep the waterway open and protect global oil shipments following escalating clashes between the US-Israel coalition and Iran. Now, Tehran, however, insists that no vessel can pass without its approval the strategic waterway through which nearly a fifth of the world's oil flows has, really become the epicenter of the confrontation right now, deepening fears of a wider regional war and major energy market disruption. Let's also talk to you about the vacuum when it comes to succession, and a key announcement at that. Mujtaba Khamenei, the 56-year-old son of Iran's slain Supreme Leader Ayatollah Ali Khamenei, has emerged as the leading contender to take over Iran's highest post. And this is according to a detailed report by the New York Times citing 3 Iranian officials. The report says that the assembly of experts met on Tuesday to deliberate on succession and described Mujtaba as the clear frontrunner. Though no final announcement has been made thus far, some clerics have voiced concerns that announcing his appointment too quickly could make him a target at this point in time, given the escalating hostilities with the United States and Israel. In fact, Mujtaba, long seen as a behind-the-scenes power broker with deep ties to the Revolutionary Guard, holds no public office, but his influence within Iran's ruling establishment has been significant for years. Moving on then, Iran's Foreign Minister Abbas Araghchi has issued a sharp rebuke to President Donald Trump, saying complex nuclear negotiations were treated like a real estate transaction, with big lies, creating unrealistic expectations that could never be met. In fact, he adds that the outcome of this approach was bombing the negotiation table out of spite, accusing Mr. Trump of betraying diplomacy and the Americans who elected him. Let's also move on, get you some more updates as well. The Ministry of External Affairs has established a dedicated control room to assist Indians amid the rapidly escalating crisis in West Asia. Now, New Delhi emphasizes that nearly 1 crore Indian citizens live and work in the region, and their safety remains its utmost priority as tensions rise following the widening Iran-US conflict. And the Indian embassy in Iran has moved hundreds of students out of Tehran to safer locations as a precaution. Now, the MEA in fact says that the control room will be operating from 9 a.m. to 9 p.m. offering multiple helplines to support those affected. Officials add that India is closely monitoring developments and remains in touch when it comes to regional partners to safeguard its citizens. Let's also get you some more details then. Authorities in Dubai say a limited fire near the US consulate has been fully contained after a drone-related incident. The Dubai media office in fact confirmed online that emergency teams responded immediately, extinguishing this particular blaze and also reporting no injuries. A US official told the Wall Street Journal that the drone struck the consulate's parking lot, though all personnel remained safe. Now, officials also reiterated that Dubai remains committed to public safety and security even as regional tensions continue to mount. Moving on, then, US President Donald Trump has announced sweeping measures to keep maritime trade moving through the Gulf after Iran effectively shut down traffic in the Strait of Hormuz, sending oil prices soaring more than 15%. Trump said that the US government will immediately offer political risk insurance through the Development Finance Corporation at what he called a very reasonable price, covering all maritime trade, especially energy shipments. Now, he's added that the US Navy is prepared to escort tankers through Hormuz if required, insisting that the United States will ensure the free flow of energy to global markets as well. And the Strait of Hormuz remains one of the world's most critical oil arteries, and that's something that we've been telling you because it's 20% of global crude flows that you're looking at when you talk about world's oil artery. Let's also move on and get you the word coming in from brokerages as well, especially when it comes to oil prices. Goldman Sachs has turned more bullish on crude. The bank has raised its second quarter 2026 average Brent forecast by about $10 to $76 a barrel and upped its WTI estimate as well by about $9 to $71. Now, Goldman says that the call is driven by expectations of significantly lower oil flows through the Strait of Hormuz, which could trigger large drawdowns when you talk about OECD inventories. The note also flags a likely drop in Middle East production in March, tightening the supply outlook and supporting prices further. Let's also talk to you about Saudi Aramco that is rerouting more crude exports to the Red Sea as the Strait of Hormuz remains effectively closed and vessels pile up in the Gulf. Now, the company has asked Asian customers if they can lift cargoes from Yanbu, tapping its 5 million barrel a day east to west pipeline to move oil across the kingdom. But the pipeline cannot handle all of Aramco's shipments, with Saudi Arabia exporting about 7.2 million barrels a day. The alternative route is not risk-free either, mind you, because you do have Houthi militants that have threatened renewed attacks in the Red Sea, prompting some major shippers to stay away at this point in time. Still, the shift gives Aramco a crucial workaround at this point in time as regional conflict continues to disrupt traditional export lanes. Let's also move on and talk to you about sugar prices that are on the boil, with global rates climbing to their highest level in a week on the back of rising tensions and a firmer crude market. Now, domestic prices are in line with global levels, making Indian sugar more attractive. When you talk about exports, higher crude also boosts profitability for ethanol, tightening supply further as Brazil also raises its ethanol mix. Now, with transport issues hitting South American exporters and India allowing fresh export quotas for the new season, that's also something that you're looking at as a very interesting development. Let's also talk to you about India's LPG supply that's facing fresh uncertainty as tensions rise near the Strait of Hormuz, the route that carries almost all of the country's LPG imports. India consumes about 31 million tons of LPG each year. And when you zoom in on the numbers, you're looking at a heavy reliance on overseas supplies, leaving limited storage cover of just a few weeks. With most cargoes coming through the Middle East, any disruption would really force India to quickly tap other exporters. So you're talking about the US making it to this list, Algeria and even Norway. But these shipments take longer, raising the risk of delays and tighter supply. Let's also talk to you about the Indian pharma space as well, that is coming under fresh pressure at this point in time as the war really pushes up transit and insurance costs. So it's quite the bitter pill coming in from for the entire pharma sector. Most exports moved through key sea and air routes that are now disrupted, causing long delays and forcing companies to reroute shipments. Exporters warn that March is a crucial month with freight schedules also unpredictable, supply chains tightening. Now, industry groups also say that the hit is short-term, but cost escalation is already squeezing margins and slowing the movement of critical drugs. Let's also talk to you about war clouds that are casting a shadow on India's medical tourism industry. While we're at it, because you do have hospitals, the likes of Apollo, Fortis, Max, that are now bracing for a slowdown at this point in time. Now, patient inflow from the Middle East, a key source for their international business, is slipping because of the conflict. And analysts also say that revenues could take a hit even as the government pushes harder to support the sector with India's competitive healthcare costs and new measures under the Heal in India initiative. Hospitals are hoping that the situation really stabilizes soon and foreign patients return. Let's also talk to you about one particular stock that was under pressure for much of today, ended the day also with a cut of about 4.5%. That's L&T that I'm talking about. The stock slid for several sessions as worries grow over its deep exposure to Middle East. When you talk about the region, it makes up a large share of its order book, especially in hydrocarbons, power and big infrastructure projects. Now, any disruption to workers, materials or shipping routes could delay execution and push up freight and insurance costs, with tensions also rising in key sea lanes. At risk, L&T faces mounting logistical and cost challenges across its biggest international market. Let's also talk to you about what the brokerages are saying about this one, because brokerages are flagging fresh risks when you talk about this particular counter as the Gulf conflict deepens. So when you talk about the word coming in from Macquarie, they're maintaining an outperform rating, warning that any damage to the company's big infrastructure and hydrocarbon sites or even evacuation of workers could really slow execution and squeeze margins at this point in time. Now, when you add to that list in terms of brokerages, you do have MK, which retains its buy call, also sees delays when you talk about new orders and expects a hit to the company's FY26 inflows. Now, both of these brokerages interestingly say that geopolitical uncertainty is now key overhang on the company's otherwise strong project pipeline. Let's also talk to you about Jindal Drilling that is on a strong run, jumping nearly 30% in just 2 sessions, and look at that 15.5% gain also coming in today's trading session. Now, this move comes as the Brent crude holds steady near $83 thereabout, lifting sentiment for oil service players. Higher crude prices usually boost drilling activity and also support better offshore rig rates as well. When you talk about this particular company, you're talking about one of India's leading offshore contractors that is operating multiple rigs for ONGC and is refurbishing another in the UAE. Now, with steady cash flows and ongoing upgrades, the company is positioning for stronger demand going forward. Let's also talk to you about Tata Motors that has issued a clear clarification saying that its large order from Indonesia for 70,000 vehicles is fully on track. Now, the company denies any impact from recent reports suggesting that the country may restrict imports, calling them part of Indonesia's internal policy debate. When you talk about the statement coming in from the company, they're also saying that the order remains unchanged and that vehicle supplies will begin soon in a phased manner. Now, the company also is maintaining that there is no disruption when it comes to their Indonesia plans, and that's the key headline that you're picking up here. Let's also talk to you about Mahindra & Mahindra that has denied reports suggesting Indonesia may halt vehicle imports, saying that its 35,000 unit export order also remains completely intact. The company says that it has received no communication from authorities about any suspension and calls the recent stock move purely market-driven. When you talk about this particular company, they're maintaining that its export commitments stand as planned and that its Indonesia business is also facing no disruption at this stage. Let's also talk to you about Indigo, where you're seeing actually a triple whammy coming in, facing fresh turbulence as air traffic dips and hundreds of flights get cancelled over the past few days. Now, the airline is taking a hit on both revenue and fixed costs, with a large part of its international capacity exposed to the Middle East. Now, the conflict has really pushed up crude prices, so that's something that's adding on to mounting pressure at a time when fuel already makes up a big share of airline costs. With crude also climbing and routes disrupted, you do have Indigo's daily financial impact that is set to rise if the situation drags on. Let's also move on and talk to you about the word coming in from brokerages. Jeffrey says that India's general insurance sector is moving closer to adopting Indus, which is an accounting shift that the market has been waiting on for years at this point in time. With most insurers already submitting the required financials, the brokerage believes that delays are now unlikely. Under the new rules, in fact, mature insurers could show a sharp rise when you talk about the reported profits as acquisition costs get pushed forward. Now, when you read into the fine print when it comes to this particular note, they're also talking about how this doesn't change cash flows, but higher reported earnings could still lift valuations. Now, when you talk about the top sectoral picks, something like a Star Health makes it to that list, and so does an ICICI Lombard. Let's also talk to you about some other updates pouring in right now. The Supreme Court has taken a tough stance when it comes to complaints against DLF, ordering a CBI probe after flagging what it calls a huge gap between promises made to home buyers and what is delivered on the ground. Now, the bench questioned really whether regulators are truly protecting consumers and warned that this case could be just the tip of the iceberg. Now, the CBI director appeared before the court and agreed to carry out an independent inquiry, with a status report also due in the month of April under the court's oversight. Let's also move on to some business news. Then PNG's Rewa Diamond Jewelry made a weak debut on the Lal Street today, listing at a nearly 4% discount to its IPO price amid subdued market sentiment. Now, when you talk about the opening of the stock, it was around 372 rupees on the BSE, that is about 3.6% below the issue price, and at 375 rupees on the NSE, which is a 2.8% discount versus the issue price. When you talk about the 380 crore IPO that saw tepid demand coming in, subscribing just about 1.23 times, with QIB interest also modest at somewhere close to 1.04 times, retail at 1.29 times. Market watchers say that the muted debut aligns with the broader slump when you talk about primary market enthusiasm, with 5 of the 7 IPOs listed this year opening below their offer price. Now, the company plans to use the proceeds to open 15 new stores by financial year 28, scale marketing for its Rewa brand, and also fund general corporate needs. On to some national news then. The government has said that Indian Airlines will operate 58 flights to the Middle East today as carriers work to stabilize operations disrupted by the escalating conflict in the region. According to the Civil Aviation Ministry, in fact, 24 flights were already operated by Indian carriers in the past 24 hours, while Emirates and Etihad together flew 9 services from Gulf airports. Now, the ministry has also added that airlines are making calibrated adjustments to schedules using alternative routings to avoid restricted airspace and gradually resuming long-haul operations. Authorities are also monitoring airfares to prevent any sudden spike at this point in time as thousands of passengers remain stranded. On to some international news and updates. Then Donald Trump has denied claims that Israel forced the US to launch strikes on Iran, contradicting his Secretary of State as well, Marco Rubio's statement, who said that Washington only acted after learning that ally Israel was going to strike. The US president, in fact, justified the attack, saying that Iran was going to attack first and that it was he who might have forced Israel's hand to attack Tehran. On to more news and updates before we wrap up. Thousands of people gathered at the historic Kalupur Swaminarayan temple to celebrate the annual Phul Dotsav festival during the holy holidays. Now, the event really turned the temple grounds into a sea of color as a lead monk also sprayed herbal water and flower petals over the massive crowd, as you can see on your screens, from a decorated stage. Attendees danced to music and cheered in a high-energy atmosphere, marking one of the city's largest public celebrations of the 2026 spring season. From myself and the rest of the team that put this show together here at NDTV Profit, wishing everyone a very happy and colourful Holi. And with that, like I said, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
The stage that brings together India's most compelling creative voices,
NDTV का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है? कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Iran's Coastal Guard Corps says Iran is in complete control of Strait of Hormuz. Reports say over 10 oil tankers have been hit after ignoring Iran's warning that the Strait of Hormuz is now a war zone. Foreign Affairs Minister says US bombing Iran out of spite. Iran names Ayatollah Ali Khamenei's son, Mojtaba, as his successor. Israel threatens that Iran's next supreme leader is also a target for elimination. Market ends in the red even as the Nifty recovered from its lows to end below 24,500. Benchmarks logged longest losing streak in 2 months as Iran crisis deepens. Broader indices underperform. Kospi plunges over 12% intraday on the back of Middle East geopolitical turmoil. South Korean stocks registered a sharpest 2-day decline since the 2008 financial crisis. 390 trillion won in market value wiped out in a single session. President Trump promises Americans that the oil prices will drop after the Iran conflict ends, says they will drop lower than ever before. Qatar's LNG plant closure to impact India's gas stocks as India imports 50% of its LNG consumption, of which 60% comes from Qatar and UAE. Aviation sector expects a washout quarter yet again on the back of mass flight cancellations since the 1st of March. Indigo's air traffic data shows 0.3% fall in domestic air traffic, while international air traffic drops by 0.7% in the month of February. Middle East war hits India's medical tourism. Major hospitals may see a revenue hit. Indian Pharma also under heat as exporters face Middle East disruptions amid tariff burden. Hello and welcome viewers. This is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you all the latest updates on markets, national as well as international news. Let's start with focusing on what's happening in the Middle East. The conflict in the Middle East has entered its 5th day. Iranian missiles and drones continue to hit locations around the Gulf. Ships have been attacked in the Strait of Hormuz. Iran has in fact declared the Strait of Hormuz a war zone. And while the US has knocked out most of Iran's senior leadership, former Supreme Leader Ayatollah Ali Khamenei's son Mojtaba has been elected to succeed him. The news draws more attention because it is only yesterday that Israel's defense minister threatened to eliminate whosoever becomes Iran's next supreme leader. In the interim, US Secretary of State Marco Rubio has justified the attack on Iran, saying that Iran is run by religious fanatics, lunatics, and said that the world will be safe if Iran's clerics no longer have access to weapons. In return, Syed Abbas Araghchi, Minister of Foreign Affairs of Iran, took to social media X to say that Iran is bombing the negotiation table out of spite. We have that tweet for you. His exact words were, "When complex nuclear negotiations are treated like a real estate transaction, and when big lies cloud realities, unrealistic expectations can never be met." So diplomacy is clearly not working right now. What has India done so far? Ministry of External Affairs has set up a special control room that can be contacted from 9 a.m. to 9 p.m. And the Ministry of Civil Aviation is continuously monitoring the evolving airspace situation. But most importantly, the war is spreading its heat. Kuwait Army has issued a statement on detecting and intercepting several aerial targets. Saudi Arabia has intercepted and destroyed 2 cruise missiles. French President Emmanuel Macron has ordered France's nuclear-powered aircraft carrier to move from the Baltic Sea. So a lot's happening, and it's happening at a fast pace. Let's go across to my colleague Aditya Rajkol now for the latest details from Jerusalem.
It was always expected that Iran was preparing for this day. Even when the 12-day war happened between Iran and Israel, Iran had a huge stockpile of weapons, ammunition, and missiles in their kitty. This time around as well, perhaps Iran at a certain point expected that US will intervene in this. There will be a joint US-Israel, kind of a operation against Iran. And they had thousands and thousands of missiles, including long-range missiles, cruise missiles, and ballistic missiles that are prepared already. So what the US and Israel are currently doing, they're trying to dismantle first the air defense system of Iran, and second, the entire potential capacity of all those batteries that are lined up in several launch pads across Iran right now. So all the launch pad areas are being slowly targeted so that Iran is decapacitated of the entire potential of attacking Israel or surrounding countries wherever the US bases are currently. But even though, we're talking about Strait of Hormuz, which is completely Strait of Hormuz, which is currently blockaded apparently, there's also flight connectivity that is disrupted majorly. Ben Gurion Airport here in Tel Aviv is completely shut. They will be, briefly opening it tonight so that the incoming Israelis, more than 1 lakh who are stranded outside, can get back to their country. Outflowing traffic may not be allowed till now. Dubai, Abu Dhabi, and Doha are also slowly, opening up to the global traffic right now, but not a permanent normalcy restored. So it will take some time for entire normalcy to be restored because, as you know, US embassies and US consulates in Dubai and several other locations, including Kuwait, have been attacked in the last 24 to 48 hours. So the situation remains grim. It's very critical and fluid right now. We'll have to monitor developments very, very closely, even as NDTV continues to report from ground here in Tel Aviv.
Right, thanks so much for that, Aditya. And viewers, we are now being joined by Gopal Krishna, former shipping secretary, to give his views on what's happening and what should be done, perhaps. So, first question to you, if you are with me now, if I can see him. Yes, exports now face rerouting through the Cape of Good Hope, adding 15 to 20 days to transit times. How should Indian exporters recalibrate their logistics to stay competitive amid these delays?
As you rightly say that now routing shipping lines in the Middle East are closed, essentially because of the war situation. And insurance covers have been now withdrawn by Lloyds and all the reinsurers, insurers. So it's not practically impossible to use that routes. The costing is less important in international shipping. What is more important is the availability, market supply, demand meeting up. There are lesser number of both container ships and tankers on the Cape of Good Hope route, and therefore the freight rates are rising. I will not go into the rise of the crude prices, that is automatic. But the logistic costs are also rising because of lesser availability of tankers and container ships around the Cape of Good Hope. So there is no other alternative but for Indian exporters to reroute the goods, renegotiate prices, align them with the current, situation, and if possible, wait for perishables will have huge problem. See, while you can reroute exports through the Cape of Good Hope for Europe and America bound exports and imports. But what about huge amount of exports that we do to Middle East itself? We export large quantities of perishable goods to the Middle East. Onions, fruits, vegetables, basmati, rice. Now that is going to take a hit. So there, I think so. The best thing would be there are a lot of containers which are totally stuck up in the Indian ports itself. So exporters, importers will have to recalibrate their strategy, selling strategy, maybe, offload a lot of, those goods back into the Indian market or search for new markets. That's the only alternative. Cost would be high. We'll have to take care of that. Government has also formed a committee which will look into all these aspects, especially the MSME sector. MSME sector, the small exporters, small importers would be affected much more than the larger exporters. And here again, I will come to perishable goods. They're all exports done by small companies, small, groups in and around, say, Maharashtra and nearby states. So government has already formed a committee. And I think so government will look into the entire aspect of how government can come and help out the SME sector, which would be the most hit by these events.
Okay, so perishable goods and support for the MSME sector. Mr.
Yes.
Krishna, with major lines like CMA, CGM and Maersk suspending Suez transits, what role can India or Indian ports like Mundra or Navasheva play to mitigate these disruptions? Do we have any strategic advantage with our location?
Frankly, there isn't we had a strategic advantage vis-a-vis the Middle East routes, the East-West route. But there is no specific advantage with the Cape of Good Hope route. It has to be taken, a longer route has to be taken. It will take extra time. It will involve day by day we are finding that the freight rates are increasing, and therefore that hit will happen. But good thing is that the effect is very much limited to some goods. All goods are not affected. Goods that we directly import from the Middle East, and I will take out the oil aspect of it, crude oil and the petroleum products. Gas would get affected. But crude oil and petroleum products, India has got a reserve of close to 2 months. And this is without taking into account the strategic reserves. Our strategic reserves are also of about 55 days. So both put together, we can very well sustain the situation for the next 5-6 months, which is a pretty long time. And we all hope that hostilities and this war-like situation would be resolved in the next 1 month, 6 weeks, 2 months at the most.
Of course,
Gas,
the hope would be
certainly we have to find out new markets for
Mr.
gas.
Krishna, the hope definitely would be that the buffer for 6 months is enough. But to what extent could operations at strategic assets like the Chabahar port be jeopardized, and what diplomatic or logistical backstops should India prepare for in the interim?
So, see, Chabahar port was affected for quite a long time because it was sanctions were already there. Talks were on with the US government to lift that sanctions. India, anyhow, it was not using Chabahar port to the full use. We were still not using that route for the for the Central Asia countries. That Chabahar port was largely used for Afghanistan. So that route is certainly closed. There is no doubt about it. We will have to wait because, see, it is country independent. Whatever regime comes in Iran, India can again renegotiate and again start Chabahar operations. After all, the negotiations were not with a particular government. It was with the state. It was a state-to-state relationship. So we will have to see how the situation evolves over the next 6 weeks, 8 weeks. We can again talk to the new government, And again, the hope is if everything becomes normal, sanctions are also lifted, then Chabahar would actually play a much more meaningful role than it was playing in a regime, in a situation where there were sanctions on it. We were not able to actually eat. I know we started the purchase of machinery, the cranes, another machinery for Chabahar from 19, but after 3-4 years, we could not install all the cranes because of the sanctions. And it took a lot of time. So we hope that situation would be such that the operations would be absolutely normal, as if we are doing operations in any other port worldwide.
All right. So I see that Chabahar port is more important and can also increase its importance, perhaps if the situation were to improve and sanctions were to completely come off. But Mr. Krishna, what contingency frameworks should India adopt if Iran follows through on its repeated threat to close the Strait of Hormuz, through which India, of course, passes and takes a lot of oil? About 2/3 of our consumption is dependent on that strait. So if there were to be a further blockade or an official blockade in the coming months, how could it affect India? And also, more than the effect, what should our contingency plan be?
Yeah, so Malika, you know that it's been now 2.5, 3 months that Venezuelan oil has opened up for India, and India has already started getting Venezuelan oil. We already have a deal with USA to take US gas and US oil. So our contingency plans are, I think so, were already in place for the last 2-3 months. With substantial increase in Venezuelan oil. Last month, if you see the month of February, our imports from Russia were the highest, the second highest from Saudi Arabia. So if you see, our basket of oil imports is still pretty well diversified. We are importing from Southern America, we are importing from Russia. Yes, the Middle East will take a hit because Iraq, Iran, all these countries will not be able to supply oil, but we'll have to manage with our strategic reserves and wait for the situation to turn normal.
Okay.
Because oil is not a commodity which is available everywhere. So we have to perforce bank on USA, Venezuela, and Russia.
Right. Thank you, Mr. Krishna, for getting us your views on this important matter. And as you said, we will have to wait and see how the situation unfolds. Until then, perhaps depend on our strategic reserves. Thank you.
Thank you very much. Wish the viewers a very colorful and happy Holi.
We wish you the same, sir. Thank you so much for joining. And viewers, that was former Shipping Secretary Gopal Krishna. Amid the ongoing tensions in the Middle East, Indian shipping companies are facing a huge problem with their shipments. We also spoke to Anil Devli, CEO of Indian National Ship Owners Association, who said that due to this freight rates are in fact expected to jump by over 3 times. Let's listen into his comments.
The insurance, incidentally, I must clarify here for your information, is the insurance has not been taken away. What happens is that the insurance companies, because a war-like situation develops, they come back and say, now within this area, whatever standard insurance you have is now not valid, and you need an additional war risk premium. So starting today, the war risk premium would apply to ships which are going to be in that region, and the cost is dramatically going to increase. At this stage, our vessels freight rates are fixed, at least all of these vessels which I mentioned, this 37 ships. So those freight rates will not change, but any new contracts that start from tomorrow or day after, those will see higher freight charges being levied. Very difficult to give you a figure, but from going by generalities, I think you can take it that freight rates will go up at least 3 times, if not less. For example, on the container side, CMA, CGM, etc., have already announced a surcharge of about $3,500 on a 20-foot box, for example. So that's really 3-4 times, going up to 4 times the freight rate.
And Viewers, let's now look at how the Indian markets fared today. Markets ended sharply lower today amid global worries over the widening Middle East conflict and rising oil prices. The Nifty 50 closed in the red, down over 1.6% and well below the 24,500 mark. Tata Steel and Tata Motors were the top losers in Nifty 50, both plunging over 5%. Broader markets underperformed the benchmark, with Nifty Small Cap 250 and the Mid Cap 150 both falling over 2%. All Nifty sectors, in fact, ended in the red, barring Nifty IT, where Persistent and Infosys gained almost over 1%. Let's go across to my colleague Jasmeet now for a detailed market roundup.
Well, Nifty ends in red today, down about 1.6% in today's trade, and Nifty 50 ends below the 24,500 mark. While Tata Steel and Tata Motors are the top losers in Nifty 50, down about 5%. While broader market underperforms the benchmark in today's trade, if we look at Nifty Small Cap 250 and Nifty Mid Cap 150, both end in red, down about 2%. In terms of the Mid Cap 150, we do see Petronet, LPG, LNG and upper industries are the top losers in Nifty Mid Cap 150. In terms of Small Cap 250, we do see that overall Force Motors and MGL are the top losers in Nifty Small Cap 250. If we look at all the sectors, they end in red, barring Nifty IT. Nifty IT was the only sector in green on the back of that rupee-dollar weakness. In terms of the other key aspect, we do see that Persistent and Infosys are the top gainers in Nifty IT, both about 1%. If we look at the top sectoral loser, we do see Nifty Metals and Nifty Realty as a top sectoral loser in today's trade. While SAIL and Tata Steel are the top losers in Nifty Metal, down about 6.5%, while Lodha and Anant Raj are the top losers in Nifty Realty. In terms of the lastly other matters, Lodha was down about 6%, followed by Anant Raj down about 4%. Talking about the key trends, we do see that Nifty Realty ends in red for the third consecutive day in a row.
Right, Jasmeet, thanks so much for that roundup of Indian markets. But viewers, Asian markets are plunging furthermore as worries over the widening war with Iran spreads fast. This morning, South Korea's Kospi benchmark dropped sharply, tanking as much as 12% today, marking one of its worst single-day fall ever. The collapse follows a 7.2% drop from the previous day. Kospi also registered its sharpest two-day decline for South Korean stocks since the 2008 financial crisis. The index went from all-time highs above 6,300 to free fall below 5,300 in 2 trading days. Kosdaq, which is the broader market index, also fell 13%. Meanwhile, the South Korean market wiped out 390 trillion won in market value in a single session. This fall was on the back of geopolitical turmoil in the Middle East and energy supply fears as South Korea is the world's 4th largest oil importer. And as air travel continues to adjust to the turbulence in the Middle East, Indian carriers are rolling out fresh changes to keep passengers moving. Akasa Air is reinstating select flights to and from the Middle East, starting with a special service from Abu Dhabi to Mumbai today at 4:30 p.m. local time. The airline says the flight is meant to support the safe return of passengers and crew impacted by the ongoing disruption. Services to Doha, Kuwait and Riyadh, however, will remain suspended until the 5th of March. Meanwhile, Air India is ramping up international capacity, adding 3 extra Delhi-Toronto flights between March 5th and 11th, 3 additional Delhi-Frankfurt flights from March 7th to 10th, and 1 extra Delhi-Paris service. The broader aviation sector continues to navigate heavy cancellations, with Indian carriers calling off more than 500 Middle East flights until March 3rd. Indigo alone cancelled 140 flights today, while 21 SpiceJet flights were grounded. To aid stranded passengers, airlines including Indigo, Air India Express and SpiceJet are planning over 58 repatriation flights on March 4th, subject to available airspace. Viewers, the ongoing Israel-Iran conflict is beginning to weigh on India's medical tourism pipeline as well. Major hospitals with meaningful exposure to Middle Eastern patients could see a dip in international revenues, but could government initiatives support a recovery? Well, my colleague Rithima joins us with this report for the answer.
So major hospitals could see a hit in the revenue after the Middle East conflict. Now currently the international patients contributes roughly around 8 to 9% to the total revenue of these major hospitals. These major hospitals include Apollo, Fortis and Max Healthcare. And the Middle East segment contributes roughly around 30% as per the analysts. And when we talk about the smaller hospitals, they contribute 1 to 2% comes from the Middle East segment. Now remember that India is quite affordable when it comes to healthcare services, and a lot of international patients prefer India due to the low cost of healthcare services provided in India. And the government is also trying to improve the medical tourism. It has done so with initiatives like Healed in India and also fast-track visas for international patients from over 165 countries. And right now there are travel and safety disruptions, due to which there is a temporary setback which is being seen, and it is likely to resume post the conflict gets over.
Well, thanks so much for that, Rithima. But viewers, it's not just hospitality, but also the pharma sector that has been feeling the heat of this war. War-driven disruptions and rising transit costs are set to hit Indian pharma exports just as the industry enters a crucial shipping month. Freight, insurance and rerouting costs are spiking, and US-bound consignments are already facing delays. My colleague Nimit Dixit has the full report on this matter as well.
Indian pharmaceutical companies continue to face blow. Even as they're reeling now from the Trump tariffs, an additional charge is going to be put on all exports from India owing to the escalating Middle Eastern crisis. Freight charges, insurance premiums, and reroute transit costs are all going up owing to the closure of the Hormuz Strait, even as the Iranian government now says that they have control over the entire strait. And this comes, some senior sources say, in the most crucial month of March, where sales targets and pressure is at a high, and most companies are looking to close those accounts. What we have to understand is 65% of India's pharmaceutical export is done by sea. This is primarily done through the Strait of Hormuz route. Now, the reroute cost itself is going to increase that transport time through the Cape of Good Hope by 15 to 20 days. That means additional cost, additional freight charges, and of course, a renegotiated risk premium. The remaining is done through air. A lot of this is controlled substances, which are drugs which need to be carried under particular requirements such as temperature. These are done by air. Now, a very senior person at one of these companies says that these companies are now scrambling to find alternative routes to Dubai, which was a major transit hub for them all this while. But the bigger problem is that these controlled substances require permits, and these permits have to provide the route that is being taken. So if you have to reroute, you have to reapply for the permit with the government, which is going to take its own time. Now, in terms of impact, the Indian Drug Manufacturers Association says that this is going in the short term to impact escalation costs, of course, but it's also going to affect shipping schedules because of the uncertain nature of the way shipping is happening through the Hormuz Strait and how much shipping has to be rerouted now through the Cape of Good Hope. It is important to understand here that India exported 30 billion worth of pharmaceutical products last year, 60% of that going to the EU and the US markets, 10 billion to the US alone, 1 billion, of course, to the Middle East. What this means is there's going to be a large cost addition, some experts say to the tune of 20% on pharmaceutical exporters. Lastly, it's also important to note that the government and these industry bodies over pharmaceuticals are looking at the situation closely. They're in a wait and watch mode, but sources say it is likely that they will meet in the near future to determine how best they can cushion the pressure that these pharmaceutical companies are facing.
And viewers, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates. This is Malika Mishra. Thanks so much for watching.
Stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है,
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है? कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं.
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and this is one of the most loved KYC shows as I get you interesting companies which can be newly listed or maybe something which the street is talking about. But I'm not going to give you very easily. I'm going to give you some hints. Try to guess it. What's the company which we'll be talking about in KYC? The first one is it's a manufacturer of renewable energy products. First hint I've given you. Let's talk about the second hint. Surya Kumar Yadav is the first brand ambassador. Of course, the company is having a couple of more brand ambassadors, and that includes Anil Kapoor as well. That's Jackass. But let's talk about one more hint, and that is it's listed recently on November 20, 2025. But has that company given money to the investors in the IPO? Well, I don't think so. It's down 22% from the IPO price. And of course, we had given you in the socials also some images which you could have decided what this company is all about. There are a couple of brands to it, but the company in focus is Fujama Power Systems, and of course they have another brand called UTL Solar also. So दोनों brand में आप confuse मत होइएगा. But why are we getting this company? This was recently listed. Why is the company coming? Is it different from the solar theme pack? Because solar theme pack seems to be out of favor of the market. The global freight price that is rising. Now, will this procurement price from China rise because of that? That is the first question I would like to ask. The second one is the subsidy-based business. Has the order slowed down? Remember that B2G risk is always there for a company in the solar industry, or is the company hedging for its B2C business? These are the questions we will be asking Fujama Power. Interesting number is the 18.7% Q3 margins coming in. Is this sustainable? If yes, ये क्या backward integration का जादू है? That's the question we'll be asking. And the capacity expansion plans, capex and the distribution, are they playing in the tier 2, tier 3 cities? All our viewers in Indore, you could say in Punjab, in Jaisalmer, whoever are there in tier 2, tier 3 cities, are you seeing the products near your houses or your neighbors? That's something to ask about. And the progress on the ramp up of the Dadri line. These are the extension I'm talking about, the new manufacturing facilities which start coming up. So these are the key questions we will be asking Fujama Power. Of course, there's a lot of interest on it. A lot of you have written to me about it, but let's take it slowly. Of course, any fundraise plans, if it comes in, because promoters have a good stake, maybe they can dilute going ahead. But to give in all the details, we'll have Pawan Garg, the founder and joint MD of Fujama Power. He'll be on the show. He'll be clearing most of our doubts on all the questions we have raised. But let's talk about the company, how important the company is all about. Is it different or is it just the same? Let's go into this layer by layer. It's an Indian solar solutions company. It was established in the year 1996. So it's not a new company. 30 years already in the industry, has 4 existing facilities and 1 extra facility I spoke about. That was the Dadri facility which we are talking about. And yes, new facility is coming from Ratlam. It's in Madhya Pradesh as well. Also, apart from this, let's look at the total coverage, and that is what something which has taken my eyes, especially the 6,300 dealers, and they are focusing on tier 2 and tier 3 cities. That is where the magic might lie for this company. They are not targeting tier 1 so much or the exports. So this is where the story of Bharat might play out. 90% revenue comes from the B2C segment. That is pretty much decent because a little bit of pricing power can definitely come in here, but overall the industry overcapacity is there. The key focus, of course, I've spoken about it. This is where the focus lies on. And one more thing they have written is off-grid. Off-grid means non-subsidy. Non-subsidy means payment का जो issue है, that can be sorted because ये government से नहीं आ रहा है. But what are the key products to look at? There is solar power generation. This is one of the key first projects which have come in. Then there is solar cells, there is power supply and lithium-ion batteries also. So the entire ecosystem comes in. Of course, these are the new ones. I'm talking about around 1.5 gigawatt manufacturing capacity is there in power electronics and batteries. But look at kya extension hai, that's around 2 gigawatt. That means let's add it up to make it simplified for you. Totally it's 3.5 gigawatt. That's what the company is targeting. Capacity levels की तो बात हो गई. But क्या target है? This is very much important. And they are establishing the south and east. ये north की player जो है, if you see in your houses, near your houses, this is where the brand comes in. But south and east, these are the new areas. And remember, east has a lot of tier 2, tier 3, tier 4 cities and towns. But why is the market not giving so much premium to the solar theme? The first is higher priced IPOs, mispricing at times, and that's what the retail complains. The second one is the excess dependence on China for procurement. That has been a big question mark for all the solar players, and now they are focusing on their backward integration. The international raw material pricing, that has turned very volatile, and especially the uncertain tariffs which comes in, especially from US, that's where a concern comes. But all in all, if you are in solar industry, there is a B2G, business to government risk, and particularly on the payments and the order flow. Kab payment aayega, kab order aayega, there is always a lumpiness in it. And that's the business nature of it. The global overcapacity at times and the reduced pricing power, that is where the solar theme becomes a question mark for investors. But to remove that question mark, I'm going to get into my KYC show and I'm going to give you 8 parameters where we'll judge the company and we'll try to figure out isme naya kya hai. First one is income statement, balance sheet, cash flow. These are the 3 holy grail of numbers which we have to talk about. Return ratios, how much the ROC numbers, ROE numbers have come in. Looking at shareholding, remember, this is a newly listed company, तो कोई बड़ा trend आपको नहीं मिलने वाला. You'll just get something which is there in the December quarter. Street cred, only IPO तक के details और अभी तक. And valuations, we'll compare with them a lot of companies which we have discussed all across on social media and on TV as well. And outlook, industry क्या कहता है, company क्या कहता है. These are the 8 rating parameters where we'll talk about it. But let's talk about the first one, income statement. It's one of the most important statement to look at. Revenue, EBITDA, profit. These 3 are there. You can look at it. Over here, the 3-year CAGR, all of them going past the 40% mark. This is something you should be looking at as a long-term fundamental investor. And overall, it looks very strong numbers. But abhi numbers kya hai? Third quarter, let's pull out the numbers and see what has happened here. And has the company performed or not? The Q3 numbers have been on the stronger side, and I had mentioned you about that 18.7% margin. So keep that in mind. And this overall income statement, I will give a strong thumbs up. Let's talk about the balance sheet, and balance sheet is where my concern starts coming in because it's an asset heavy business. Company backward integration कर रही है तो debt बढ़ रहा है, and this is coming after the IPO. That's where the question comes. It's around 346 crore that's coming for FY25. Has that reduced a bit? We'll ask that. Management is roughly